or old syllabus, because this is going to be the first attempt for new syllabus, correct? And old syllabus also could be there. So that's why I gave you in that Google Drive itself an index mapping for old syllabus versus new syllabus. What are all the topics which are common and which are additional for new syllabus and which are there for old syllabus, okay? But if you see, 80% to 85% of the portion will be common for both new syllabus as well as old syllabus, no change. Okay, I am seeing both the study materials and I am telling, because old study material already I have seen and new study material also. So this is the new study material for syllabus 2022. So even I have gone through detailed full study material, and from there only for CMA final, so I have just given the index mapping. So this index mapping will help you to know what are all the modules. For example, because as there will be mixed students writing both old syllabus and new syllabus, so I have done my material like new syllabus module wise, module 1, module 2, module 3, like that. Now you need to cross check with respect to the old syllabus, you know, what is the study notes, etc. Okay. So therefore, this particular index will guide you, okay? And here there are some topics which are there in old syllabus but not in new syllabus, okay? Like that also I have highlighted. Classification of goods, reading the rate schedule, then registration under GST, tax invoice, credit and debit note, payment of tax, then audit, GST compensation cess, replying to department notice, then customs basics and all is there only for old syllabus but not for new syllabus. Because you know what has happened is that new syllabus is coined in such a way that a student anyhow will be studying intermediate, CMA intermediate, so that's why basics are not given, and then thereafter these administrative and other aspects, search, seizure, confiscation, comprehensive issues under customs. So these are the highlighted portions are there na, in that yellow color. So that areas are applicable for old syllabus, but remaining and all is applicable for new as well as old. And exclusively for new syllabus, only 2 topics are there. Only for new syllabus, 2 topics are only there. Apart from this old syllabus to new syllabus, that is this trade facilitation measures and SEZ scheme. So these 2 are only new chapters. So, but this trade facilitation measures, it's like lot of theory only, full theory only we have, and SEZ scheme little interesting one. So we have that SEZ. So I am just presuming that as this is the first attempt for new syllabus, so they will be checking on to SEZ scheme, okay. But otherwise these are all actually minor areas. So now I just wanted to know from you, how many of you are appearing for new syllabus and how many of you are for old syllabus? First new syllabus, tell me. Okay, so you are writing for new syllabus, super. And online students also, okay, fine. And remaining are for old syllabus, fine. So again I am repeating, if you want to get this access of this notes and all, so just check your mail where you have registered. So in that mail we have shared the notes. So you can click on that Google Drive link and you can see the PDF of the notes. And suppose if you have not registered, so there will be one Google form in the YouTube video description. You can fill that Google form so that you will be added to this access to the notes. Then if you have any queries further related to hard copy of the books, etc., you can contact our admin in the ground floor. Okay, fine. Now I have seen one like what are all the papers. See, I may not be taking classes for CMA final, but it does not mean I am not seeing the question papers and all. I have been in touch with the question papers, because usually CA final exams and CMA final exams questions will be looted here and there. So lot of CMA final questions will be taken from CA materials only. And CMA Institute, if they coin anything newly, that CMA, like CMA Institute will put lot of effort and do that. CA Institute will take that and they will give it in their RTP, MTP. So this sharing will always be there. Like how Toyota and Maruti Suzuki, so design is same, but brand name is only different. Like that, it will be there. So that's why rest assured, I have seen your question papers and all, and this is one such thing wherein I have come across one question paper of yours. So mock test paper, already I have answered one mock test paper. So in that mock test paper, I will just show you that mock test paper also. So question paper pattern is like mixed. Theory questions are being asked more in number than like usually indirect tax means practical will be 80% and theory will be 20% at CA final level. But at CMA final level, what is happening is that, so practical is like 60% and theory is like 40%. So they just made it that way. So lots of theory questions are also being given along with the practical questions. Okay. So therefore, concepts you need to be strong enough. And for example, one question is like, what are the situations where the registration of a person can be cancelled, like that. But usually this is a question which will not be tested that much at practical level, theory level only. So they have given that question once. So there are some list of cases where a person's registration can be cancelled. So that we need to remember and we need to write. And then some distinguished questions also, distinguish between anti-dumping duty and safeguard duty. So this is all pure theory. Only when you are good at concepts, you will be able to answer these theory questions. Practical questions are also good enough. So it's like they are not beating around the bush. Very simple. They give some transactions, list of transactions, and they are asking us to compute the GST payable. So therefore, few transactions are taxable, few transactions are exempted. So what are all the taxable transactions that we need to take and total it, and we need to arrive at the value of taxable supply. Then direct questions like on provisions like value of supply, customs valuation, these plays and all directly they are asking the questions. So therefore, even practical questions intensity is not that much difficult. Then when it comes to MCQs, so because lot of questions they are giving in the form of MCQs along with justification. See, writing only option means inky pinky ponky we can do. A, B, C, D, any one option only. But the problem is we need to write the justification also. So for writing the justification, again the subject knowledge is important. Now, you know why I am discussing all these things? So because finally I want to conclude onto one aspect, that is, don't prepare for MCQs, for theory questions or for practical questions. That is a wrong approach. We should prepare the subject, and it may be tested as MCQ, it may be tested as an illustration like problematic question, or a theory question may be asked. Are you understanding what I am telling? So therefore, we need to be strong on the concept, and anyway they can ask, it is just the application of that. So our objective is that only. So for the next 3 days, what we will be doing is that we will be learning this way only. So we will focus more onto the concepts, but I'll not explain like too much in detail from the Bare Act etc. and all, because it's a rocket revision. So I'll be explaining so to the crisp, like a summary, what is required, and thereafter we will see some MTPs, practice questions etc. and all, so that you will get a confidence on the subject. So first let's complete the subject revision, and thereafter we will see application of this into, so CMA final resources are there now, like even recently also one mock test paper they have given, so that when we answer you will get the confidence. Okay, then so when it comes to the first module, you can take the first module. So total in the subject mapping I have already shared with you, so many modules are there, but in this module what are all the topics that we are going to cover? Supply under GST, a refresh, charge under GST, exemptions under GST, charge under IGST and composition scheme. And this particular module 1 itself is like weightage of 40 marks. This particular module 1 itself, weightage is 40 marks for old syllabus. New syllabus, I don't know. Trust me, I don't know, because I am not setting the question paper. Now, we cannot say that whatever model test paper that they have given is the standard. I mean, chapter wise standard. No, they can follow anything. Until the time the first attempt paper comes out, then only we will be able to do. But I can assure you one thing, that usually whenever there is a change in the syllabus. So I have seen this from quite a long time. So because I have qualified CMA final in 2008. 2008 to 2023. More than a decade, I have seen how CMA Institute will set the question papers, and even this online exam also I have seen, and offline exam also recently I have seen. So therefore, new syllabus when it is coming, they usually make 1 or 2 attempts easy. First attempt, second attempt and all, it will be made easy, and thereafter only they start exploring different questions. So therefore, those are appearing for new syllabus, don't take too much pressure. So be strong on the concepts, and when we do model paper and all, you will get the confidence. So more or less like that only it will be. Like, because syllabus has changed, but indirect tax has not changed now. Whether it is old or new, indirect tax is same. The same way they have to ask the questions. So that's the reason why this is the standard in which they will be testing the questions. Now, in this module 1, I am starting with the first area, that is supply under GST. So supply is divided into broadly 4. Section 7 subsection 1, which talks about inclusions in the meaning of supply. So then 7, book is not there. Soft copy is there. If you want hard copy, they will print and give. Okay. So you can check from your mobile, or you can look it from the screen. Screen not visible. Okay. So can someone turn off this tube light alone? Here, switch is here. But you have to do trial and error. I don't know which one it is, not that. Now, okay to some extent. So, supply is divided broadly into 4. You can either see in your mobile or you can check it here. So 7 subsection 1 talks about inclusions in the meaning of supply. 7 subsection 2 talks about exclusions from the meaning of supply. So already you have the basic knowledge of GST. So what is GST? Goods and services tax, that you know, na? And when GST will be levied on supply of goods or services. And supply of goods or services is the taxable event under GST. Taxable event means what? An event on happening of which there will be levy of tax. That is known as taxable event. And in case of customs, what is the taxable event? Import or export is the taxable event under customs. Like that under GST, the taxable event is supply of goods or services. So this supply is important to understand here, because if an activity, I am doing some activity, I am taking class now. So is this activity supply or not, we need to see. If this activity becomes supply, then I have to pay GST. If this activity is not a supply, then there is no levy of GST at all. So therefore, that's why supply definition is always important, and whenever we see the questions also in exam, so we need to focus on to that part, like is the transaction supply or not. But what we will do, our mind will jump on to whether it is taxable or exempted, which is actually an area which comes in the last. So first we need to see whether an activity is supply or not, and thereafter we need to know whether it is supply of goods or services, and then we need to know whether it will be taxable or exempted, and after we know whether it is taxable or exempted, the next aspect is who will pay GST, whether it is FCM or RCM. FCM means what? Forward charge mechanism, where liability to pay GST is on supplier to the government, whereas RCM means what? Liability to pay GST is on the recipient to government. But in both the cases, the burden of GST will be on whom? Let it be FCM or RCM, the burden of GST will be on the recipient only, correct? So therefore, whenever it is FCM or RCM, so if it is FCM, then put it under the liability of supplier. Whenever it is RCM, put it under the liability of recipient. And then we need to know whether they are registered or not, because if a service becomes taxable, it does not mean always we need to pay GST. So first, the person who is providing that service should be a registered person, because if the service is taxable but my aggregate turnover does not exceed the threshold limit, so then I don't have to pay GST at all. So therefore, these are all the various points we need to check before making the answer in the answer sheet. So what are the checklists that you need to keep in mind? First, whether an activity is supply or not. Okay, so somewhere you can make note of this checklist for practical questions. Checklist for practical questions. Checklist for practical questions. Number 1, whether an activity is supply or not. Number 2, whether an activity is supply or not. And number 2, is it supply of goods or supply of services? Is it supply of goods or supply of services? And third, whether it is taxable or exempted. Whether it is taxable or exempted. How do we know whether it is taxable or exempted? Exemption is given, exempted services, the list of services and the list of goods which are exempted is given via various notifications from time to time. And in that we have notification 1/2017 which deals with exemptions with respect to goods, notification 12/2017 which deals with exemptions with respect to services. So there we have list of exemptions. So if a service is exempted, covered under that notification, it is exempted. So the balancing figure is what? Taxable. Understood? So therefore, so we need to know what are all exempted. So that we need to learn. And remaining, suppose you read a transaction, the transaction is not there in exemption, which means it will be taxable. And the next aspect that we need to know is whether it is FCM or RCM. Write down. Next point, point number 4, checklist 4, whether it is FCM or RCM. FCM means what? Forward charge mechanism. RCM means reverse charge mechanism. Whether it is FCM or RCM. And again, how do we know whether it is FCM or RCM? For RCM, we have some list of goods and list of services specified under reverse charge mechanism. With respect to that only, RCM recipient is liable to pay GST, but in all other cases, supplier is liable to pay GST to government. Balancing figure is supplier paying, that is FCM. And finally, next one, whether such person is registered. Whether such person is registered. Having satisfied all these things, that is supply becoming, their activity becomes supply, and it is taxable, and it is FCM, but if the person is not registered, so GST payable will not arise. Only when the person is registered, they have to pay GST. Understood? So these are the 5 checklists. So right now we are in which point? First point, supply. Whether an activity is supply or not is what we are discussing. So for that, we have section 7. You have to remember this section 7. So whenever you are writing that this activity is supply or not, you need to write as per section 7 of CGST Act. So because CGST Act contains all the major provisions in CGST Act only, and IGST Act we have few sections, whereas SGST Act is not there in syllabus, and even if it is there also, it is replica of CGST Act only. And when it comes to UTGST Act, UTGST Act is also a replica of CGST Act whenever the transactions takes place within the union territories. So therefore, generally whenever we remember the section, that section will be of which act? CGST Act. Unless otherwise, there are some sections related to interstate supply, intrastate supply, place of supply, etc. So that I have given here itself in the same module, charge under IGST. There we will be learning all IGST sections in one place. Okay. So but otherwise, any section that I am referring to will be of the CGST Act. So section 7 of CGST Act, supply 7 subsection 1 inclusion, 7 subsection 2 exclusions, and 7 subsection 1A classification of supply into goods or services, and 7 subsection 3, central government is empowered to reclassify supply of goods or supply of services and vice versa. So once you classify a transaction into supply of goods, government is empowered to tell that no, it is not goods, it is services. Same way when you classify it as supply of services, government is having power to change it to supply of goods. But 7 subsection 3 is practically not applicable as on today. So because 7 subsection 3, under 7 subsection 3, we don't have any notifications. So literally what we need to remember, only 3 subsections: 7.1 inclusion, 7.2 exclusion, 7 subsection 1a classification of supply into goods or services. Now in that inclusions we are discussing inclusions in the supply. So we have various inclusions. In that clause A says that any activity in the nature of debts RLL. So debts RLL, D for disposal, E for exchange, B for barter, T for transfer, S for sale, R for rental, another L, lease and license. Now whether these activities are only called as supply? No. So any activity in the nature of these activities will be coming under supply. So disposal means what? Whenever I don't want an asset and it has lost its economic life, like scrap, waste, etc., there we use the word disposal. And exchange is a word used in the context of exchange of goods for other goods. For example, you have an old mobile and you give your old mobile and pay the price difference and get a new mobile. Whenever we buy a new mobile, we give the old mobile in exchange, na? So that is the context of exchange. And then barter is exchange of goods for goods or services for services purely. So like there won't be any price difference and all. So for example, I will give you 100 kgs of rice and you give me 70 kgs of wheat. So this is a barter. So goods for goods are services for services or goods for services, that is called as a barter. T is transfer. Transfer, sale is also transfer, but transfer is a term which is broadly used in case where the transaction is not even sale. For example, compulsory acquisition. In case of compulsory acquisition, government will be acquiring it from the person, whether the person is having intention to sell or not, but they are forced to sell. That is an example of transfer. Then relinquishment and extinguishment, like that. In capital gains in direct tax, you might have come across, that is talking about, so I have taken insurance on a particular asset and now insurance company is giving me the claim. I met with an accident and insurance company is giving me the claim. So which means that the damaged parts and all they will take na. I don't have the intention to sell, but this is called as extinguishment of right. Only when I extinguish the right on the damaged parts, the insurance company will give me money to buy the new parts. So therefore it is coming under a transfer. Got it? So transfer is a broader term. And sale you all know, because transfer of property in goods from one person to another person for consideration, that is in the form of cash, deferred payment or any other valuable consideration, that is sale. And rental is like I am not transferring the title, but I am transferring the right to use. So I have a car and I am not giving you the title of that car. If I am giving you the title of the car, it is known as sale, but I am giving you the right to use that car, that is called as rental. Then license and lease. So license is used in the context of intangibles. So I have a trademark, patent, copyright, etc. So the trademark, copyright, patent, I am giving you, not transferring it to you title. So I am just giving it to you to use, and depending upon your use, you will be paying me a royalty, that is called as license. And lease, usually lease and rental both go hand in hand. And the major difference between lease and rental is that if I am able to cover the substantial life of the asset in the form of rentals, we call it as lease. But temporarily for a period if we are giving, we call it as rental. So that is, intention is different. In case of rental, like 3 months or 1 year, like that. But in case of lease and all, it go for substantial life of the asset. Like suppose if the life of the asset is like 10 years, so majorly like 7 years, 8 years we will be giving it on lease, and there also we collect the rentals, that is lease rentals. So these activities are only called as supply or not? No. These activities are just the reference point, but apart from this, any activity will become supply under 7.1a. But what is the condition you need to check? It should be for a consideration. It should be for a consideration in the course or furtherance of business. And from whose point of view we need to see whether it is in the course or furtherance of business or not? Supplier point of view. And the coverage is what? Both goods as well as services is covered in this place. For example, I am taking classes and I am not charging anything to you, correct? Now, is it supply under 7(1)(a) or not a supply? Not a supply. Why? Number one, activity. What is the activity? Taking classes. But it is not given there, not necessary to give there, because these activities are only not called as supply, any activity. Okay. And next, number two, is it for consideration? No, it is not for consideration, even though it is in the course or furtherance of my business. But it is not for consideration, that's why it is not a supply under 7(1)(a). You sell your old mobile in OLX, is it supply under 7(1)(a)? No, because there is no business. So even though there is consideration, but there is no business. So all these conditions should be satisfied. And again we are seeing every time from whose perspective here? Supplier perspective only. Understood or not? Suppose if I collect some fees from the students for this, suppose if I collect some 100 rupees or 200 rupees from you, will it become supply? Yes, it will become supply, because activity for consideration in the course or furtherance of business. From whose point of view? Supplier point of view. Now consideration is nominal, sir. See, that is, we don't have in GST a concept of adequate consideration. So even if 10 rupees is collected, 1 rupee is collected, it is consideration. So like in income tax, we don't have the adequate consideration. Not necessary that the consideration what we are collecting should commensurate with the market value. So therefore whatever money that we are collecting, that will be called as consideration. Then look into 7(1)(aa). What is the difference between 7(1)(a) and 7(1)(aa)? 7(1)(aa) is an amendment. So 7(1)(aa) is brought in because, so whenever an activity is taking place between a person other than individual and its members, for example, there is a firm which is providing some services to its partners, and a partner providing some services to the firm. So now you may argue that firm and partners are one and the same. They are not different. Then how come it will become supply? That's the reason why, to avoid that conflict, they have added 7(1)(aa), which says that any transaction between a person other than individual. Who is person other than individual? Generally, who is person under GST? So income tax person is who? Individual, HUF, firm, LLP, AOP, BOI, company, body corporate, cooperative society, local authority, artificial juridical person. This is the meaning of person under Income Tax Act. And to that you add central government and state government, that will become person under GST. So now person other than individual. Who is person other than individual? Means HUF, firm, etc. Okay. So transactions between a person other than individual and its members or constituents. HUF and members of HUF, firm and partners, company and shareholders, joint venture and its members. Are you understanding? Between them, if there is any transaction, that will come under 7(1)(a), even though they may not be different legally. Company and shareholders are different legally, but partnership, firm and partners are not separate. Association or club and its members are not separate. Correct? Legally they are one and the same, but even then, for the purpose of GST, we will treat them as two different parties, and any transaction between them will become supply under 7(1)(a), but it should be for a consideration and it should be in the course or furtherance of business. Another case example for this is like there is an apartment owners association. This apartment owners association will be providing common area facilities to their members, and they will be recovering maintenance charges like lift maintenance, garden, sewage, water supply, electricity, like that, and they will be collecting some charges called as maintenance charges. So again it is what? So activity between a person other than individual. Who is a person other than individual here? Club or society, and its members. So are the members here the flat owners. So that will become supply under 7(1)(aa). Okay, and here they are not talking about in the course or furtherance of business, but by default it is in the course or furtherance of business. Now why personal activities will be between them? And from whose point of view we need to see? Supplier point of view. And what is the coverage? Both goods and services. Now you can see 7(1)(b). 7(1)(b). What is that difference between 7(1)(a) and 7(1)(b)? So in 7(1)(a), if you see any activity, but in 7(1)(b) it is import of services, and in 7(1)(a) as well as 7(1)(b) consideration is must. But 7.1a, it should be in the course or furtherance of business, but 7.1b, whether or not in the course or furtherance of business. And from whose perspective we need to see 7.1b? Recipient point of view as to whether it is in the course or furtherance of business. And here the coverage is only services. Why not goods? Why import of goods is not given? Because import of goods is subject matter of Customs Act. That's the reason why it is not given under GST. Now, for example, you are subscribing for Amazon Prime or Netflix. When you subscribe for Amazon Prime or Netflix, so it is an import of service because they are located outside India and you are located in India. It's an import of service. For consideration, we have to pay some charges like 199 or 999, etc. We need to pay some charges. So, for consideration. But is it in the course or furtherance of your business? So, no, because it is for your personal purpose you are importing. Again, we are seeing from whose perspective? Recipient perspective here. From supplier point of view, definitely it is in the course or furtherance of business. So, we need to see from the recipient point of view, whether or not. Suppose if it is in the course or furtherance of business, for example, I am purchasing, so this Zoom license. So, Zoom license for the purpose of taking online classes. So, it is import of service? Yes. For consideration? Yes. Is it in the course or furtherance of my business? Yes. So, therefore, whether or not in the course or furtherance of business, that will become supply under 7.1b. Then 7.1c we have, there are 4 activities in 7.1c. So, DRIP, D-R-I-P, you need to remember. So, whenever you are referring to 7.1c, so it is without consideration, only when there is no C, that is consideration. No C, you need to refer to 7.1c. Whenever there is consideration, you should not refer to 7.1c. So, 7.1c is activities without consideration also will become supply, and where these activities are given? These activities are given in Schedule 1. So, in that we have DRIP, D for disposal of business asset on which ITC is availed, R for related party transactions including transaction between distinct persons, I import of service from a related person or other establishment located outside India, and P for principal agent transactions. Now, first point, disposal of business asset on which ITC avail means I am purchasing an asset, and on that asset at the time of purchase itself I paid some GST, and whatever GST I paid I have taken as input tax credit. So, now that asset is given free. So, I have donated it to an orphanage or donated it to an old age home, then it will become supply under 7.1c, disposal of business asset on which ITC is availed. Now, I am purchasing raw material. Raw material is converted into finished product. Now, the finished product I am giving it as gifts or free samples. Will it become supply under 7.1c this point, disposal of business asset on which ITC avail? Is that finished product, that is I purchased raw material here, using that raw material, say I made one beauty soap, okay. So, I am a manufacturer of beauty soaps, so I made one beauty soap. That soap and all, if you apply on your face, you will become so much glamorous. So, now this particular soap to promote I am giving it for free. So, now in that case what will happen? Is it disposal of business asset on which ITC avail? Is that soap my business asset? Of course, inventory. Inventory is a business asset. Inventory come in asset side, na? So, which means it's a business asset. But is it disposal of business asset on which ITC avail? No. What I am disposing of is finished product, but I availed ITC on raw material. So, therefore, it will not become supply under disposal of business asset point, okay. So, what are the points you need to remember here? You have a business asset, at the time of purchase of business asset you availed ITC, and that business asset is disposed of without consideration. And should it be in the course or furtherance of business? No. Why? So, disposal of business asset is only the word used in the law, but it may be in the course or furtherance of business, not in the course or furtherance of business. For example, the soap example, so why am I giving it? To promote my business, correct? So, it is in the course or furtherance of business. So, whereas another example, if you see that AC, I purchased AC and donated it to an orphanage, is it in the course or furtherance of my business? No. So, then also it will become supply. And say for example, under corporate social responsibility, if I do something, I donate it, but the donation is not voluntary. But under CSR I have to do something, under that I have done that. So, then in that case, will it come under disposal of business asset supply? Yes. See, because in the course or not in the course or furtherance of business is not relevant over there. And then again from whose point of view? Supplier point of view. Coverage is only goods. Why not services? disposal of business asset, how business asset will become services, so definitely it will be goods. Then next one, R for related party transaction, including transaction between distinct persons. So there are some parties who are treated as related parties, we will see the definition little later, and distinct persons. So between related parties and between distinct persons, if there is any transaction, so without consideration also it will become supply, but it should be in the course or furtherance of business. You can see that it should be in the course or furtherance of business. Again, from whose perspective we will discuss this? Supplier point of view. And what is covered there? Related party transaction, both goods and services. Then import of services. What is the difference between this import of services versus import of services we have in 7.1b? In 7.1b import of service we saw na, that 7.1b import of service is from any person, but 7.1c also an import of service is there, that is from a related person or another establishment located outside India. And 7.1b import of service should be for consideration, but 7.1c import of service is without consideration, okay. And 7.1b import of service whether or not in the course or furtherance of business, but 7.1c import of service is in the course or furtherance of business. Say for example, I am starting a manufacture of smartphones, and for smartphones I need the technology, operating software. So for that I approached Google to give their Android, for which Google is asking me to give 55% of shares of my company. So I have given 55% shares of my company, and they will be giving me the technology. Using the technology I will be making the mobiles, and I will be taking the profit, and they will also take the profit. Literally it is import of service without consideration. How? Profit is not consideration, because profit is an element which is not certain. So it may come, it may not come. But for this service, is there any direct consideration we are giving? No. So therefore I am importing the technology, I am using it in making the smartphones, and therefore it is import of service from a related person. Why related person? Holding company and subsidiary company are treated as related person. So it's an import of service from a related person. Is it for consideration or without consideration? Without consideration. But is it in the course or furtherance of my business? Yes. So it will become supply under 7.1c. The intention of the lawmaker there is that because there is an indirect consideration which is going to abroad in the form of profits, so that's the reason why they are taxing this transaction. And last, principal agent transaction. Principal agent transaction means usually consignor will be sending goods on consignment to the consignee. So previously that was exempted under old indirect tax law, so under stock transfers and branch transfers. But now they wanted to tax this transaction in order to track the movement of the goods. So from where to where it is going. So therefore principal is sending the goods to the agent. But agent will not make payment to the principal now. Agent will make payment to the principal only when the goods are actually sold. So due to that reason, until that point of time, principal will not be getting any amount, even though there is no consideration, but it will become supply. But the principal agent transaction is only with respect to goods, not with respect to services. You can see there, principal agent transaction is only with respect to goods. Again here in the course or furtherance of business is not specifically given, but definitely it will be in the course or furtherance of business. So this is about 7 subsection 1 inclusions. So whatever we have seen so far is the inclusion. 7.1a, any activity for consideration in the course or furtherance of business. 7.1a, any activity or transaction between a person other than individual and its members for consideration. And 7.1b, import of service for consideration whether or not in the course or furtherance of business. 7.1c, DRIP, 4 activities. What are the 4 activities? D for disposal of business asset on which ITC avail, related party transaction including transaction between distinct persons, import of service from a related person and other establishment located outside India. P for principal agent transaction with respect to goods. Now you can see the next page, meaning of goods. So goods is divided into 3. Goods means goods includes and goods excludes. Goods means what? Any kind of movable property. Goods means any kind of movable property. So immovable property will not come under goods. And goods includes, you can see, actionable claims, then grass or things attached to or forming part of land agreed to be served under a contract of supply. Actionable claim is not defined under GST. But as per Transfer of Property Act, actionable claims means that So I have an instrument which satisfies 4 conditions, then it will be called as an actionable claim. I have right to receive a benefit or recover a debt, and it is legally enforceable, and a holder of that right is entitled to receive the benefit or recover the debt, and it can be transferred from one person to another person. Example, bill of exchange. When I have a bill of exchange, I have right to recover a debt. Can I transfer the bill of exchange? Yes, I can endorse the bill of exchange, and whomsoever is holding that bill of exchange, they will be receiving the benefit. And is it legally enforceable? Yes, it is legally enforceable in the court of law. So therefore, it is an actionable claim. Another example is lottery ticket. Lottery ticket, when I have a lottery ticket, I have right to receive the benefit. Legally enforceable, yes, in the states where lottery system is prevailing. Transferable, yes, because there won't be any name on the lottery ticket printed. And whomsoever is holding that lottery ticket, that person will be getting the money benefit. Then even in casinos, there will be these chips, green color, red color chips with which they play. So the moment we go into a casino to play a poker game or any other games, we have to deposit the money there in the counter, and they will be giving us the chips. Using that chips, many movies also you would have seen. So using that, we need to play, and we may lose or we may win. So again, whatever money, like whatever chips we won, we give it to the counter, they will be giving the cash. So these chips will be again coming under actionable claims. Okay. So actionable claims not defined in GST, an instrument which has 4 conditions: right to receive a benefit or recover a debt, transferable one from one person to another person, and it is legally enforceable, and the holder of that person is entitled to receive the benefit or recover the debt. Example, bill of exchange, bearer check, lottery ticket. These are all examples of actionable claims that will be covered under goods. Then goods includes one more point also: anything that is attached to earth but agreed to be severed. Severed means what? Cut. Agreed to be severed. Severed means cut under the contract of supply. For example, I have a teakwood plantation, and this teakwood plantation, I am entering into contract today, forward contract today, to cut it and deliver after 6 months. At the time when I enter into contract, it is immovable in nature, attached to earth. But at the time when I am delivering, I am going to cut it and deliver. So due to that reason, it should be treated like goods itself today, even though it is attached to earth. That is this point. Then goods excludes money and securities. Money and securities are neither goods nor services, because even service definition also you can see it excludes money and securities. So why securities are excluded from the meaning of goods and services? Because on securities already there is security transaction tax, and that security transaction tax not got subsumed into GST. So due to that reason, so the securities are outside the GST purview, so it is excluded from both goods and services. Securities again not defined in GST, but general meaning of securities as per Security Contract Regulation Act is what? Shares, debentures, mutual fund units, futures, options. These will come under securities. Then money. Money is excluded because it's meaningless to charge GST on money. For example, I have 2000 rupee note right now, that is a burning issue. So 2000 rupee note I am giving to you, and you are giving me so 100 rupee notes. Now in that case, am I selling 2000 rupee note to you, or you are selling me 100 rupee note? So it's meaningless. Na? That's the reason why money is excluded from the meaning of goods. And what is money generally? Money is defined under GST section 2 clause 75. It can be Indian currency or foreign currency. You can see that Indian currency or foreign currency, including any instrument recognized by RBI. So therefore, whether cryptocurrency comes under money? No. Why cryptocurrency will not come under money? Because cryptocurrency like bitcoins or Ethereum coins etc. is not recognized by RBI. So it will not come under money. Then currency held for numismatic value is also excluded. So means old coins, old currency notes etc. will be called as currency held for numismatic value, that will not come under money. Now I am selling cryptocurrency. Is it supply of goods or not? I am selling cryptocurrency. Is it supply of goods or not? Yes, because goods excludes money. Money excludes cryptocurrency. Exclusion to the exclusion is inclusion. Minus into minus plus. Okay. So first goods definition excludes money. Money definition excludes cryptocurrency. So therefore cryptocurrency will be treated as goods. So sale of cryptocurrency is treated as supply of goods and chargeable to GST. Same way, sale of old coins. Sale of old coins, is it covered under goods? Yes, because goods excludes money. Money excludes old coins. So which means old coins will be coming under goods. So therefore sale of cryptocurrency, you just write down somewhere, sale of cryptocurrency and sale of old coins treated as supply of goods and chargeable to GST. So here I have already given sale of bitcoins and sale of old coins treated as sale of goods and chargeable to GST. Next. Now there are some actionable claims which are recognized by RBI. Bill of exchange, promissory note and bearer check are recognized by RBI, instruments recognized by RBI. Then it will come under money definition. So same thing will come under actionable claims. So it is included in the meaning of goods. And same will come under money and it is excluded from goods. How to break this? For that reason we need to make a harmonious interpretation. It is simple. Those actionable claims which are covered under money definition is neither goods nor services. So what are the actionable claims which are covered under money definition? Bill of exchange, promissory note, bearer check. So that will neither be goods nor be services. But remaining actionable claims will be treated as goods because it is included in the meaning of goods. You can see that actionable claims is divided into two. Covered under money, not covered under money. So what are covered under money? Bill of exchange, promissory note and bearer check. So it is neither goods nor services. And not covered under money, example lottery ticket, vouchers, right to receive arrears of rent. So these are all examples of other actionable claims. These will be treated as goods. But again, not all actionable claims are covered under supply. So as per 7 subsection 2, we have some exclusions from supply. In that it says, actionable claims other than lottery, betting, gambling is excluded from supply. Means only 3 are covered under supply. So that is lottery, betting and gambling. So first it is treated as goods. Thereafter lottery, betting and gambling is covered under supply and other actionable claims are excluded from supply. Understood? So therefore what is the chart of actionable claims? You need to remember actionable claims divided into two. Those which are covered under money, neither goods nor services. Other actionable claims are treated as goods. Again it will be divided into two. Lottery, betting, gambling covered under supply and other actionable claims will be excluded from supply. So this is the meaning of goods. Then meaning of services. Service means any activity other than goods. Amazing definition. So sale of land will come under supply of service. How? Land is not goods. So therefore it will come under service. Sale of building. Building is not goods. So it will come under supply of service. Sale of business, mergers, acquisitions, etc. So it is not goods. So therefore it will come under service. So anything other than goods is service. And service also excludes money and securities. But money, transaction in money for a separate consideration. So it's like, so yesterday I read one forward message in my WhatsApp. You have 2000 rupee currency notes. Don't worry, give it to us and give a 5% commission. We will give you 500 rupee notes and 100 rupee notes. Like that one message I saw. Okay. So amazing deal it is. So because if I put it in my bank account, that will become my accounted money. If it becomes my accounted money, then income tax highest slab and all it will go 30% easily. Because see, 2000 rupee notes if I am having at my home means definitely I am a person who has crossed the exemption limit and all. So therefore I will be into the higher slab only. So if I put the money into there, even if it is like mid-range also, 20% I have to pay na. So therefore what I will do, I will give it to that agent and he will be giving me 500 rupee and 100 rupee notes. 5% only, it's okay. Black money is black money. 5% only I am losing. Now this is known as transaction in money for a separate consideration. That 5% will be separate consideration. That will be treated as supply of service. Sir, it is illegal no. In taxation we should not bother about legal or illegal. So everything will be chargeable to GST even if it is illegal income also. For example, cryptocurrency not recognized at all by RBI. It is not at all legal in India. But even then they are levying TDS. No on cryptocurrency. Yes or no? So then on gambling. So how many gamblings in India are legal? Very, very less. But on gambling income, they are asking us to pay income tax, na? So therefore, whether it is legal or illegal, it is irrelevant here, okay? But tax will be payable on that particular income. So for tax law, we should not talk about legality, okay? So that is with respect to this. So transaction in money for a separate consideration. Another example I will give you, forex transaction for a markup fee. For example, so you have $100 and $1 is 82 rupees. You are giving me $100, I am giving you 8,200 rupees. So which means transaction in money without any consideration. I am not getting any benefit. Market rate $1.82, I am giving you 82. Suppose if you give me $100 and for that $100 I have multiplied 82 and some amount I arrived minus 2% I deducted as my markup fee, commission or markup fee, then that commission or markup fee will be treated as a separate consideration. So that is what transaction in money for a separate consideration, it will be included in the meaning of service. Then facilitating or arranging transaction in securities. What is that? I am selling shares. It is neither good nor services, but there is one stockbroker who will facilitate this transaction. That stockbroker service will be treated as service. Stockbroker, depositories, etc. that will come under facilitating or arranging transaction in securities. Then next, meaning of consideration, because in 7.1 we have come across few key points like goods, services, consideration, business. So that definitions only we are seeing now. Consideration, generally consideration means something in return, that is quid pro quo. Consideration includes monetary or non-monetary consideration. So therefore consideration can be in the form of money or it can be non-monetary. Non-monetary again it can be in the form of goods or it can be in the form of services. So when it comes to services, either doing an act or not doing an act, okay. So for example, so we have, like I sold a product to you and I am collecting 300 rupees for that product. So it is money. Non-monetary in the form of goods. I sold a product to you and instead of collecting 300 rupees, I collected another product from you, exchange. So again, transaction in transaction here with non-monetary form, but in the form of goods. Services. Services is like doing an act. I am a chartered accountant. I am providing to you so some services related to your income tax return filing, and you provided me one service related to financial appraisal for my bank loan. So I am going for a bank loan, professional loan. For that you are doing one projections and you are giving me, because for my bank loan I should not do the projection. For your income tax you should not file the income tax return beyond a point. So therefore it's like a mutuality. So one service for the other service. Are you understanding this? So that is also consideration. Means in barter there will be two transactions and one transaction will become consideration for the other. For chartered accountant service, cost accountant service is consideration. For cost accountant service, chartered accountant service is consideration. Understood? Then next, not doing an act. That is, I am not properly taking the classes and I am not collecting fees from you. But you should not go out and tell that I am not properly taking the classes. You understood? That's why I am not charging fees from you, for example. So if that be the case, so this not going out and telling that I am not taking classes properly, it's also having one monetary value, that is the non-monetary consideration for me. So this consideration can be in respect of, in response to, or for inducement of supply of goods or services. In respect of means what? So this is a product, this much is the price, in respect of. And usually inducement of is a word used in the context of movie industry. What will happen? So one person who will be of grandfather's age wanted to act in one movie and become a hero. None of the heroine will agree. So therefore this person will be giving lot of money to that heroine to make her sign the movie. Okay. So now when she signs the movie, she gets remuneration, that is in respect of. But to make her sign the movie, some gifts and all will be given, one car will be given, one shop will be given, etc. So this will be called as, inducement of. Then in response to. Usually again this is in movie industry we will see this. So whenever a movie becomes super hit, the producer of that movie will give car, bike, watch and all. So to the actors who acted in that movie, director. So again that will be coming under what? Non-monetary consideration in response to. Why are you giving? then if you want to give, you give before starting the movie itself. So after shot of the movie, thereafter when the movie becomes hit only you are giving it. So which means that is in response to that particular services received from them. So therefore it will also be treated as consideration. If it happens between four walls, no one will know, but we will not keep quiet. Now we will put photographs, and anything that happens in our life we will put it in Instagram. So therefore everyone will know that. The tax department also will know, so they will ask GST on that. Then consideration excludes subsidy from central government or state government. Subsidy means what? Grant. So any grant which is received from government will not be treated as consideration, but subsidy can be received from any other person. Yes, subsidy can be received from any other person, that will be treated as consideration. So like central government, state government only, not consideration. Suppose if it is from a NGO, treated as consideration. Local authority, treated as consideration. Collected from holding company, can treat as consideration. Foreign government, treated as consideration. Then consideration excludes refundable security deposits. Refundable security deposits means, so generally in case of commercial properties and all, we will pay 10 months rent as security deposit. So is that refundable or non-refundable? Refundable. So therefore whether GST payable on that security deposit? No, GST payable only on the rent, but not on the refundable security deposit. So this is the meaning of consideration. So it is consideration includes monetary, non-monetary. Non-monetary can be in the form of goods or services, and consideration excludes only two. What is that? Subsidy from CGRSG and refundable security deposit. And this consideration should be in respect of, in response to, or for the inducement of supply of goods or services. You can see some important points related to this. Consideration can be from recipient or any other person. For example, whenever you buy a two-wheeler and the service of the two-wheeler will be done free, but is it really free? No. So at the time of purchase of two-wheeler itself, you would have made payment to the manufacturer. So the dealer who is doing the free after sale service to you, he will get the money from the manufacturer. So consideration need not be received from the recipient, but presence of consideration is relevant. So therefore consideration can be from recipient or any other person. Consideration can be received or receivable, accrual. So if I have already actually received or receivable, both are treated as consideration. So on accrual basis I need to pay GST. Today you agree that you will pay money, but you are not paying today, you will pay after 3 months, but even today itself it will be treated as my consideration. Then donations is actually not treated as consideration if it is unconditional. Donations are divided into two: unconditional donations and conditional donations. Unconditional donation means what? Against the donation I have no obligation to do anything to you, so either goods or services, that is unconditional donation. For example, I am constructing one temple, you are giving me money and you are telling my name should come there. So on so person's temple, God name also below, but my name only should come there first. Then it will be what type of donation? Conditional donation. Means you are giving me money and I have an obligation to do something to you in return to that, then it is conditional donation. Conditional donation is treated as consideration, whereas unconditional donation, no obligation to supply goods or services, not treated as consideration. Means you gave me money and you did not insist me to do anything, just you gave me money and you left. So then in that case it will be unconditional donation, not treated as consideration. Now listen carefully. That is, as I told you that I am constructing one temple and I asked you to give money, you gave me money and you did not insist me to put your name, but as a gratitude I have displayed the name, list of donors, like that. Usually in hospitals and educational institutions etc, you will see list of donors like that. So is it conditional donation or unconditional donation? Unconditional donation, because you did not keep any obligation on me to display the name. Voluntarily, out of gratitude only I displayed that name, so therefore it will be coming under unconditional donation. But CBIC, Central Board of Indirect Taxes and Customs, gave one circular. As per that circular, what they are telling is that if we display the name and because of the display of name, if there is any business advantage to the donor, then it will be coming under conditional donation. Okay, see that display of name as a gratitude against donation received. Whether display of name gives business advantage to the donor, yes, then it will be treated as consideration. Suppose if display of name do not give business advantage to the donor, not treated as consideration. For example, what I have displayed is that donated by MRF Limited. Is there a business advantage? Yes. And donated by Mr. Satish Kumar. No business advantage. Donated by Mr. Rajesh, proprietor Rajesh Jewelers. Business advantage. Are you understanding? So whenever I mention the name and that gives a business advantage to the donor, then it will be coming under, what type of donation? Conditional donation, and it will be treated as consideration. Okay. And when it is treated as consideration, so under which category it will be classified? It will be classified as a sponsorship service. So because I am displaying a name, means I am promoting their name. So then in case of sponsorship service, who will pay GST? Generally sponsorship service will come under RCM. If the recipient is body, corporate or firm, it will be coming under RCM, where liability to pay GST is on recipient. If the recipient is other than body, corporate or firm, it will be coming under FCM. So for example, so I am the supplier, I am displaying the name. So the person who gets money is the supplier, the person who gives money is the recipient. So donor is the recipient. Okay. So if the donor is body, corporate or firm, they need to pay GST under RCM. If the donor is other than body, corporate or firm, the one who receives that money, they need to pay GST under FCM. Got it? Then we are moving on to meaning of business. So we have seen meaning of goods, meaning of services, meaning of consideration. Now we are moving on to meaning of business. So is this flow okay for you? Yes, you are able to understand everything. I am not fast, no. Actually, I am slow. Okay, according to me, I am slow, but I just wanted to hear it from you. Is this flow okay? Oh, fine. So these things and all, have you studied before? You studied before. Okay. So it will be like a revision, and maybe some new concepts also you may learn if you have not studied it. Okay. So meaning of business, we have general meaning of business and specific activities. General meaning of business means these activities will always be treated as business. So specific activities are there, na? Those specific activities will always be treated as business, whether it is covered under the general meaning or not. So that is what specific activities are. General meaning says trade, commerce, manufacture, profession, occasion, adventure. So trade is sale of goods, commerce is service sector, manufacture is conversion of raw material into finished product, profession, occasion, adventure is usage of skills. I have a skill which I got by way of qualification like chartered accountant, cost accountant, advocate, company secretary, that will be called as profession. Occasion means out of experience like movie actor or astrologer or magician, this is called as occasion. Adventure means when you use that skill as a passion, not for your living, it is called as adventure. And wager means betting activities. Okay. So or any other similar activity. So this whether or not for a profit motive. For example, Tirumala Tirupati Devasthanam will be selling laddus, dairies and calendars. So is it for a profit motive or non-profit motive? Definitely non-profit motive. By selling laddus, they don't have to earn money. They have a lot of money. So therefore, this will be not for a profit motive. Even then, it will come under business, under trade. Then incidental or ancillary is also covered. So incidental or ancillary means support functions. For example, you are a cost accountant, okay, and you are practicing as a cost accountant. Now you will be authoring some books and get a royalty income on that books. So where it will come? Incidental or ancillary to your profession. So whatever work that you are doing as a cost accountant is that work, plus apart from that incidental or ancillary other works when you do, that is connected to your profession, and it will come under incidental or ancillary. Suppose if it is altogether different, so being a cost accountant, you did one movie, you directed one movie and you got some money as a director, okay. So then in that case, it will come under which, where incidental or ancillary to profession or adventure, it will not come under incidental or ancillary to profession, okay. It will come under adventure. Incidental or ancillary is also covered, irrespective of volume or frequency or continuity. So what does it mean? Say for example, you started a business, you did it for 1 or 2 days, then you have shut down the business. Even you did the business for 1 or 2 days, so that will be coming under business. So irrespective of the volume, continuity or frequency. So this is a general meaning. Then there are some specific activities. So supply of goods or service in connection with commencement or closure of business. For example, so I have purchased 5 ACs for my office, and in that 5 ACs, so 3 ACs I have used in my office, 2 ACs I have sold. I purchased 5 ACs in bulk because I will get a best deal, and 3 ACs you used in my office, 2 ACs I sold. Now this sale of AC is my business? No, sale of AC is not my business, but as it is in connection with commencement of business, it will also be treated as business. Then provision of facilities by club or association, already we saw that apartment owners association collecting maintenance charges will come under business. Then admission to any premises for a consideration, entry tickets, all entry tickets, entry to cinema hall or entry to temple or entry to amusement park, all entry tickets is treated as business. Then holding an office accepted by a person in the course or furtherance of his trade, profession or occasion. Say you are a cost accountant and you can become president of your Institute of Cost Accountants of India. Correct? Possible? You can become? Yes or no? Only you can become, no one else can become. Only members can become, correct or not? Now you became president of this Institute of Cost Accountants of India, and you did lot of good revolutions. Actually that is required here, because 1949 this CA Institute started. 1959 so they started Cost and Works Accountants of India. 10 years gap. But today if you see, there is around 25 years gap between CA Institute and CMA Institute in terms of many things, in terms of the work exposure or in terms of the branding. See, education is same, it didn't change, portion is more or less the same, but the person who is at the top, they are not properly doing it. So I feel it is directionless. So if they are having proper direction, it's like one mistake what they did according to me is this online test and all. So that online test has created lot of troubles for many students. Actually according to me it is robust, super innovative thought, but not properly researched. If they have properly researched and done, it would have become superb. That's a game changer moment that they didn't do. And even lobbying, we are very bad at lobbying actually. So they should do good lobbying, like CA Institute. So they should go and meet finance minister. Every time when they meet finance minister, some gift they should give. If required, we will give necklace also to finance minister. No, they should have done that. So if they do that, then some benefits from government would have got. Fine. So therefore, one person who is a cost accountant becomes the president of this Institute of Cost Accountants of India, and for being a president, some money they will receive. So that money will be coming under this point, holding an office by a person, so which is accepted in the course or furtherance of trade, profession or occasion. Then all activities of a race club will also be treated as business, and government activities is also treated as business. So government is also a person under GST, but government is not a person under Income Tax Act. So if government earns money, they don't have to pay income tax, but they need to pay GST. Okay. Next, meaning of person. Person is defined under GST. So meaning of person under Income Tax Act plus central government or state government is meaning of person under GST. Then meaning of supplier. Supplier means a person engaged in supply of goods or services or both. So simple. For example, I am engaged in supply of goods, I am the supplier, and it includes even agent. Suppose I am not directly supplying it to you, I am supplying it through an agent. That agent is also treated as supplier. Then same way, who is a recipient? Simple. If consideration is involved, the one who is liable to pay the consideration is the recipient. If consideration is not involved, then the one who is receiving the goods or receiving the services is the recipient. You can see there. For example, I have entered into contract with the holding company to provide the services to the subsidiary company. Now, who should pay consideration to me? Who is liable to pay consideration to me? Holding company or subsidiary company? With whom I entered into contracts? Holding company. Means who is liable to pay consideration to me? Holding company. But subsidiary company paid the consideration, so they are not recipient. For me, recipient is what? Only holding company. The one who is paying consideration is irrelevant. The one who is liable to pay consideration is the recipient. Understood or not? Then suppose if consideration is not involved, the one to whom goods are delivered or services are rendered, and even includes agent. Agent receiving goods or services on behalf of principal. Then principal agent transactions we have. So in that DRIP, P is what? Principal agent transaction. When principal agent transaction will come under supply, if agent is acting on behalf of principal. So if a normal agent is there between principal and agent, it will not be supply. Only when the agent is acting on behalf of principal, then any transaction between principal and agent will become supply. Now when an agent will be acting on behalf of principal, if it is a sale transaction, invoice should be raised by the agent in his name to the buyer. If it is a purchase transaction, purchase invoice should be in the name of the agent. Now concentrate, there is a principal and I am an agent of that principal. You are my buyer. Now I am raising invoice in my name to you, which means you don't know who is my principal. So therefore I am acting on behalf of principal. Now from me to you there is one supply, another supply between my principal and me. There are two supplies in this case when agent is acting on behalf of principal. Now suppose if my principal directly raises invoice to you, if my principal directly raises invoice to you, I am mere agent, there is only one supply from the principal to the buyer, and between principal and agent there are no transactions. Understood? So see that example, there is a principal who is sending goods to the agent and agent is sending the goods to the buyer. Situation 1, invoice is raised by the principal directly to the buyer. Now agent is acting on behalf of principal or not acting on behalf of principal. So there is only one supply here, that is between principal and the buyer. So between principal and agent to buyer there is no supply. Then situation 2, so suppose if agent is raising the invoice to the buyer, then agent is acting on behalf of principal. When agent is acting on behalf of principal, so between principal to agent, is it supply? Yes, 71C. And between agent to buyer, it will become supply under 71A because they are raising invoice na. So 71A, and here it will become supply under 71C. But in both the situations, agent will receive commission. That's a separate transaction. So that commission part will come under supply of service 71A. This is only for goods I am talking about. I have given the note there. In both the situations, agent receive commission and that will be treated as supply under 71A, and it is supply of service by agent to principal. On such commission, invoice is raised by agent to principal, which can be availed as ITC by principal, because see, for commission, who is the supplier? Agent is the supplier and principal is the recipient. So agent will raise invoice to the principal. Principal will not raise the invoice to the agent. For goods, principal will raise invoice to the agent. But for commission part, who will raise invoice to whom? Agent will raise invoice to the principal, and principal can take that as ITC and he can set off with this outward liability. What is input tax credit means? Input tax credit means GST paid on inward supplies. We can adjust it with what? GST payable on outward supplies. That is what input tax credit is about. Then in case of purchase transaction, say this, there is a seller and seller is having one buyer, but the buyer is asking an agent to procure the goods on behalf of him. So principal and this principal appointed agent to procure the goods on behalf of the principal. Now seller raises invoice to whom? Seller raises invoice to the principal directly. Then agent is not acting on behalf of principal. There is only one supply between the seller and the principal. So therefore this is not a supply between seller, agent and agent principal. What if seller raises invoice to the agent? Then agent is acting on behalf of principal. So there is one supply between, first supply between seller and the agent. Again when agent is sending the goods to the principal, that will become supply under 71C. So from these two charts, what is the conclusion we can draw? Principal agent transactions will come under supply 71C if agent is acting on behalf of principal. First point. Second, when agent will be acting on behalf of principal, two situations: sale transaction, invoice raised by agent in his name; purchase transaction, invoice in agent's name. Got it? Invoice in agent's name. Again I am repeating, when principal agent transactions will come under supply if agent is acting on behalf of principal. When agent will be acting on behalf of principal, sale transaction, invoice in agent's name, correct? Invoice issued by agent in his name, and purchase case also invoice is in agent's name. So then agent is acting on behalf of principal. Here also this agent will get commission. That's a separate transaction that will be treated as supply of service, means that will be a separate invoice also. Okay. In both these cases agent will get the commission. Okay. Then we are moving on to 7.1c part, disposal of business asset on which ITC is availed. The DRAP is there now, that we are discussing little bit in detail. Disposal of business asset is divided into two, with consideration, without consideration. If it is with consideration, then definitely it will be covered under, if it is with consideration, it will be covered under 7.1a. Okay. So why activity for consideration in the course or furtherance of business. If it is disposal of business asset without consideration, then you need to check additional one condition. What is that? Whether ITC is availed or not. So disposal of business asset for consideration, if ITC is availed, this is supply under 7.1a. If ITC is not availed, this is supply under 7.1a only, whether ITC availed or not, because it is for consideration. Whereas disposal of business asset without consideration, if ITC is availed, supply under 7.1c. If ITC is not availed, it is not a supply. Now this supply part is okay. How to do the valuation for the purpose of payment of GST? We have one 18 subsection 6 and section 15 which talks about the valuation and GST payable. So first we will see 18 subsection 6. What does 18 subsection 6 says? So the GST payable will be highest of the following. First, when 18 subsection 6 will be applicable? I have purchased some capital goods. On purchase of that capital goods, I paid the GST and I availed it as ITC. Now that capital goods is sold. So whenever the capital goods are sold on which ITC is availed, then I have to pay GST in terms of 18 subsection 6. So when 18 subsection 6 will be applicable? Capital goods on which ITC availed is sold. Then we need to pay GST in terms of 18.6. What does 18.6 says? So see, the ITC availed minus depreciation you give, because say you use the asset for 3 years and you are selling, which means how much of ITC you should be eligible? 3 years ka ITC you should eligible, remaining 2 years ITC you should not enjoy, correct or not? So therefore ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of disposal, or GST on sale value, whichever is higher will be taken. Okay. So for example, say this, I am purchasing some capital goods, I am purchasing some capital goods on 15/10/2021 for rupees 10 lakhs plus GST of 12%. Kindly make note. I am purchasing capital goods on 15/10/2021 for 10 lakhs plus GST of 12%. Such capital goods are sold on 25/6/2023 for 6 lakhs excluding GST. Compute GST payable. Compute GST payable. So how do we do computation of GST payable? 18 subsection 6. Why 18 subsection 6? What we purchased? Capital goods on which ITC is availed. GST paid can be availed as ITC, and we will dispose it of sale of capital goods. So then 18 subsection 6. So as per section 18 subsection 6, how to compute the GST payable? A. ITC availed. What is ITC availed? ITC availed 10 lakhs is the value, on that GST is 12%. So therefore ITC availed is 1,20,000 minus 5% for every quarter or part thereof from the date of purchase till the date of sale. What is the date of purchase? 15/10/2021 and 25/6/2023. In GST everywhere we need to take quarter as calendar quarter only, not 3 months as 1 quarter. So therefore calendar quarter means what? 15/10/2021 will come in, so 1 quarter. So that is October, November, December. So that like that we should take quarter or part thereof, 5% for every quarter or part thereof. So therefore 15/10/2021, so October, November, December 2021 one quarter, 2022 full year, so 4 quarters, total 5, 2023 Jan, Feb, March, April, May, June, so 2 quarters, so 5 plus 2, 7 quarters, so 7 quarters you need to reduce. You understood now how we got 7 quarters? So in 2021 it is 1 quarter, in 2022 it is 4 quarters, and in 2023 it is 2 quarters, quarter or part thereof, so 7 quarters. So how much it comes to? 1,20,000 minus 35%. 1,20,000 minus 35% will be 78,000, or B, GST on sale value. What is the sale value? 6 lakhs. 6 lakhs is the sale value. On that sale value, what is the rate of GST? So in the absence of information, we will take the rate of GST on purchase. So here excluding GST, at what rate they have not given. So assuming that at the time of purchase, whatever was the GST, the same GST rate will be there. So into 12%. So 6 lakhs into 12% is how much? 72,000, whichever is higher. So therefore GST payable is what? Therefore GST payable is 78,000. Whichever is higher, 78,000 is what I need to pay as GST. Now, suppose if it is disposed of without consideration, disposed of without consideration, then what should I do? Disposed of without consideration, then what should I do? Disposed of without consideration means this part 6 lakhs is there na, that is not available, then what should I do? Then also 18(6) will be applicable, yes. See, whether you have disposed it of for consideration or without consideration, this 18 subsection 6 will be applicable. So what we need to do is that as per section 18 subsection 6, A will be same. What is that A? 78,000, same as above. Same as above. ITC availed minus 5% for every quarter or part thereof, same as above. B will be, we need to determine the value as per CGST rules. We need to determine the value as per CGST rules that will be given in the question. Open market value or fair market value, like that, it will be given in the question. So you take that value as per CGST rules 2017, say that is 5 lakhs into 12%, that equals to 60,000, whichever is higher, that is 78,000. Now one more situation here. Sold on 13 December 2026 for 2 lakhs excluding GST. Then what we will do? Sold on 13/12/2026 for 2 lakhs. Again 18(6) only, section 18(6) only, because this is capital goods on which ITC is availed. So 18(6) only. So what we will do? A will become 0. How A will become 0? ITC availed is how much? 1,20,000. 1,20,000 minus 5% into how many quarters? How many quarters? You see this 15/10/2021. So therefore in 2021 1 quarter, 2022 4 quarters, then 2023 4 quarters, 24 4 quarters, 25 4 quarters, and 26 also 4 quarters, that is 21 quarters. So 5% into 21 quarters is what? More than 100. So 0. Don't put negative. 0. After 5 years, yeah, it is sold after 5 years. So A will become 0. How 5 years logic? 5% for every quarter or part thereof. So which means full year if you are using 20%. So 2 years 40, 3 years 60, 4 years 80, 5 years 100%. So A will become 0. B will be sale value. What is the sale value? 2 lakhs into what is the rate of GST? 12%, that is 24,000, whichever is higher, that is 24,000 is the GST payable. Understood about 18 subsection 6? So now 18 subsection 6 when applicable, come on. We have capital goods. On that capital goods, ITC is availed and that capital goods is disposed of, sold. So sold for consideration or without consideration, 18.6 will come. Apart from this capital goods, normal cases, it is section 15. So transaction value or value as per rules, on that multiply the GST rate. Only in case of capital goods this will be applicable. But in case of section 15, in case of capital goods, see this, GST payable is highest of the following: original ITC minus 5% for every quarter or part thereof, from the date of invoice till the date of disposal, or GST on transaction value. If transaction value cannot be determined as the supply is without consideration, we need to determine the value as per rule 30 or rule 31 of CGST rules. Now, if you see above, suppose if it is not capital goods, if it is not there, then normally we need to take value of supply as transaction value. What is transaction value? Price involved in the transaction, means the price at which this product or service is given. So that will be taken, provided two conditions are satisfied. What are the two conditions? Supplier and recipient are not related and price must be the sole consideration. Supplier and recipient are not related, price must be the sole consideration. Okay. So then we need to take section 15. Now come back to this chart. Now disposal of business asset for consideration, ITC availed. It is supply under 7(1)(a). If it is capital goods, then we need to pay GST in terms of 18(6). If it is other than capital goods, then we need to pay GST in terms of section 15 transaction value. ITC not availed, then whether it is capital goods or other than capital goods, we need to pay as per 15 only. Why? When 18(6) will be applicable. If it is capital goods on which ITC availed, then only 18(6) will be applicable. Okay. Then again here, without consideration supply 7(1)(c), ITC availed. If it is capital goods, 18(6). If it is other than capital goods, section 15. And suppose if it is ITC not availed, it is not a supply. When it is not a supply, no need to pay GST. But sir, in case of transaction value, we need to have a price. But here it is without consideration. When it is without consideration, where from we have price? We don't have price, no? Correct? We don't have price. Then what we should do? That's where I told you, we need to refer to the rules. Whenever price is not available, as per section 15, we will refer to the rules. So we have various rules. So in that, rule 30 talks about cost plus 10%. Cost plus 10% means cost of production or cost of acquisition plus 10% will be taken as a value. Rule 31 is a residual value determined based on the principles of valuation. Now you can see how this valuation rules are connected to 7(1)(c). In case of 7(1)(c), we have 4: D, R, I, P. D for disposal of business asset on which ITC is availed. There we need to follow, if it is capital goods, 18(6). If it is other goods, rule 30 or rule 31. Got it? Then R, related party transaction. For related party transaction, we have a specific rule, rule 28. If rule 28 fails, then rule 30 or rule 31. Then import of service from related person also same, rule 28. If not, rule 30, rule 31. Principal agent transaction, we have a specific rule, rule 29. If not rule 29, rule 30 or rule 31. This is the applicability. Anyhow, when we discuss the valuation, there we will be learning these valuation rules, but I am just giving you the reference, cross reference of that. Then rule 30 says what? You take cost plus 10%. So what is cost plus 10%? If you are a manufacturer, take cost of production plus 10%. If you are a trader, take cost of acquisition plus 10%. If you are a service provider, take cost of providing service plus 10%. And rule 31 is residual value. So value will be determined by the registered person. So based on the principles of valuation. Now that is this about disposal of business asset. Got the clarity related to this? Now see input tax related restriction here. I am purchasing some raw material. So there is a manufacturer who is purchasing some raw material and converting it into finished product, and that finished product is disposed as gifts or free samples. Is it supply or not a supply? Not a supply. Why it is not a supply? I told you already. So why disposal of business asset will not come? What they are disposing of is finished goods, but they availed ITC on raw material. So that's why it is not a supply. It will not come anywhere, correct? And then on this raw material, can they enjoy the ITC? No, CBIC circular has said that ITC not available on this raw material. So suppose if they have already availed, they need to reverse. Why? Because this is contained in a finished product, and that finished product is not a supply. As that finished product is not a supply, you should not enjoy the ITC on the raw material. So that is given in the CBIC circular. Then another case. Suppose if there is a trader who purchased some goods from the supplier, and the trader is giving the goods free samples. Is it supply under 71C? Yes, where disposal of business asset on which ITC is availed. Now this becomes supply. Can he enjoy the ITC on these goods? There is a blocked credit which says that if any goods are purchased and distributed as gifts or free samples, it is blocked credit in input tax credit. In input tax credit, there are some inward supplies which are considered as blocked credits. Blocked credits means you cannot take ITC with respect to that inward supplies. So therefore what they are telling is that you are making some purchases and you are giving it as free samples. So you should not enjoy the ITC. That is block credit. But here what they are telling, you are distributing it as gift or free samples. If it becomes supply, then you can enjoy the ITC even though it is blocked credit. So it's an exception to blocked credit. Understood? So this CBIC circular says ITC not required to be reversed even though it is blocked ITC under 17 subsection 5. Got it? Now I have not given the CBIC circular separately. I just given it along with the discussion so that easily you can remember it. Okay? But you don't have to write the circular number. So in your study material, they have given lot of circulars. Are you aware? Lot of circulars they have given. I don't know whether you have seen your study material. By any time if you see the study material, no, psychologically you are dead. Because the material is like that. Rare. Lot of things they gave. That is only no material, new material. See the size of that book. After seeing that book size itself, students will get heart attack, no? And thereafter, even old material also the same scenario here. It's a very big book, and no one can read that. So lots of information. Maybe from n number of sources they have copy pasted or what, I don't know. And now why that much information? See, CA final study material is also very big, but at least there the same thing they repeated in 2-3 different places. That's why the book size is big. Okay, but here they have copy pasted everything, clutter, irrelevant and all they have added. Who need goods and the rate of GST on goods? That will not be tested in exam also. That itself will run into some 40 pages, 50 pages. You know, so therefore I can understand that CMA final students will not see the study material. So, but these circulars are given there. Okay, so that's the reason why for CA final whatever books that I have given, that I am not using. I sat and wrote all these things. Keeping your study material, I sat and wrote. This is my handwriting only. Okay, so I did a preparation separately for your sake. For 1 month I sat and I did not do any other work. So I sat and I wrote, okay, what are all the points in study material? So I have written, because typing and all it will take lot of time for me. Okay, that's why I sat and wrote all these things. And this I have just given it for you so that it will be easy. Okay, because CA material means maybe again there could be a contradiction. Here in CMA material that points may not be there. That's why. Okay, fine. Now we are moving on to the next area, that is related persons, which is given in explanation to section 15. So why related persons definition we need to understand, because we have 7(1)(c) related party transaction including transaction between distinct persons. So what does it says? That any transaction between related parties is treated as supply. So we have 9 relationships related to this related party transaction. You need any break or can I continue? 5 minutes break? Yes. So take a small break for 5 minutes, thereafter I will continue with this, okay. Immediate care liya, okay. Mylapore Fine Arts, okay. Saripa. நீ இது ஸ்டடி மெட்டீரியல்ல இருக்கிற சம்ஸ் போடு. சொல்லுங்க பாலாஜி. Okay, we'll start. So this is your question paper pattern for old syllabus. As new syllabus not yet has come, in the sense like question paper, so mostly they will follow the same pattern only. So for old syllabus it is like section A GST, section B customs and FTP. In section A, so part 1 and part 2, MCQ part and descriptive part is there. Part 1 MCQ is for 14 marks, descriptive part is answer any 4 out of 6. So 4 into 14 each, 56 marks, but here 14 marks questions also, fully it will not be 14 marks. So it's like part we will have subparts, 4 marks, 5 marks subparts are there. Then same is the case even in case of customs also, 6 marks for MCQ and remaining 24 marks, that is any 2 out of 3. But here in GST they gave a good choice, two options you have, 2 questions as choice. Whereas in case of customs only 1 question is given as choice. And so but MCQs here what I have observed is they are asking for justification, like 2 marks. So you have to not only write the answer, there is no OMR sheet concept and all in CMA. So like in pen paper mode exam, so like you have to write the option, but you need to give the justification also. So that is something which is important there. So scoring area, if you see, MCQs are okay, direct only, and even practical and also direct only. So easily you can score 60 to 70 marks with little bit of preparation itself. Okay, so that's not a big deal and all, and they are not going deep and asking any questions and all except for 1 or 2 questions. This is based on one MTP released for JUNE23. Okay, so this I have answered, and this also I will share with you. But one more MTP recently released, that is for July exams. So that also, if time permits, I will discuss in this session. If not also, I will record it and I will upload in my YouTube, because for me my objective first is to complete the portion, that's why. So coming back to this, related persons who are treated as related is given under explanation to section 15, and in the total 9 relationships we have, such persons are officers or directors of one another's business. Means what? Say there are 2 parties, 2 companies, X and Co and Y and Co. So X and Co is owned by Mr. X and Y and Co is owned by Mr. Y. Now, so X is appointed as officer in Y and Co and Y is appointed as officer in X and Co. So such persons, who are such persons here? X and Y are officers or directors of one another's business. So one another's business, they are officers and directors. So therefore X and Y will be treated as related. Then second point is, they are legally recognized partners of a firm. There is a partnership firm P, Q, R and Co. 3 partners P, Q and R. So P and Q are related, Q and R are related, and P and R are also related. Okay, but they use the word legally recognized partners, which means that partnership deed should be registered. Okay, then only they will be called as the legally recognized partners. Whether these partners and firm are related, no. They use a word, they are legally recognized partners of a firm, but firm and partners nowhere it is given as related. They are employer and employee. Employer and employee are always treated as related. And related to this employer-employee, we need to understand the GST implications. So total 4 points are there, which comes in different places. I am just connecting these 4 points now. So first point says that services by employee to employer in the course of employment. I am just writing it for your reference purpose. Okay, if you want also you can make note, but anyhow that is there in the chart. Okay, but I am connecting these 4 points. First I am giving you 4 different provisions which is given in different places. So services by employee to employer, employee to employer in the course of employment, in the course of employment is excluded from supply, is excluded from supply under section 7 subsection 2. This is one point. Another point is employer and employee are treated as related. So supply between them will become supply under 7(1)(c) even though without consideration. Then third point is that gifts by employer to employee, not exceeding 50,000 per annum per employee, not a supply. Then fourth point, perquisites given by employer to employee not a supply if it is mentioned in offer document. If it is mentioned in offer document. So usually salary offer document will be given na. If it is mentioned in that salary offer document, it will not be treated as supply. So these are the 4 different provisions here, and these 4 different provisions I am just connecting it into 2 charts. Supply by employee to employer, supply by employer to employee. First way, employee to employer, it can be goods or services or only services, because why employee will be giving goods to the employer, only services. So services by employee to employer, so that is divided into 2, only services in the course of employment or not in the course of employment. If it is in the course of employment, it is excluded from supply under 7 subsection 2 read with schedule 3. This is the first point that I have applied. So services by employee to employer in the course of employment, they get a salary. On salary there is no GST, that is this part. What if it is not in the course of employment? Then there is no employer-employee relationship. When there is no employer-employee relationship, you need to check, is it in the course or furtherance of business or not in the course or furtherance of business. If it is in the course or furtherance of business, again for consideration or without consideration. If it is for consideration, it will become supply under 7(1)(a), because 7(1)(a) says what? Any activity for consideration in the course or furtherance of business. So here we need to understand that, say there is a cost accountant who joined as finance manager of a company, and being a finance manager, they are getting some salary, and that salary will be excluded from supply. And so that cost accountant also has very good network. So therefore what he did, to all the employees over there in that organization, he is doing the income tax return filing also separately at 500 rupees for one income tax return. Now is it in the course of employment? No, not in the course of employment. But is it in the course or furtherance of his business? Yes. Is it for consideration? Yes. So therefore it will become supply under 7(1)(a). Suppose if that company asks this person to do some work on deputation basis. So actually this is not as per his employment contract, but he is doing that work for which the company pays some money. Again it will come under supply 7(1)(a), because it is not in the course of employment but in the course or furtherance of business. For consideration, supply under 7(1)(a). What if it is without consideration, not a supply? Why not a supply? Because there is no employer-employee relationship. Without consideration, 7(1)(c) won't it come? No, it will not come. When 7(1)(c) will come? Only if they are related. But the moment if it is not in the course of employment, it is not employer-employee relationship, that's why not a supply. What if it is not in the course or furtherance of business? Already we saw in the summary, for 7(1)(a) or 7(1)(c), it should be in the course or furtherance of business. So yeah, if it is not in the course or furtherance of business, it is not a supply. Then second aspect is supply by employer to employee. When employer is giving it to employee, it can be both goods or services, for consideration or without consideration. Example, employer provide lunch facility to the employees and collect some nominal amount, will provide cab facility or bus facility to the employees and collect some nominal amount. So that will be coming under for consideration. So it will be supply under 7(1)(a). Suppose if it is without consideration, supply by employer to employee without consideration, then we need to check is it perquisite or gift. If it is perquisite, we have 1 point. What does it say? Perquisites given by employer to employee is not a supply if it is mentioned in the offer document. What is the difference between perquisite and gift? That is only the difference. Usually perquisite it is covered under offer document and gift is not covered under offer document. So perquisite will not be covered under supply because perquisite forms part of salary. Usually income tax, perquisite form part of salary. Anything that forms part of salary is actually excluded from supply under GST because salary is excluded. Then what if it is gift? For gift we have 1 point. So we need to check what is the value of the gift. As employer and employee are treated as related, any transaction between them will be treated as supply, but we have an exception for gift. For gift up to 50,000 per annum per employee, not a supply. What if the value of gift exceeds 50,000 per annum per employee? Fully it will be treated as supply. So per financial year per employee, if it does not exceed 50,000, not a supply. If it exceeds 50,000, entirely it will be treated as supply under 7(1)(c). How to do the valuation? We need to do the valuation as per rule 28 between related parties because employer and employee related na. So we need to do valuation as per rule 28. Now here also 1 point is there, that is related to input tax credit. See this, there is an employer who is giving gift to employees smartphone, and this employer purchased this smartphone from Flipkart by paying 49,000 plus 18,000 GST, 57,820. Now, so ITC is not available to the employer. Why ITC not available to the employer? Because any goods are purchased and given as gifts or free samples, it will not be supply, correct? So ITC not available. So is employer giving the gift value exceeds 50,000 or does not exceed 50,000? Does not exceed 50,000. But sir, 57,820 exceeds 50,000 na. While computing value, don't add GST. So because we have value of supply where when we take inclusions, so taxes, duties and cess by whatever name call other than GST only we will add. GST we will never add to the value. So therefore the moment you say value, it will be excluding GST. So what is the value excluding GST? 49,000. So 49,000 exceeds 50 or does not exceed 50? Does not exceed 50. So it is not a supply. That's why ITC not available. Suppose if the mobile is 55,000, then will it become supply here? So can employer take ITC? Yes, even though it is blocked credit. Understood? What is the exception to the blocked credit here? Generally purchased goods distributed as gifts or free samples is blocked credit. However, if that gifts or free samples becomes supply, then they can take ITC on the purchases even though it is a blocked credit. So see, that is the next case. Suppose if the mobile price is 52,000 plus 18% GST, so this gift will become supply under 7(1)(c), and consequently ITC is available to the employer as per CBIC circular. And here, as it is supply under 7(1)(c), should we go for rule 28 or 18 subsection 6? Because 18 subsection 6 also will be applicable here. Capital goods purchased, on purchase of capital goods, they have availed ITC and disposal of capital goods. So means 18(6) will be applicable. But what they are telling is that, so as rule 28 is a specific provision and 18 subsection 6 is general, so therefore we need to prefer specific over general and we need to follow rule 28 only. So this is based on one advanced ruling which is given in the study material. Okay. So therefore which one we need to follow, 18 subsection 6 or rule 28? Rule 28. We need to follow rule 28 in this case. So therefore we have come across so far 3 points in related. So what is the meaning of related? Such persons are officers or directors of one another's business. They are legally recognized partners of a firm. They are employer and employee. Then fourth one, any person directly or indirectly owns, holds or controls 25% or more of the outstanding voting stock or shares of both of them. What is this? See, Mr. A has invested 30% in X Limited and invested 25% in Y Limited. Two companies with a common shareholder holding 25% or more in both of them, these two companies will become related. Why? What is the logic behind it? If X Limited needs to take any decision without Mr. A's voting right, X Limited cannot take, because special resolution is required only if the votes are 75%, more than 75%, correct or not? If 25% itself Mr. A is having, how X Limited can take any decision without A's approval? Same way Y Limited cannot take any decision with A's approval. Means if any transaction takes place between X Limited and Y Limited, definitely Mr. A is going to influence the transaction because he is having the substantial interest 25%. So that's the reason why this is a related party transaction. How X Limited will know that A has invested 25% in Y Limited? So based on the disclosure requirements under Companies Act, so A has to disclose with every company. If he has invested more than 25% with one company, he has to disclose that fact with all the companies, substantial interest disclosure. Okay, so that is this. Then next one, another case, Mr. A is investing 40% in P Limited and P Limited has invested 70% in X Limited. What is the indirect investment of A in X Limited? 28. How? Because A has invested 40 in P. Anything that P does, in that 40% belongs to A, correct? So what is the investment by P Limited in X Limited? 70. Out of that 70, 40% is what? 28%. So therefore, Mr. A has invested 28% in X Limited indirectly, and directly A has invested 25% in Y Limited. Whether they both are related? Yes. If you see the wording, any person directly or indirectly. So owns, holds or controls, that's the reason why X Limited and Y Limited will be treated as related. Then, so what is that you need to remember for fourth point? Two companies with a common shareholder holding 25% or more makes those two companies related. One person directly or indirectly controls the other. Control is not defined in GST, but general meaning of control is investment more than 50%, or majority common board of directors, or controlling operations through an agreement. Okay, if these three, any of these three is there, then there exists a control. So investment more than 50 or majority common board of directors, two companies having two common directors out of three directors. For example, X Limited is having A, B, C as directors and Y Limited is having A, B, D as directors. So now A and B are common between these two, majority common. So these two companies will be treated as related. Then controlling operations, investment or majority board of directors not required, but controlling the operations of one company will also be treated as control. Then sixth point, two persons are under the common control. That is, X Limited is controlled by A Limited. Y Limited is also controlled by A Limited, but X is not controlling Y or Y is not controlling A. But these two are under the common control of a third person. That's why these two people will be treated as related. Okay. So two companies with a common parent, will be treated as related. Then together they can control a third person. X Limited has invested 35% in P Limited. Y Limited has invested 20% in P Limited. Individually, X Limited is not controlling P Limited, Y Limited not controlling P Limited. But if you take cumulatively X Limited and Y Limited, it exceeds 50%. So therefore, these two companies controlling P Limited, you understood? These two companies together, they control P Limited. That's why these two companies are related. If that be the case, all the shareholders of a company will be treated as related. No sir, not necessary, because relationship we need to see at any given point of time between two parties, supplier and recipient. Okay, so generally also relationship we see between two parties only. More than two parties, if there is a relationship, that is something else. Okay, so supplier and recipient you need to take, and between supplier and recipient you need to see the relationship, and that's why only two parties. So take any two shareholders of the company, between those two shareholders together, if they are controlling the company, those two shareholders are treated as related. Then they are members of the same family. Family is defined under GST, spouse and children whether or not dependent. Whereas parents, grandparents, brothers and sisters, if they are wholly and mainly dependent on that person, whether in-laws are considered as family, whether in-laws, son-in-law, daughter-in-law, mother-in-law, father-in-law considered as family under GST? No. So we don't have in-laws, means in-laws are not treated as family. And also for a grandfather, grandson is not family, because see, children is only given, grandchildren is not given. So for a grandfather, grandson is not family, but for a grandson, grandfather is family, grandparents, if they are wholly and mainly dependent. Okay. Then sole selling agent or sole distributor. When a person will be called a sole selling agent, if there is a manufacturer who is making all supplies through a distributor, and to the retailers they make supplies only through one distributor, then the distributor will be a sole selling agent. So means only one person should be there and all the transactions should be routed through them only, then they are called as sole selling agent who are related to the manufacturer. Suppose if the distributor is appointed, few transactions are made through this distributor and directly also manufacturer will make transactions to the retailer, then this distributor is not called as a sole selling agent. So for sole selling agent, two conditions are there. Condition number one, only one person should be there, and condition number two, all the transactions should be routed through them only, then they are called as sole selling agent. Then illustration on related, see this, Mr. X is located in India and his son is located in India, not dependent on X. X is making supply to his son. Is it a related party transaction? Yes, because son, whether or not dependent, treated as related. Now X is outside India, not dependent on his son, and his son is located in India. Now he is importing services. When you are importing service, from whose perspective you need to see? Recipient. So for recipient, his father is related or not? Father will be related when? Only if he is dependent. Parents, grandparents, brothers and sisters treated as related only if they are wholly and mainly dependent. So in this case, father is not dependent, so therefore it is not an import of service from a related person. Understood? So in case of normal transaction, you need to see from supplier point of view, so that's why we need to take person as here supplier. But in case of import of service, we need to see from recipient point of view, that's why we need to take the person as the recipient here. Got it? And we need to interpret. Then distinct persons, already I told you who are treated as distinct persons. So what is that? One registration to the other registration. So in R includes distinct persons also, related party transactions including transaction between distinct persons. Now see this, whenever aggregate turnover of a person exceeds the threshold limit, so R they are compulsorily required to get registered, and they are liable to get registered if they are doing business in multiple places. In each state from where they are making taxable supplies, they need to mandatorily get registered. For example, I am doing business in 3 states, Tamil Nadu, Andhra Pradesh and Karnataka. Now I should register in all the 3 states from where I make taxable supply. There is no option of single registration. However, when I am doing business in the same state but multiple places, say Chennai one business, Tiruchi one business, Madurai, Coimbatore another business, 4 places of business. Now I have an option whether I can go for single registration, means all these 4 places of business I can have a single registration, or I can go for separate registration with respect to each place of business. Now if I go for separate registrations, then one registration to the other registration will be treated as transaction between distinct persons. Understood? So in which cases I will go for separate registrations? If I am doing business in multiple states, there will be separate registrations, or within the state multiple places of business if I have opted for separate registrations. Okay, how do we know whether they are distinct persons or not? Usually for every registration number, permanent account number will be common. For example, you see this GSTIN. So in this GSTIN, within the same state, so 33, which means within the same state, they are doing business, and entity code changes but the permanent account number will be same. Again 30, different state. 30 means different state. First 2 digits will be state code. GSTIN is a 15-digit number. In that 15-digit number, first 2 digits will be state code, next 10 will be permanent account number, next will be entity code, then alphabet Z, constant, and a checksum digit. Now, whenever the state changes, the first two digits will change. And within the state, if they go for separate registration, the entity code will change 1 and 2. But what will be common in all these things? Permanent account number will be common. That's why they are treated as distinct persons. Then we are moving on to exclusions from the meaning of supply. So what are excluded from the meaning of supply, you can see in page number 17. If you have, you can just scroll 2 pages and see. So we completed 7 subsection 1 and 7 subsection 2, exclusions from the meaning of supply. So remember a keyword spelled slow. S for sovereign functions, that is government activities. Whether all government activities are excluded from supply? No. Only activities other than Department of Post, airport or port services, then services to business entities, and transportation of goods or passengers. So these 4 are only covered under supply. All other activities of government is excluded from supply. Okay. So what are the 4 activities of government which is covered under supply? You can see here: Department of Post, transportation of goods or passengers, airport or port, service to business entities. These 4 activities covered under supply, excluded from supply. Covered under supply. Apart from this, all other activities are excluded from supply, government activities. Then P for post. Post means government post, nominated post, constitutional post. Government post means MLAs, MPs, etc. Constitutional post means president, governor, etc. Nominated post means a board, RBI governor, then we have SEBI chairman. So government board for which the head will be appointed by government, that is nominated post. Then A for actionable claims other than lottery, betting, gambling. Already we discussed that. So only 3 actionable claims are covered under supply, that is lottery, betting and gambling. Another next L for legal fees. Legal fee means fee collected by court or tribunal. Usually court or tribunal will be collecting some court fees, on that there is no GST. Then next L you can see land sale. Sale of land is excluded from supply. Land, because it is immovable property, and even sale of building is also excluded from supply. But when sale of building is excluded from supply, if entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. That is, suppose if there is a apartment which is under construction. Now if you buy that apartment, there will be GST on that. Suppose if the apartment is complete, ready to occupy, means completion certificate already we have obtained. Now if you buy that particular apartment, then it will not be having any GST because it is excluded from supply. So when sale of building is excluded from supply, when entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. CC means completion certificate, FO means first occupation. In some places they will be calling it as completion certificate. In Mumbai and all, if you go, they will be calling it as occupation certificate. That's why completion certificate or first occupation, whichever is earlier. Then employee to employer in the course of employment, E, already we have seen that. D is death related, that is funeral, burial, crematorium, mortuary, including transportation of the deceased. So all post death activities, at least after death they should be happily going. So that's why they are telling like no GST on that, it is excluded from supply. Then slow, that is yes, sale before import. Sale before import means high sea sale, that is the goods are in transit. When the goods are in transit, I am giving the document of title to you. So which means that, so I got money, but I am not the importer now. Who will be importer? You will be the importer. Anyhow, you are going to pay customs duty along with IGST. That's the reason why I am excluded from supply. Okay, that is known as sale before import. You can see that in the previous page I have given. So Mr. A is an original importer. He will buy from a foreign seller. He gets a bill of lading or airway bill. That is called as document of title to the goods. Now what he will do? He will transfer the bill of lading or airway bill to Mr. B when the goods are in transit. Understood? Now he gets some consideration. He is not required to pay GST on that consideration. Who is not required to pay GST on that consideration? Mr. A, original importer. Why? Because Mr. B is going to go to the customs department, file the bill of entry and gets the goods on payment of customs duty including IGST. Suppose if A also pay GST and again B also pay GST, there will be double taxation on Mr. B. To eliminate the double taxation only, they are excluding it from supply. So what you need to remember, any sale that takes place before import by transfer of documents will be excluded from supply because importer is going to pay the customs duty. Then same way another point, L, liquor license granted by state government. So state government will be giving license to sell liquor, for which they will be collecting some license fee. That license fee collected will be excluded from supply. Then O, outside the country movement of goods, that is seller in India, buyer also in India. Goods originates outside India, terminates outside India, that is excluded from supply. Then warehoused goods sold. So warehoused goods under customs. So what is that? See the previous example. Mr. A is a original importer. He imported some goods and those imported goods are deposited in the customs warehouse without payment of customs duty. And now what he is doing, he is transferring the warehouse receipt to Mr. B, for which Mr. B will pay the consideration, that is excluded from supply. Why is it excluded from supply? Because Mr. B is going to pay the customs duty along with IGST. What is the difference between high sea sale and warehouse goods sold? In high sea sales, the goods are sold before import, whereas in warehoused goods, the goods are sold after import, but when the goods are kept in the warehouse. That is the difference. But in both the cases, the subsequent buyer is only going to pay the customs duty. So the original importer is excluded from supply. That is about warehoused goods. Okay. So which we have seen here. These are all the exclusions from supply. And related to that immobile property, sale of building, already I gave you. So suppose if consideration is received before completion certificate, is it covered under supply or not? Yes. And we need to pay GST on that. And if consideration is received after obtaining completion certificate, whether it is covered under supply or excluded from supply, no need to pay GST. Suppose if part consideration is before and part is after, then yes, GST payable, because what does exclusion says? If entire consideration is received after obtaining completion certificate, then it is excluded from supply. If part consideration before and part consideration after, it is not excluded from supply, covered under supply, chargeable to GST on entire value. Even though that amount which is received after completion as well as before completion, on entire consideration, GST is payable. What is this? First occupation. See this, a person has commenced construction on 2010-2019. And the first occupation means out of these 50 flats booked. So by the time one person has occupied one flat, so 50 flats were booked, means 49 people not occupied, one person has occupied. And thereafter 40 flats got booked before completion certificate. Completion certificate we will get for the project only when all the buildings or all the flats in that project is completed. Then thereafter flats booked is 20. Now which will be taken as the completion date? So first occupation date or completion certificate date, whichever is earlier. So therefore 18 to 2020 will be taken as the completion date. As on this date, how many flats got booked? 50 flats. So GST payable only on those 50 flats. What about the remaining flats? This 40 and 20, no need to pay GST because that will be after completion certificate or first occupation. Therefore it is excluded from supply. Got it? Then look into one CBIC circular related to movement of conveyances between distinct persons. So this is generally any transaction between distinct persons will be treated as supply and chargeable to GST. However, if there is a conveyance, that conveyance is taking the goods or spare parts from factory, one factory to another factory of the same person, no need to pay GST on the lorry. But on the goods inside that lorry, we need to pay GST. No need to pay GST on the lorry. Even that spare parts are not for further supply, but for consumption in the factory. So then, not for further supply, not for further sale. On that also, no need to pay GST. Now, if you see, Ford Limited having a factory in Tamil Nadu is sending the goods from factory in Tamil Nadu to factory in Gujarat. And so, in this lorry, so there are goods, spare parts. So value of lorry 8 lakhs, value of goods inside that lorry 25 lakhs, value of spare parts will be 6 lakhs. Whether GST payable on the lorry? No. Whether GST payable on the goods inside the lorry? Yes. Whether GST payable on the spare parts? No. GST not payable on the spare parts. Then again, from factory in Gujarat to workshop in Maharashtra, they are taking the lorry for repairs. Whether GST payable on the lorry? No. On movement of conveyance between distinct person, GST not payable. Again, from Ford Limited workshop in Maharashtra, they are sending the lorry after repairs to Ford Limited factory in Tamil Nadu. Now, this will be coming under GST. Again, lorry no GST, but the workshop in Maharashtra is providing the repair services. On that repair service alone, 2 lakhs GST will be there. So, in this case, there are two invoices. Invoice number 1 raised by Ford Limited Tamil Nadu to Ford Limited Gujarat. For what value? 25 lakhs. 25 lakhs. And which can be taken as ITC by Ford Limited Gujarat. Then second invoice who will raise to whom? Ford Limited workshop in Maharashtra will raise invoice to Ford Limited factory in Tamil Nadu. That second invoice. So that second invoice is for 2 lakhs plus GST, which factory in Tamil Nadu can take ITC. Understanding this? So what are the 2 points you need to remember in this? Come on. Any transaction between distinct persons treated as supply under 7(1)(c) and chargeable to GST. However, in case of movement of conveyances between the distinct person and movement of spare parts not for further supply between the distinct persons is not chargeable to GST. So then we are moving on to section 8, composite supply and mixed supply. So these are the two definitions that we have for composite supply and mixed supply, and we need to understand what is the difference between composite and mixed supply. You can see there, composite supply means supply made by a taxable person to a recipient consisting of 2 or more taxable supplies. Okay, and mixed supply means 2 or more individual supplies. So what is the difference between composite and mixed supply? In composite supply, all the supplies involved will be taxable, but in mixed supplies it can be taxable or exempted. Okay, and which are naturally bundled in the ordinary course of business, whereas here which does not constitute a composite supply means not naturally bundled. And in composite supply, one of the supply should be principal supply, but that is not required in case of principal supply. So if 3 conditions are satisfied, it is called as a composite supply. First of all, when we will apply composite supply, mixed supply concept, when there are 2 or more supplies in a single transaction. What is the purpose of applying composite supply, mixed supply concept? To determine the rate of GST. In a single transaction, if there are more than one supply, the rate of GST will differ. When the rate of GSTs differ, which rate should be taken? There will be a confusion. So for that purpose only, we have this composite supply, mixed supply. So 3 conditions satisfied, it is a composite supply. What are the 3 conditions? All the given supplies should be taxable, naturally bundled in the ordinary course of business, and principal supply is identifiable. So taxable means you can understand. What is naturally bundled? One cannot be supplied without the another. That is known as naturally bundled. For example, you go to a cinema theater and have popcorn plus coke. Popcorn plus coke, naturally bundled or not naturally bundled? Not naturally bundled, because you can buy the popcorn separately, coke also separately. So therefore it is not naturally bundled. AC plus installation. AC, when you are buying, they will do installation also. Then only it will be covered under warranty. Naturally bundled or not naturally bundled? Naturally bundled, like that. One cannot be supplied without the another, is known as naturally bundled. And principal supply means out of these, one supply should be major supply and the other will be ancillary. So in AC and installation, what is a major supply? AC, and installation is ancillary. So if these 3 conditions are satisfied, it will become composite supply, and price may be single or separate, that is irrelevant. So what we will do, if it is a composite supply, we will take the principal supply rate and apply it on the entire transaction. Okay, then what is mixed supply? Mixed supply is not a composite supply, means any one condition not satisfied or all the conditions not satisfied. Okay, either it has a combination of taxable and exempted, or all are taxable but not naturally bundled, all are taxable and naturally bundled but principal supply not identifiable, then it is not a composite supply. For mixed supply, only one condition, there should be a single price. Only when there is a single price it will be a mixed supply. So you can see the difference here. Composite supply and mixed supply type of supplies all are taxable, but here taxable are exempted or non-taxable. So already this question in old syllabus they have asked one theory question. Distinguish between composite supply and mixed supply. Okay. So composite supply all are taxable, mixed taxable are exempted or non-taxable. And how the price should be in case of composite supply, either single price or separate price, but in case of mixed supply price should be always single price. And naturally bundled composite supply, yes it is naturally bundled, but mixed supply not naturally bundled. Principal supply is required in case of composite supply but not required in case of mixed supply. And rate of GST, which rate we will take in case of composite supply? Principal supply rate. If it is mixed supply, what we will do? We will take the highest rate. So out of the given supplies, which is having highest rate, that will be taken. Okay. Now how to apply this in exam? Checklist, simple. First you need to see whether there are two or more supplies in a single transaction. Yes, two or more supplies in a single transaction. If it is no, then leave it. Section 8 will not be applicable. So there should be two or more supplies in a single transaction. Now three conditions. All are taxable, naturally bundled in the ordinary course of business, principal supply is identified. If everything is yes, it will be called as composite supply. If it is composite supply, what we will do? We will take the rate of principal supply. Out of these three, if any one is no, then it is not a composite supply. Wait, it is not a composite supply. Check there is a single price or not now. If it is single price, it will become mixed supply. So we will take the highest rate. What if there is no single price? It is neither composite supply nor mixed supply. It will be individual supplies taxable at the respective rates. Because price is not single now, means separate price is there. So it will be taxable at the respective rate. Understood? So either it will be composite or it will be mixed or it will be individual. So this flow chart we need to apply, then we will arrive at the answer properly. Okay. Then now we are coming back to section 7 subsection 1a. What we have seen is 7 subsection 1 inclusion, 7 subsection 2 exclusions, and then section 8 composite supply, mixed supply. Now we are looking into classification of supply into goods or services. Once an activity becomes supply, then we will come into the classification. Now in the classification you need to remember, so few key points. Is it in relation to movable property? Yes. Is there a transfer of title or a transfer of right to use? If there is a transfer of title, it is supply of goods. If there is a transfer of right, it will be supply of service. For example, I have a car, movable property. So when it will come under goods, if I am transferring the title, supply of goods. If I am giving it on rental basis, it will be supply of services. The transfer of title may be at present or at a future date. What does it mean? So it may be at present, that is as on today, or it may be at a future date, hire purchase. In case of hire purchase, title I will not transfer today, I will give possession, but the title will be transferred at a future date. So it will also be treated as supply of goods. Then immovable property will never come under supply of goods because goods excludes immovable property. But when it will come under supply of service, if there is a transfer of right to use immovable property like renting of immovable property or bringing into existence an immovable property like construction of road, construction of building, construction service will come under supply of service. Then third, intellectual property rights, example copyrights, trademarks, patents, etc. If there is a permanent transfer of IPR, it will be supply of goods. So temporary transfer of IPR, supply of service. A music director who composed the music and gives it to a producer is not a permanent transfer. It will be temporary transfer because they will be using the same music for other movies also, for which they will be getting some money. So that will be temporary transfer, supply of service. But suppose if I made a patent and I transferred that patent to a manufacturer, I got a lump sum amount from the manufacturer, permanent transfer, that will be supply of goods. Then carrying out process on the goods belonging to other person. So see what happens here is that, so supplier and recipient is there, recipient gives the raw material and supplier will give the processed goods, okay, and raw material to be purchased by the supplier. As per the contract, who should buy the raw material? Supplier. But who gave it? Recipient gave it. Then as per the contract, supplier should purchase material for processing, but it is supplied by the recipient. Then supply of processed goods fall under the supply of goods. What does it mean? Simple here. That is, I am a tailor. You give me cloth. So substantial material, who should give as per contract? Recipient. I did the stitching and I gave the ready-made garment to you. Is it supply of goods or supply of service? Supply of service. As per contract, I have to buy the material. I will buy the cloth. I will convert it into garment, but some materials you are giving, like extra buttons, hangings, danglings, etc. you are giving. Just because you give some material, will it become supply of service? No, it is still supply of goods. If the substantial material is to be purchased by the supplier and process it and give it to the recipient, it is supply of goods. If the substantial material needs to be given by the recipient on which the supplier is required to do the process, it is supply of service called as job work. Okay. Then, so if the recipient is registered, we call it as job work. If the recipient is not registered, we call it as some other services. So for job work, what is the condition? Substantial material should be given by the recipient on which the supplier will do the process. And so in this, the recipient should be registered. Then it will be called as job work. Then next, transactions involving both goods and services. How to classify that? There are three notified activities which will always be treated as supply of service. That is works contract, supply of food and information technology software. These three are always treated as supply of service, even though it involves both goods element and service element. In works contract, what will happen? There will be supply of goods as well as supply of service in relation to an immovable property for a lump sum consideration. For example, you have one compound wall to be constructed. Now you are asking me to construct the compound wall. I will buy the material required for construction and I will also do the construction and I will hand it over the compound wall to you. Correct? Now I am supplying both goods and services for a lump sum consideration in relation to an immovable property. It is called as a works contract. Even though it involves both goods element and service element, but it will always be treated as supply of services. Then in supply of food, what is the goods element? The material purchased for making the food is the goods element. Cooking, it is the service element. Even though it involves both goods and service element, it will always be treated as service. Information technology software. Software can be given over a link to download, or it can be copied in a pen drive and given. Whatever it may be, software will always be treated as supply of service. Apart from these three, any other transaction, if it involves both goods and services, how to classify? So we need to apply composite supply, mixed supply concept. For example, AC plus installation you take. AC plus installation, AC is goods, installation is service. Is it composite supply or mixed supply? Composite supply. What is the principal supply? AC. Goods or services? Goods. So entire transaction will be supply of goods. Got it? Then beauty treatment plus cosmetics used in the beauty treatment. Composite supply or mixed supply? Composite supply. The moment they do beauty treatment, they have to use the cosmetics without using like that they will do then they will use cosmetics. So therefore, definitely it will be composite supply only, naturally bundled in the ordinary course of business. Now in this case, what is the principal supply? Beauty treatment. Cosmetic is not the principal supply. Beauty treatment is the principal supply. If that is required, I can buy the cosmetic and I will do it in my home also. Now why will I go to that place? So therefore, beauty treatment is the principal supply. So beauty treatment is service. Cosmetic is goods. Goods. So what is the principal supply? Service. So entirely it will be treated as supply of service. Then replacement of parts and labor charges for replacement. So now where it will be coming? It is not composite supply, it will become mixed supply. Why sir it will become mixed supply? Because when you go to a mechanic, so you will be giving him the parts. You will buy the parts and give it to him and he will do the replacement, installation, etc. and all. Or you can make him also to buy and install. Correct? Yes or no? Then it is not always naturally bundled. Therefore, it will be coming under mixed supply. What is the highest rate? Replacement of part is goods and labor charge is service. Highest rate is what? Replacement of parts, goods. So entirely it will be treated as supply of goods. Then video lectures plus pen drive. Video lectures 18%, pen drive 12%. Video lecture is service, pen drive is goods. Naturally bundled or not naturally bundled? Not naturally bundled, because there is another product called Google Drive. Means without pen drive also you can buy the video lectures. Okay. Now in that case, so it is not naturally bundled. And what is the highest rate here? 18% video lecture, so which is services, so entirely it will be treated as supply of service. So if it is composite supply, if principal supply is goods, entirely it will be goods. If principal supply is service, entirely it is service. And if it is mixed supply, if highest rate is goods, entirely it is goods. If highest rate is service, entirely it will be service. Understood? Apart from this, any other activity, balancing figure, sixth point. Apart from this, any other activity will come under supply of service. Doing an act, not doing an act, tolerating an act. For example, I am taking classes. It is not movable property, not immovable property, not IPR, not carrying out process, not notified transaction. So other cases, doing an act, it will come under supply of service. What is this not doing an act? Non-compete fees, not starting a competing business. That is an example of not doing an act. Tolerating an act, breach of contract. I entered into contract with you, you breach the contract, I am tolerating your act of breach for which I am collecting some damages. So that will also come under supply of service. So we completed two sections, section 7 and section 8, and these are the basic points which we need to always apply in every transaction and check whether it is supply or not. Then some important circulars related to supply, taxability of tenancy rights. So in order to understand the taxability of tenancy right, we need to understand the renting of immovable property. Renting of immovable property divided into two, residential property and commercial property. So kindly make note of this chart because there is an amendment in this place. Renting of immovable property divided into two, residential property, commercial property. Renting of immovable property, renting of immovable property divided into two, residential property and commercial property. Residential property and commercial property. Residential property and commercial property, how we will know the distinction? Based on the construction. At the time of construction itself, we will know whether it is a residential property or commercial property. Residential property again divided into two, for residential purpose, or for commercial purpose. For example, I have a house that I am giving on rent to a family to stay. That is a residential purpose. I have a house which I am giving on rent to a doctor to run his clinic, or to a chartered accountant or cost accountant company secretary to open their office. So residential property given for commercial purpose. Then commercial property can be given for residential purpose or commercial purpose. Commercial property always will be taxable here. Let it be for residential purpose or commercial purpose, it will be taxable. Previously, we had an exemption. If the value of supply does not exceed 1000 rupees, it is exempted. If it exceeds 1000 rupees, entirely taxable like that. Now it is not there. Fully it will be taxable. Okay. And renting of commercial property for commercial purpose is always taxable under FCM. So literally renting of commercial property will be taxable always. And who will pay GST? Supplier will pay GST. Then renting of residential property for commercial purpose. So this is also always taxable. We don't have any exemption with respect to this under FCM. Whereas renting of residential property for residential purpose to registered person and unregistered person, divide it into two, to registered person, unregistered person, registered person and unregistered person. If it is to registered person, it will be taxable under RCM. This is a new amendment. Previously, renting of residential property for residential purpose will be always exempted. But now renting of residential property for residential purpose to a registered person is taxable under RCM, and to unregistered person is exempted. Now, when renting of immobile property will come under RCM? Remember RRRR. Renting of residential property for residential purpose to a registered person will come under RCM. Understood? So, renting of immobile property will come under RCM if it is residential property given on residential purpose to a registered person. Only one case it is exempted. Which case? If it is residential property given on rent to unregistered person, so then it is exempted. So then commercial purpose, residential purpose, all those things, remaining cases it will be taxable. So this is the updated chart that you need to keep in mind. Okay. And here I am just making the change. Renting of immobile property, so for commercial purpose taxable, and here this point is not there. Okay. So now it will always be taxable. It will always be taxable. It will always be taxable. Whereas here commercial purpose, so all these are taxable. Here when it will be exempted, here we have a classification. What is that? Classified into two, that is registered person, unregistered person. So unregistered person is exempted, always exempted. Registered person is now taxable under RCM. Now listen, if there is a chartered accountant or a cost accountant or a company secretary, they usually take a house and run the office, correct? Usually these professionals, because they should not display the board and all. So what they will do, they take a house and they will open an office. Now house means residential property, and in that house itself they will stay and they will also put a board, correct? What they will do, front area alone they will make it like a office, and back side, so they will stay, and they will, whenever they want to meet a client, they will come and meet the client, and in front article students, one or two article students will be sitting. This is a typical setup is. Now in this case they are taking it for what purpose? Residential purpose, but they are registered, so it will come under taxable RCM. It will come under taxable RCM. But what if they are using it only for their residential purpose? Office separate, house separate, but they are registered. Again I am repeating. For example, you take myself, I am a registered person. I have an office which is separate, and I have house. In my house no office. My wife don't like that. You know, she says office should be office and house should be house. So when I take a house on rent and I am a GST registered person, so will it come under RCM? No, because even though registered person takes a house on rent for his family stay, it is as good as taken on rent by a unregistered person and it is exempted. Because individual, for individual only this problem will come. Why company will take house for stay? Company will have wife, children and all. No. So only for individuals. So individuals only this problem will come. Individual who is registered person, who is taking the immobile property on rent, but purely for family stay, then in that case it is as good as renting to a unregistered person and it is exempted. Understood? Then this is the taxability of renting of immobile property. Now transfer of tenancy right we will see. So what will happen? There is a property owner, and that property owner enters into lock-in agreement with tenant A for a period of 3 years. And as per this lock-in agreement means 3 years, property owner cannot ask tenant A to vacate, and tenant A also cannot vacate the property. Now tenant A will pay security deposit and rent. So security deposit is not treated as consideration, so no GST, and rent will be taxable based on above chart. Now here what happens is that this tenant A transfer the tenancy right to tenant B, because he cannot vacate the property, but he can transfer the tenancy right to another tenant. So he transferred the tenancy right to tenant B, for which tenant B is paying a premium of 80,000 rupees. Why? Because tenant A would have developed the property for his business purpose, which expenditure again tenant B is not required to incur. So tenant B will pay a tenancy premium of 80,000 rupees to tenant A, and this 80,000 rupees will always be taxable in the hands of tenant A, whatever may be the type of property. Now tenant A will share a percentage of the tenancy premium received with property owner. That taxability depends upon whether the rent of that property is taxable or exempted. If the rent of that property is taxable, then the tenancy premium received by property owner also taxable. If the rent of that property is exempted, then tenancy premium received by property owner is also exempted. So there are two treatments here. So tenant transfers his tenancy right, gets a tenancy premium, always taxable in the hands of tenant, whatever may be the type of property. Out of that, a percentage will be shared with the property owner. So what is the taxability of tenancy premium in the hands of property owner? If the property's rent is exempted, then the tenancy premium for that property is also exempted. But generally exempted only one case, but majority of the cases it will be taxable, correct or not? Only one case exempted, majority of the case it will be taxable. So therefore the tenancy premium received by property owner also will be taxable. Then sir, there is a double taxation. Already on 32,000 property owner will pay, again on this 80,000 also this tenant A will pay. How we need to do that way? Simple. On this 32,000 property owner will pay tax and in turn recover it from tenant A. Tenant A will take it as ITC, and tenant A will recover GST on 80,000 and will adjust this. So effectively they will pay GST only on the difference. So input tax credit system is there. Renouncement of tenancy right. Renouncement of tenancy right means what happens? Property owner will ask the tenant A to vacate. So tenant A will ask, okay, I will vacate by pay a premium. Why premium? Because there is a 3-year lock-in. You are asking me to vacate the property, so you pay a premium, I will vacate the property. So property owner will be giving a tenancy premium of 80,000 to the tenant for making tenant A to vacate the property. That 80,000 received by tenant A will always be taxable irrespective of the nature of the property. Okay. So this is renouncement of tenancy right. So what you need to remember? Transfer of tenancy right and renouncement of tenancy right will always be taxable in the hands of tenant. Let it be residential property or commercial property, etc. But the premium, share of premium received by the property owner will be taxable if the rent of that property is taxable. Okay. Then next, taxability of cash calls from members of joint venture. This is also there in the CMA study material. So what is this? Joint venture. So generally in joint venture, there will be some members of the joint venture. In that members, one member will become an operating member and do the day-to-day activities of the joint venture. And say A, B, C, D are the members of joint venture. A is an operating member. Now what A will do? He will incur an expenditure of 400 rupees. That 400 rupees he will recover from B, C and D. Usually as friends, when we go for a movie or for a dinner, what we will do? Any one person will spend and will put it in the WhatsApp group, this much divided by this. So everyone has to pay that, share GPay and show me the screenshot, like that he will ask, correct? Like that. So A is spending 400 rupees and in turn recovering from B, C and D 100, 100, 100. Is it supply or not a supply? Not a supply. Because one person is incurring the expenditure and recovering it from the others. So that is not a supply. Whereas if A is providing some services to the joint venture and for that A is collecting, so 400, out of that 400, 100, 100, 100 if he is collecting, then it will become supply. What does it mean? That is, one person, like 4 friends, one friend is bringing his car and he is telling to other 3 friends, see pa, had we taken one car on rent, we have to pay rental charges to the car, na? Adenamo enak kudunga. So you give that to me, like that he is asking. Now this will be service. Why this will be service? Because the member is providing the services to the joint venture, that will be supply under 7(1) AA. Any activity or transaction between a person other than individuals and its members, so it will become supply under 7(1) AA. So 7(1) AA, then it will become supply. So whatever money that he is collecting, 300 rupees is getting na, correct or not? So 300 or 400, whatever, because his 100 rupees also he will give it to joint venture and gets from joint venture, then it will be supply. Then taxability of priority sector lending certificates. Priority sector lending certificates are used for making an arrangement between the banks. Say, one bank is there, Lena Dena Bank, which got a license from RBI with the condition that 30% of their public deposits they need to give loans to priority sector. And even they gave a license to SBI also with the same condition. Now for the financial year 21-22, the deposits of Lena Dena Bank is 100 crores, out of which loan to priority sector is 20 crores. So what is the shortfall? 10 crores. Why? They have to give how much loan to the priority sector? 30%. But how much they gave as loan to the priority sector? Only 20%. So there is a shortfall of 10 crores. What will happen if they are not making that loan of 10 crores to the priority sector? Then their license will be cancelled. Bank license will be cancelled. Same way, SBI for financial year 21-22, deposits is 1000 crores and loan to priority sector is 350 crores. So what is the excess that they have achieved? 50 crores. How much? 1000 into 30%, 300, but they gave loan 350. So how much is the excess? 50 crores. Now SBI is transferring 10 crores of loans to Lena Dena Bank by way of transfer of priority sector lending certificate. Now CBIC says this transfer of priority sector lending certificate will be coming under supply of goods and chargeable to GST. It is deemed interstate supply and even it will be taxable under RCM. It will be taxable under RCM. Okay, you just write down priority sector lending certificates. Priority sector lending certificates are sold by one bank to another bank. Priority sector lending certificates are sold by one bank to another bank in order to create liquidity, and such sale attracts GST, such sale attracts GST as supply of goods. And GST and IGST is payable under RCM. IGST means in case of interstate sales, IGST will be applicable. So IGST, integrated goods and services tax, payable under RCM. So which bank will pay GST under RCM? Which is the supplier bank? Which bank is selling certificate? SBI. Which bank is buying the certificate? Lena Dena Bank. So Lena Dena Bank will pay GST under RCM. Then next, taxability of print job. So generally in print job there will be paper plus printing. Whenever you buy, you get a book. In that book there will be paper and ink, which is material, goods element, and printing and binding is the service element, correct? Now in case paper is goods and printing is services, how it will be classified? It will be classified based on principal supply. What constitutes principal supply? Based on that it will be classified. Okay. So now, in case of books and all, what is the principal supply? Paper and ink, printing. Printing and binding only principal supply. Paper is good, ink is good, okay, but not printed properly or not binded properly, or it is in Japanese language. Paper and ink is there, buy no. So only if everything is proper, printing is proper, then only we will buy, not for the paper and ink, correct or not? So therefore, it will be coming under which is the principal supply? Printing. So it is supply of service. Whereas in case of a tissue paper, hotel name will be printed. Just because hotel name is printed in the tissue paper, you will use tissue paper for some other purpose? No. Whatever purpose for which you should use tissue paper, for that only. So what is the principal supply there? Printing or paper? Paper. So therefore it will be treated as supply of goods. Got the clarity? Then we are moving on to charge under GST. So supply under GST we have seen. Now we are looking into charge under GST. So in this charge under GST we have section 9 read with section 5 of IGST Act. Section 9 of CGST Act, parallel section is section 5 of IGST Act. Liability. So this section 9 deals with liability to pay GST. In this we have section 9 subsection 1 which says that on alcoholic liquor for human consumption there is no GST. It is kept outside the ambit of GST. So there is no GST, but old indirect taxes continues on alcoholic liquor for human consumption. Whereas section 9 subsection 2 says on 5 petroleum products. What are the 5 petroleum products? Petrol, diesel, aviation turbine fuel, then natural gas, petrol, diesel, aviation turbine fuel, natural gas. One more you missed, crude oil. Crude oil. On these 5 petroleum products, GST is not applicable. It is kept outside the ambit of GST and it will come into the GST as and when decided by the GST Council. And next, so this generally liability to pay GST is on government. Sorry, generally liability to pay GST to government is on supplier, that is FCM. But we have 3 exceptions. In case of 9.3, recipient is liable to pay GST under RCM. And 9.4 also recipient will pay GST under RCM. 9.5 e-commerce operator will pay. So as per general rule, who will pay GST to government? Supplier. But there are some transactions which are covered under 9 subsection 3, 9 subsection 4 and 9 subsection 5 where liability to pay GST is not on supplier but on some other person. Under 9.3 who will pay GST? Recipient. 9.4 also recipient. 9.5 who will pay? E-commerce operator will pay. Now I am discussing 9 subsection 5 first. 9 subsection 5 we will see. So supplies through e-commerce operator. Whenever we are making supplies through an e-commerce operator, there are some 4 notified services. With respect to those 4 notified services, the liability to pay GST is on e-commerce operator. Kindly make note of this. Section 9 subsection 5, supplies through e-commerce operator. Who will have liability to pay tax? E-commerce operator. And what are the activities? That is, I am supplier and there is one e-commerce operator and there is one recipient. Now, I will not pay GST, recipient also will not pay GST on the transaction, but e-commerce operator will pay it to government. So, you remember these 4 activities as HATE, HATE, HATE. H for housekeeping services. In case of housekeeping services, so example, urban company, who is supplier? That AC mechanic or carpenter, plumber is the supplier. Urban company is the e-commerce operator and a person who books the services of carpenter, plumber will be the recipient. Now who will pay GST? Urban company will pay GST. What is the condition? Supplier should be unregistered. Now say there is a plumber who is registered. He will list his name with urban company to provide the plumbing services. Now who will pay GST? Plumber will pay or urban company will pay? Plumber will pay. Because what is the condition? Supplier should be unregistered. The moment supplier is registered, it is no more a notified service under 9(5). So liability to pay GST is not on e-commerce operator. Only when it is notified service under 9(5), e-commerce operator will pay. Otherwise, supplier only will pay. Understood or not? That's what I said. There is a plumber who is registered, making supplies through e-commerce operator, urban company. Who will pay GST? Plumber will pay. Now there is a carpenter. Carpenter is unregistered, listed in urban company, providing the services. Who will pay GST? Urban company will pay GST. Understood or not? So then A for accommodation services. Example, Oyo, Goibibo, Make My Trip, etc. Who is the supplier there? Hotel owner. Goibibo, Make My Trip, etc. and all is e-commerce operator. And recipient is the guest who stay in that hotel. Okay. Now here also the same condition. Supplier should be unregistered. So who will pay GST? Oyo, Goibibo, etc. will pay GST. What if the supplier is registered? Then the hotel owner only should pay. It is no more a notified service. Then third, transportation of passengers by radio taxi, motorcycle, maxi cab, motorcycle or any motor vehicle. Any motor vehicle. So transportation of passengers by radio taxi, motorcycle, maxi cab, motorcycle, like or any motor vehicle. So simply you can remember transportation of passengers by any motor vehicle. Okay. So example, Ola, Uber, Rapido, Redbus, etc. In that case, who is the supplier? Transporter. E-commerce operator are these people and recipient is the passenger. Who will be liable to pay GST? E-commerce operator. Let the supplier be registered or unregistered. Let the supplier be registered or unregistered. Always liability to pay GST is on e-commerce operator. Then E for eating food in a restaurant. Make note, eating food in a restaurant. Supplier can be registered person or unregistered person. Eating food in a restaurant, supplier can be registered or unregistered person. And who will pay GST in this case? Liability to pay GST is on e-commerce operator only, always. Example, Swiggy or Zomato. So, who is the supplier? Restaurant is a supplier. E-commerce operator is Swiggy, Zomato. Recipient is person who order food from that. Who is liable to pay GST? So, Swiggy or Zomato. What if the restaurant is registered? Let the restaurant be registered or not. Always liability to pay GST is on e-commerce operator. So, HA. For first two, if supplier is unregistered, then only it will come under 9(5). For next two, T and E, so if whether supplier is registered or not, it will come under 9(5). In all these four cases, liability to pay GST is on e-commerce operator. And you can see it here. Supplies through e-commerce operator is divided into three. Supply of goods through e-commerce operator, supply of notified services through e-commerce operator, and supply of other than notified services through e-commerce operator. In case of supply of this, you don't have to write, just listen. In case of supply of goods through e-commerce operator, who will pay GST? Supplier. In case of example, Flipkart, Amazon, etc. In case of supply of notified services through e-commerce operator, who will pay GST? E-commerce operator. Okay. In case of supply of other than notified services through e-commerce operator, who will pay GST? Supplier. So, supplies through e-commerce operator is divided into three categories. And when is it called as supplies through e-commerce operator? So, if there are three parties, supplier, recipient and e-commerce operator. Okay. Now, supplier should be different from e-commerce operator. For example, so Myntra you take. So, if I am a garment seller and I am selling my garments through Myntra, then it is supplies through e-commerce operator. Whereas Max showroom if you take, they have their own app. They are selling their garments through their own app. It is not called as supplies through e-commerce operator. So some other person's platform if you are selling, then only it will be called as supplies through e-commerce operator. And in that supply of goods through e-commerce operator, always liability to pay GST is on the supplier. Whereas supply of notified service HATE, liability to pay GST is on e-commerce operator. Other than notified service, example Book My Show. Book My Show, who is the supplier? Cinema theater. And Book My Show is the e-commerce operator, recipient is the person who watches the movie. So liability to pay GST is on cinema theater only on the transaction. Okay. Now, which one? Restaurant. So restaurant, through their own app they are selling food. It is not at all through e-commerce operator first of all, that's a direct supplies. Okay. So now, in case of first category, who will have liability to pay GST with respect to supply? Supplier. Then e-commerce operator will pay GST on what? Commission. They get commission now, Flipkart, Amazon, on that they will pay GST. And this supplier is compulsorily required to get registered irrespective of threshold limit. Who? Supplier of goods through e-commerce operator. Whereas supplier of notified services through e-commerce operator, so supplier will not have any liability, e-commerce operator only will have liability to pay GST on the transaction. Whereas third case, supplier will have liability to pay GST with respect to supply, but e-commerce operator will have liability to pay GST on commission and other charges. And these two suppliers, which supplier? Supplier of services through e-commerce operator are liable to register only when their aggregate turnover exceeds threshold limit. Okay. So these are the other aspects related to e-commerce transactions. And when e-commerce operator is liable to register. So if e-commerce operator is covered under 9.5, 9.5 means what? 4 notified services they are liable to register. Or they are liable to deduct TCS under section 52. We have a concept of TDS and TCS in GST. If they are required to deduct TCS under section 52, then also they are required to get registered. Or if their aggregate turnover exceeds threshold limit in other cases. Now, whenever they are required to register, where they should register? Do they have a physical place of business in India? Yes. Then they will register that place. But they don't have a physical place. For example, Uber. Uber is liable to register, but they don't have a physical place in India. They are operating from outside India. But do they have a representative office in India? Yes. Then that representative office will register and pay GST. So having a physical presence in India, yes, shall register and pay GST accordingly. And they are not having a physical place in India, then they have a representative in India, yes, then that representative shall register and pay GST. What if they neither have a physical place nor they have a representative office? Example, this urban company, Dubai based website it is. So they neither have physical presence nor a representative. They should appoint an agent in India, and they appointed. That agent shall pay GST. So e-commerce operator shall appoint a representative for getting registered, and that person will pay GST. Understood? So this is about 9 subsection 5, liability to pay GST on e-commerce operator. Okay. Now we will take a break and we'll meet at 2. 45 minutes enough, no? We'll meet at 2 and we will continue with 9 subsection 3, 9 subsection 4. Okay. Fine. But this 9 subsection 3 when we are discussing, we will connect it with exemptions also, because wherever services are covered under RCM, it is also connected to exemptions. Meanwhile, I just wanted to hear from you which topics you wanted me to concentrate more. See, these I will tell you few topics which definitely I will concentrate, that is exemptions, RCM, input tax credit, place of supply, value of supply. This is actually a category in GST. This definitely I will be focusing on. Apart from this, which areas you want me to discuss? Like you might have read, you might have felt, no, I have not understood this, etc. Which areas? So that I will focus more on that. That okay. Then customs valuation. See, I'll tell you A category topics first. A category topics are in GST. We have exemptions and RCM, exemptions and liability to pay GST, and then we have place of supply, value of supply, input tax credit. These are the major 5 topics which are A category in GST. In customs, it is this valuation under customs. That is the A category topic in customs. Only 6. Apart from this, I am asking. Okay, so you want that offences, penalties, etc. Okay, fine. Refunds, done. So I have given all the materials in that. Okay, but I just wanted to hear it from you so that I can structure it based on the importance. Based on importance. First, I will complete this, and thereafter I will discuss based on the importance as offences, penalties, then refunds and all you are asking. So that I will discuss, and thereafter I will see the remaining topics. Okay, fine. Thank you. We will meet at 2 o'clock. Okay, welcome back. So, in the previous session, we completed about section 7, supply, section 8, composite supply, mixed supply, section 9, subsection 5, we have seen, that is supply of notified services through e-commerce operator. I am now starting with section 9, subsection 3, that is, there are some list of goods and list of services. On these goods and services, liability to pay GST is on the recipient to government, okay. And what are the list of goods which are covered under RCM? So kindly make note, section 9 subsection 3, section 9(3), list of goods covered under RCM, list of goods covered under RCM, list of goods covered under RCM. So you just take it like what are the goods and who should be the supplier and who is the recipient for RCM purpose. So when it will come, what is the goods and who should be the supplier and who should be the recipient. First, cashew nuts, then tendu leaves. Tendu leaves means for BD they take leaf, put the tobacco and roll it, na, that is called as tendu leaves. And tobacco leaves, and thereafter we have raw cotton. So these are the first set of goods: cashew nuts, tendu leaves, tobacco leaves, raw cotton. Supplier should be agriculturist. Who is an agriculturist? Who is engaged in cultivation. Farmer who is engaged in cultivation, agriculturist. And the recipient can be any registered person. Recipient can be any registered person. Then it will come under RCM. What if the recipient is unregistered person? It is transaction between two unregistered person, there is no GST. Agriculturist is exempted from registration. An agriculturist, because agriculturist basically deals with cultivation out of land. So they are exempted from registration, they are not at all required to get registered. This is for your information. If you want to just write down, agriculturist exempted from registration under section 23. Exempted from registration under section 23. Then second, we have lottery tickets. Lottery tickets sold by state government or union territory or local authority to distributor or selling agent. To distributor or selling agent. What about other than state government? Lottery need not be state government operated lottery only. In Kerala it is government operated lottery, but if you take other states like Assam and all, it will be other than state operated. Then in that case, so will it come under RCM or FCM? FCM only. Only in case of state government operated lottery, when they give it to the distributor, that will come under RCM. In all other cases, lottery transactions will be coming under FCM. Then morning we discussed one, priority sector lending certificates. Priority sector lending certificates. So who is the supplier? Selling bank, correct? Selling bank and purchasing bank is the recipient. Purchasing bank is the recipient. Number 4, silk yarn by manufacturer to any registered person. So because silk yarn is processed from the silkworm, what they do, silkworm cocoons, sericulture. They take the silkworm that is processed. So therefore, manufacturer of that silk yarn to person can be any registered person. Any registered person. And last, number 5, only 5 are covered under RCM here. 5 goods are only covered under RCM, and that is used vehicles, used or seized, or confiscated goods or vehicles or waste and scrap. Generally what happens, so government will be seizing certain vehicles like 20-year-old vehicles, 15-year-old vehicles and all, they will seizing because that will have lot of pollution issues. Then some goods will be seized because of tax evasion and all. So these seized goods and all, what government will do? So government only. When I say government, I mean to say central government, state government, union territory or local authority to any registered person. The person who is purchasing, usually they sell it by way of auction. They will not sell it normally. Sale by way of auction. Sale by way of auction. So they will not pay GST. Government will not pay GST. But the one who is purchasing, that registered person is required to pay GST. So these are the list of goods which are covered under RCM. Okay. And we don't have exemptions with respect to goods under our goods. For CMA final exam, we don't have exemptions with respect to goods. But RCM with respect to goods, these 5 goods you need to remember. Maybe in MCQs this can be tested. Services, list of services which are covered under RCM is also there, and that list of services which are covered under RCM you can remember with a keyword Sir CG got salads. You can see it here, list of services which are covered under RCM. List of services which are covered under RCM. You can remember with a keyword Sir CG got salads. In that, yes, we are discussing security lending as per SEBI. So now what I am doing is that every service I am discussing as to when it will come under RCM. Also I am connecting it to the exemptions. Okay. So first security lending scheme. In security lending scheme what will happen? So I am a lender of securities. You are borrower of securities. So this transaction will happen through a stock exchange. So I will be depositing my shares in the stock exchange and you will be borrowing the shares from the stock exchange. Why you will borrow? Because you will be making a short sales. Short sales means what? Placing the sell order when you don't have the shares is known as short sales. So now you borrow the shares from the stock exchange in order to do the delivery, for which you will be returning those shares at a later point of time. Now you will pay a lending fee to the stock exchange. On that lending fee, I will not pay. Actually, I am getting the lending fee from the stock exchange. You are the person who is paying lending fee to the stock exchange. You will pay GST under RCM. Okay. So see this, Mr. Kannan is one person who is holding 3,000 shares of Reliance Industries Limited. He deposits the shares with National Stock Exchange. And what happens? Mr. Arjit, who is making a short sales of Reliance Industries shares, will borrow the shares from stock exchange and will return the shares to the stock exchange and will also pay a lending fee of 10,000 rupees. On this 10,000 rupees, who is the supplier, who is the recipient? So Kannan is supplier and Arjit is recipient. The person who is lending the shares is supplier, the person who is borrowing the shares is the recipient. So who should pay GST? Logically supplier. But as it is covered under RCM, Mr. Arjit will pay GST under RCM. And 10,000 rupees into say 18 by 118, 1,525. So GST is payable under RCM. And that GST they can take as ITC. Okay. Now what stock exchange will do? Will not remit full 10,000 rupees. They will deduct 1,000 rupees as a commission. So for the 1,000 rupees commission, who is supplying service to whom? Stock exchange is supplying service to Mr. Kannan by way of facilitating the shares to be given on rental basis or borrowal basis. So on the 1000 rupees, do we have any RCM? No, FCM only. So therefore stock exchange is required to pay GST to government. Understood or not? Then, is security lending treated as transaction in securities? No, because it will come under facilitating or arranging transaction in securities. Because transaction in securities is neither goods nor services. You should not get this doubt. That's why I am telling you that it will come under facilitating or arranging transaction in securities. And there are two supplies here. Supply number 1 is by NSE to Mr. Kannan, and supply number 2 is by Mr. Kannan to Mr. Arjit. Can Mr. Kannan take ITC? Because NSE providing service to Mr. Kannan and Kannan providing services to Arjit, can Kannan take ITC with respect to this? No, because whenever my outward supply is covered under RCM, I cannot take ITC on my inward supply. This is one important point you should keep in mind. What is that? Whenever I am making outward supplies, will I pay GST or my recipient will pay GST to government? My recipient will pay GST to government, so I cannot take ITC on my inward supplies. So therefore, if outward supply is taxable under RCM, then it is treated as exempted supply for availment of ITC. Consequently, ITC not available on inward supplies. Okay. Then import of services. Import of services is divided into two: OIDR services and other than OIDR services. Import of service is covered under RCM. First point, you understood about security lending. In security lending, who is the supplier? Lender of securities. Who is the recipient? Borrower of securities. On the lending fee, borrower of securities will pay GST. We don't have any exemptions. We don't have any conditions for RCM. Second, import of services. Import of service is covered under RCM, but in one place, it will come under FCM. So OIDR services means online information database access and retrieval services, means any service which is mediated through internet and which is automated is known as a OIDR service. Example, all OTT platforms will come under OIDR, because without internet you cannot watch and it will be automated. So it is OIDR service. What about this mobile games, online mobile games? So without internet you cannot play that game and it is automated. It will come under OIDR services. And what about normal mobile games wherein like even without internet you can play that games? Will it come under OIDR? No. And what about collaborative mobile games? Online mobile games wherein other person should be there, then only you can play, like PUBG or some other games like that. Other person should be there, then only you can play. That is collaborative gaming. Even Rummy Circle, online Rummy, etc. and all. So that will come under OIDR. No, it will not come under OIDR. Online classes will not come under OIDR because so one faculty should be there to take the class. What if it is online recorded classes? It will come under OIDR services. So what is OIDR service? So online information database access and retrieval services. How do you know whether it is a OIDR service or not? What are the two factors that you need to keep in mind? A service which is through internet and it is automated. So OIDR services means it should be through internet. Just write down there. OIDR services means it is through internet. It is through internet and it is automated. And it is automated. Then it will be called as OIDR services. OIDR service means through internet and it is automated, then only it will be called as OIDR service. OIDR services will be always taxable. Who will pay GST? We need to check whether the recipient is non-taxable online recipient or other than non-taxable online recipient. Who is a non-taxable online recipient? Any unregistered person importing services for other than business or commerce is called as non-taxable online recipient. For example, you are subscribing for Amazon Prime or Netflix. Already I gave you that example. So, are you non-taxable online recipient or not? You are unregistered, correct? You are unregistered. You are importing for what purpose? For your personal purpose. So, you will come under non-taxable online recipient. So, liability to pay GST is on recipient. Under RCM or FCM? See there, liability to pay GST is under FCM. Then who will pay GST? Amazon Prime or Netflix will pay. What if you are a registered person? Then you are importing for personal purpose, or you are unregistered but importing for business purpose. Because non-taxable online recipient means two conditions. What are those two conditions? They should be unregistered and they should be importing for other than business or commerce. Otherwise, it will be coming under RCM where liability to pay GST is on recipient. This is in case of OIDR services. Other than OIDR services, imported by non-taxable recipient is exempted. Who is a non-taxable recipient? Individual, trust, government. These three people will come under non-taxable recipient. I gave a difference between non-taxable online recipient and non-taxable recipient. So, non-taxable recipient who will come? Individual and trust and government. Only they will come under non-taxable recipient. But non-taxable online recipient, any person including trust, government. But what is the difference? Individual or any person, in case of non-taxable online recipient, they should be unregistered and importing for what purpose other than business or commerce. But here non-taxable recipient is individual, trust or government. The trust and government can be registered or unregistered, and they are importing service for charitable activities or other than business or commerce, but individual should be unregistered. So that is the difference. So when we will apply NTOR, in case of what is extra, we have NTOR versus NTR. What is extra? We have O. So what is that O? OIDR. So whenever there is OIDR service, we will apply NTOR. Whenever it is other than OIDR service, we will apply NTR, non-taxable recipient. Okay. What is the difference between NTOR and NTR? NTOR is any person, unregistered, importing for other than business or commerce. NTR is individual, trust, government. Individual should be unregistered, trust and government registered or unregistered. So for what purpose? Other than business or commerce or for charitable activities. Got it? Now import of service by non-taxable recipient will be exempted, but other than non-taxable recipient will be taxable under RCM. So wherever it is RCM, recipient is liable to pay GST and they need to compulsorily get registered. Even in case of OIDR service, when supplier is liable to pay, they should also compulsorily get registered. So there are two compulsory registrations in this case. So far we have come across compulsory registration. So first, in case whenever recipient is liable to pay GST under RCM, they are compulsorily required to get registered. Every supplier of goods through e-commerce operator is also compulsorily required to get registered. You just write down. So compulsory registration, and this compulsory registration actually is not applicable for new syllabus, because new syllabus registration chapter is not there, but this will be useful somewhere. They will connect as a connecting point. At least this compulsory registration alone will be useful for you. Okay. So because what will happen in MCQ, somewhere it might be tested, that's why. So what are the cases where a person is compulsorily required to get registered? So compulsory registration is given under section 24. Under section 24, you remember this with a keyword I creations. I creations. So I for interstate supplier of goods. That too, what goods? Taxable goods or exempted goods? Taxable goods. Interstate supplier of taxable goods. Then C, casual taxable person. Who is a casual taxable person? Who come from outside India to other state to this state and is not having any physical place of business in this state, is called as a casual taxable person, and they will be making supply of goods or services. So on a temporary basis they will be coming to this state, and other than, both cases other than handicrafts. If they are engaged in making handicrafts, they are not compulsorily required to get registered. So other than handicrafts. Even casual taxable person also other than handicrafts. Other than handicrafts. Then R, that is recipient liable to pay GST under RCM. Recipient liable to pay GST under RCM is also compulsorily required to get registered. E, that is e-commerce operator. E-commerce operator. So we discussed now 9 subsection 5 e-commerce operator. So every e-commerce operator is compulsorily required to get registered. Then A, agent making supplies on behalf of principal. Agent making supplies. In principal agent transaction we discussed, agent making supplies on behalf of principal. And T, that is TDS deductor. Then I, input service distributor. So in GST also we have TDS TCS concept. So TDS deductor is compulsorily required to register. Input service distributor. So who is an input service distributor? Who avail the ITC, head office which avail the ITC and distribute the credit to the branch officers is known as input service distributor. That input service distributor is compulsorily required to get registered. Then OIDR supplier. OIDR supplier outside India. Outside India and making supplies to NTOR, non-taxable online recipient. Why? If they are making supplies to other than non-taxable online recipient, it will come under RCM. So liability is not on supplier, on the recipient. So they are not compulsorily required to register. So which OIDR supplier is compulsorily required to register? If they are located outside India and they are making supplies to non-taxable online recipient, they will have the liability to pay GST. So they are compulsorily required to get registered. Then N, that is non-resident taxable person. N is NRTP, non-resident taxable person. Who is a non-resident taxable person? One who come from outside India to India to make supply of goods or services. Usually cricketers who come from outside India to play IPL matches, they will come under non-taxable online recipient. Then yes, supplier of goods through e-commerce operator. Supplier of goods through e-commerce operator. Whether supplier of services through e-commerce operator is compulsorily required to register? No. Only supplier of goods through e-commerce operator is compulsorily required to get registered. So these are the cases where a person is compulsorily required to get registered irrespective of the threshold limit. So can you please tell me once again? I for interstate supply of goods other than handicrafts. C for casual taxable person other than handicrafts. R for recipient liable to pay GST under RCM. Then E, e-commerce operator. Then A, agent making supplies on behalf of principal. T, TDS deductor. I, input service distributor. O, OIDR supplier located outside India and making supplies to non-taxable online recipient in India. Then N, non-resident taxable person. And yes, supplier of goods through e-commerce operator. So that point only here I am telling that every supplier, that is every recipient who is liable to pay GST under RCM is compulsorily required to get registered. Even OIDR supplier located outside India is also compulsorily required to get registered. So this is about import of services. Now, what are the two services that we have seen? SIRR. Sir, CG got salads. This is the list of services which are covered under RCM. Sir, CG got salads. Okay. So in that we completed yes. What is that yes? Security lending. Supplier, lender of securities. Recipient, borrower of securities. GST payable by borrower. I, import of service. Supplier, outside India. Recipient, in India. Any exemption? Yes. One place. Import of other than OIDR service by non-taxable recipient is exempted. And any FCM, one case. Import of other than import of OIDR services by non-taxable online recipient will be FCM. Otherwise, import of service will come under RCM. Then R. Now we are discussing R, that is renting of motor vehicles. In case of renting of motor vehicles, 4 cases we have exemption. For renting of motor vehicles is exempted. I have a motor vehicle that can carry more than 12 passengers that I am giving on rent to a state road transport undertaking. I get some rental charges. That rental charges received by me will be exempted. Then I have a motor vehicle that can carry goods that I am giving on rent to a goods transport agency. I get some rental income that is exempted. Then I have an electric motor vehicle that can carry more than 12 passengers that I am giving on rent to a local authority. What is the difference between first point and the third point? First point is a normal vehicle, but third point is electric vehicle. First point given on rent to a state road transport undertaking. Third point given on rent to a local authority. but both cases the passengers capacity will be greater than 12. Second point is what? Not a passenger transportation vehicle, it's a goods transportation vehicle that is given on rent to a goods transport agency. Fourth point you see, that is there is a educational institution which is providing transportation to students, faculty and staff. Now to that educational institution I am providing transportation service, so they outsourced it to me, so I am providing transportation service to that education institution. Now I received renting of bus from a person, that renting is exempted. Why? Because they wanted to exempt the entire line of transaction. That's the reason why this point is applicable. You can make note of this. There is a school which is educational institution up to 12th standard. Okay, so educational institution up to 12th standard, and this school is providing transportation services to students, faculty and staff, that is exempted. To students, faculty and staff. So this school is providing transportation services. That transport services is exempted. That transport service is exempted. Okay, there is a school which provides transportation service to students, faculty and staff, and that transport service is exempted. Okay, and this school will outsource it to one travel agency, ABC Travels. So this ABC Travels provides transportation service to school, that is also exempted. Transport services to school, that is also exempted. Now this ABC Travels takes vehicle on rent from XYZ Motors. From XYZ Motors, they take the bus on rent, renting of bus. Renting of bus. That renting of bus is also exempted. So that's why they have given exemption with respect to this renting of bus. So because they want to exempt the entire line of the transactions, that's why. So first we need to see, there is an educational institution which is providing education up to 12th standard, and a person is providing transportation service to them. Now that person is taking motor vehicle on rent. That rent is exempted because this transportation service to the school is exempted, and transportation service by school to the students, staff, faculty is also exempted. Then what if it is to a college? There is a college, and that college is providing transportation service to students, faculty and staff. Students, faculty and staff. And whether this transportation service by college to students, faculty and staff is taxable or exempted? Exempted. Any services provided by an educational institution to its students, faculty and staff is exempted. So this is exempted. College providing transportation service to students, faculty and staff is exempted. Now this college has received services from ABC Travels, and ABC Travels provided the transportation service to the college. Whether this transport services is also exempted? Yes. So this transport services is not exempted, it will be taxable. Only if it is transportation service to education institution up to 12th standard, it is exempted, but for other institutions it will be taxable. Now ABC Travels is taking motor vehicle on rent from XYZ Motors. From XYZ Motors there is renting of bus. Whether that renting of bus is taxable or exempted? Taxable, because see the exemption, what is it they are telling? A person that is renting of bus to a person who is providing transportation service to educational institution up to 12th standard. So to that person only renting of bus is exempted. But here this person is using it for what? Transportation of students of college. So that's why it will become taxable. Okay. Then, so these are the 4 exemptions with respect to renting of motor vehicles. So can you tell me what are the 4 exemptions? Number 1, hiring of bus to a person, hiring of bus carrying more than 12 passengers to state road transport undertaking, hiring of goods transportation vehicle to a goods transport agency, hiring of vehicle that can carry more than 12 passengers to a local authority, but it is an electric vehicle. And number 4, hiring of bus to a person who provides transportation service to education institution up to 12 standard. Apart from this 4, any other renting of motor vehicles will be taxable, and wherever it is taxable, it will come under RCM if 3 conditions are satisfied. Supplier should be other than body corporate, recipient should be body corporate, rate of GST should be 5%. If these 3 conditions are satisfied, it will come under RCM, otherwise it will be FCM. Then renting of residential property, already we discussed under RCM. What is that? Renting of residential property for residential purpose to a registered person, it will come under RCM. All other cases it will be FCM, and one case it is exempted. What is that one case it is exempted? Renting of residential property for residential purpose to a unregistered person is exempted. So 4 activities we have completed, that is, sir, we have completed. So can you tell me what is yes? Security lending, I, import of services, R, renting of motor vehicles, another R, renting of residential property. Now we are discussing C, that is copyright services. So what are the 4 copyrights which are covered under RCM? So original literary means related to books, novels, etc. Then dramatic, that is story, screenplay, musical, songs, background music, artistics, paintings, drawings. These 4 are covered under RCM. Apart from these 4, any other copyright or patent or trademark or IPR will be covered under FCM. But in this 4 also, for original literary we have an option. So author can pay GST under FCM also, but if they opt to pay GST under FCM, there is a lock-in for 1 year. So 1 year lock-in means what? For the next 1 year, author only will pay GST under FCM. But primary liability is on whom? Publisher, recipient. But if author opts to pay GST under FCM, then lock-in for 1 year. Then G for GTA services, that is goods transport agency services. In case of goods transport agency, any person engaged in transportation of goods by road and issues a consignment note by whatever name called is called as goods transport agency. So 2 conditions, they should be transporting goods by what mode? Road, and they should be giving a consignment note. In that consignment note, they need to specify from where to where they are transporting, then they are called as a goods transport agency. And we had previously 5 exemptions with respect to goods transport agency. Now there are only 3 exemptions. Transportation of notified goods. What are those notified goods? 6 notified goods. Agricultural produce, then organic manure, food grains including flours, pulses, milk and salt, then newspapers and magazines, relief material for natural and man-made disasters, and defense and military equipment. These 6 notified goods transported by GTA will be exempted. Previously one point was there, single carriage, freight does not exceed 1500, single consignee, freight does not exceed 1000, that is omitted now. So it is not there, which means in that case it will be taxable. It is not exempted, it will be taxable, that is omitted. Then other 2 points are still there, that is if the recipient is central government, state government, local authority who are registered only to deduct TDS, then it is exempted. Or if the recipient is individual HF or AJP not having a factory and are unregistered, then also it will be exempted. So these are the 3 cases GTA service is exempted. Okay. So what are the 3 exemptions? Notified goods, recipient is government registered only to deduct TDS, recipient is individual HF and AJP not registered and not having a factory. All other cases it will be taxable. Wherever goods transport agency is taxable, now again here we have an amendment. They have 2 options, either FCM or RCM, but they have to decide that option in each financial year. Option to be exercised with respect to each financial year, and that option will be throughout the financial year, and they cannot shift. Previously they can shift between the options, but now this is not possible, which is during the financial year they need to decide either FCM or RCM. But again in FCM they have 2 options, either they can pay GST at 12% or 5%. If they want ITC, they will pay GST at 12%. If they don't want ITC, they can pay GST at 5%. RCM always 5%, and the restriction of ITC with ITC without ITC is only to the supplier, that is goods transport agency, but you are receiving services from them, always you can take ITC, whether they pay GST at 12% or they pay GST at 5%, you can definitely take ITC with respect to that. Okay. Then next we are moving on to government services. So what are the services that we have completed? Yes, for security lending, I, import of service, R, renting of motor vehicles, another R, renting of immobile property, residential property, C, copyright services, G, GTA services. Now we are moving on to government services. So government services to business entities. So only 4 activities of government is covered under supply. What are they? Department of Post, airport or port, transportation of goods or passengers, and services to business entities. Now I am discussing that 4th one, services to business entities. It is covered under RCM, but in this case we have some specific exemptions, general exemptions, and in other cases it will be taxable. Wherever it will be taxable, it will come under RCM. First we will see specific exemptions. Specific exemptions means whatever may be the amount, it is exempted. Number 1, charges under Right to Information Act. Under Right to Information Act, we pay some charges to get the information. So therefore government will receive the charges. The charges received by the government will be exempted. Okay. Previously we had, this service, municipality or gram panchayat services was exempted like that. Now that is omitted. So which is not exempted. So it will become taxable. Wherever it is applicable, it will become taxable. So we have Right to Information Act, charges collected is only exempted. Second, interdepartmental service. Interdepartmental means what? One department of central government or state government provides service to another department of central government or state government. For example, income tax department, whenever they want to go for a raid, they will be taking support from the police department. So that is interdepartmental service, that is exempted. Then transfer of right to use spectrum. So spectrum is radio frequency waves. If that is allocated before 1/4/2016, for that allocation, if any amounts is collected now, that will be exempted. Then next, transfer of right to use natural resources. Again, it should be assigned before 1/4/2016. So before 1/4/2016, so some natural resources like licenses are given to extract the natural resources. But for that, if we collect any one-time charges now, then only it is exempted, but annual royalty is not exempted. Look into the difference between 3rd point and 4th point. In 3rd point, both one-time charges and annual royalty is exempted, correct? But in 4th point, only one-time charges is exempted. Then 5, transfer of right to use natural resources to an individual farmer. There is an individual farmer who gets some land from the government for which they need to pay some royalty. That royalty received by the government will be exempted. Then registration charges under any law. So whenever we incorporate a company, we need to pay registration charges. Whenever we register a property, we need to pay registration charges. Whenever we buy a car or a two-wheeler, we need to pay registration charges. All these registration charges are exempted. Then merchant overtime charges under customs. So customs authorities will be working after office hours and during public holidays also. So for that, they will be collecting overtime charges. The charges collected by them is exempted. All these are money collected by government. Okay. Then fee for birth certificate, death certificate, driving license, visa and passport. Only 5 certificates. For these 5 certificates, amount collected will be exempted. What are the 5 certificates? Birth certificate, death certificate, visa, passport, driving license. Then safety certificate charges. Generally, establishments which are dealing with public at large should obtain a safety certificate. That safety certificate will be given by the safety officer. That safety officer will collect some charges for issuance of safety certificate. The charges collected by safety officer is exempted. Then guarantee commission from public sector undertakings. So whenever government is guaranteeing the loan taken by public sector undertaking, for which they will collect some commission from PSU, public sector undertaking, that commission collected by them is exempted. Then consideration for tolerating an act. Government enters into contract with one person. That person breached the contract and therefore he will pay damages to the government. So consideration for tolerating an act is exempted. Then what about fines and penalties? Fines and penalties are not consideration. For example, so you violate the traffic signal. When you violate the traffic signal, you have to pay a traffic fine. So 1000 rupees and all. Not wearing helmet, you have to pay some fine. Is it consideration for tolerating an act? No. If that be the case, which means I can pay money and I can do the crime. That is the meaning. So what I will do, I have to go fast So therefore I will go fast, hit 4-5 people. What you need? Fine only? No, I will pay fine. So like that it will become. So that's the reason why it is not consideration, it is legal consequence of a person. So therefore fines and penalties are legal consequence of person and not trade as supply. Then share of profit petroleum. Share of profit petroleum means what? So we have a concept of cost petroleum and profit petroleum. So this particular concept actually tested in recent CA exams, they have tested this concept. No, May 23 CA final exam, they have tested this concept. It's a very important concept, and CMA, they have not yet tested this. Okay, so cost petroleum, profit petroleum not yet tested, but if you are, maybe it may be tested. Why to take a chance? That's why we are discussing this. So kindly make note of cost petroleum and profit petroleum. Cost petroleum and profit petroleum under GST. So what happens is that generally government will be giving assignment of right to use, right to extract crude oil or natural gas to one leaseholder. Okay, so government and leaseholder. So what is the right that government gives to the leaseholder? Extraction of crude oil or natural gas. Okay, government gives assignment of right, assignment of right to extract, assignment of right to extract petroleum crude or natural gas. Petroleum crude or natural gas. So government will be assigning right to extract petroleum crude or natural gas to the leaseholder, for which leaseholder will be required to pay two types of consideration to government. So one is lease rentals, plus another one is share of profit. And what happens? Government and leaseholder will form a joint venture. So this business will not be done separately by the leaseholder. They create a joint venture. So in the joint venture, so who are all the members of joint venture? Who are the members of joint venture? Government and leaseholder are the members. Now this joint venture will do the business and will generate some revenue from operations. In this revenue from operations, leaseholder will recover his expenses because he is providing services for generation of revenue. Who will invest everything? Leaseholder only will do the investment. So therefore, he will recover his expenses. Recovery of expenses. That recovery of expenses is known as cost petroleum. That recovery of expenses is known as cost petroleum. Even government will get lease rentals. Government, from the revenue, they get lease rentals. Now, whatever is the portion that is left is known as profit petroleum. So from revenue we need to reduce cost petroleum and lease rentals. Then whatever is the balance that is left is known as profit petroleum. In this profit petroleum, a percentage will go to the leaseholder and a percentage will go to government. That share of profit to leaseholder, is not a supply. Why not a supply? Because he is investing and he is generating return on investment. So it is not a supply. And the share which is received by the government is supply under section 71AA. Why 71AA? Because government is not investing. Government is not investing and they give the right to extract natural resources. So that is supply under 71AA. But this share of profit is exempted. It is supply under 71AA, but it is exempted. Then, what about the lease rentals which is received by the government? That will be taxable. That will be taxable. We don't have any exemption with respect to this. Then what about the cost petroleum? Cost petroleum is exempted. Cost petroleum is exempted. So what is cost petroleum? Recovery of expenses by the leaseholder. Taxable or exempted under GST? Exempted. Then what is profit petroleum of government? So after reducing the cost petroleum and the lease rentals, there will be some remainder called as profit petroleum. In that profit petroleum, a percentage will be taken by the government. That percentage received by the government is also exempted. So both cost petroleum and profit petroleum is exempted, but remember, only when the contract is with the government. Suppose if this arrangement is with any other person, we will not get the exemptions. So that is about this share of profit petroleum. And then services to excess royalty collection contractor to the extent of variable royalty. What is this? Say this. So we have a concept of excess royalty collection contractor. So first, state government of Andhra Pradesh enters into a contract with Messrs. Reddy Brothers, assignment of right to extract bauxite for a royalty of 10,000 rupees per ton. Now the type of royalty that state government gets will be fixed royalty, but fixed royalty or variable royalty? Variable royalty. Depending upon the number of tons that is extracted, they will pay. So therefore it is total variable royalty. But government wanted fixed royalty because their expenditure will be fixed, budgeted. For that reason, they will appoint one person called as ERCC, excess royalty collection contractor. This excess royalty collection contractor will do a swap arrangement. They will receive variable royalty and they will pay fixed royalty to the government. For example, if in a financial year, variable royalty is somewhere 30 lakhs and the fixed royalty is 20 lakhs. So now, how much will the Reddy Brothers pay to ERCC? 30. How much ERCC will pay to state government of Andhra Pradesh? 20. So therefore, remaining 10 is the gain to ERCC. Suppose in a year, if in a year, the variable royalty is 15 lakhs, but the fixed royalty is 20 lakhs, then what ERCC should do? He should pay that 5 lakhs extra because they receive from Reddy Brothers 15, but they need to keep 5 lakhs and they need to pay. So in one year they may get gain and the other year they may get loss. Now that is the gain or loss to the ERCC. Then what is the advantage of this arrangement to the state government? State government will always get the fixed income, 20 lakhs. So for that reason, they go for this ERCC arrangement. Now in that case, listen carefully. So Reddy Brothers in the first example paid GST on 30 lakhs. What is the variable royalty? First example, 30 lakhs. On the 30 lakhs, already Reddy Brothers have paid the GST. Now, whether ERCC is required to pay any GST? No, because variable royalty 30 lakhs, fixed royalty 20 lakhs, already GST paid on 30 lakhs, so no need to pay any GST. Suppose if the variable royalty is 15 lakhs and fixed royalty is 20 lakhs, then Reddy Brothers would have paid GST on what? 15 lakhs. Therefore, on 5 lakhs, ERCC is required to pay GST. GST payable under RCM on fixed royalty minus variable royalty. Fixed royalty is greater than variable royalty. So to what extent it is exempted? To the extent of variable royalty it is exempted. So these are the specific exemptions that we have with respect to services provided by government to business entities. If this transaction you come across in exam, fully it is exempted. Okay. So what you need to do is that you need to remember this. See the exam question paper. If this line comes, exempted. Simply you will write it as exempted. Apart from this, two general exemptions are there. That is, so if a service is not covered under specific exemptions, then apply the general exemptions. That is, if service is provided to business entity and that business entity turnover during the previous year does not exceed threshold limit, then also the service will be exempted. So services other than renting of immobile property provided to a business entity whose aggregate turnover during the previous year does not exceed threshold limit for registration. For example, you started one new entity, advertising agency. Now you are receiving services from the government. This is the first year in which you started. Previous year turnover is 0. It does not exceed threshold limit. Now advertising services provided by government to business entity, is it covered under the list of that exemption, specific exemptions? Advertisement services, no, we have not come across. Therefore it will come under this first general exemption and it is exempted. Or another general exemption is there, if the value of supply does not exceed 5,000, then also it is exempted. Means what? If per bill, if it is less than or equals to 5,000, then also it is exempted. These two cumulative exemptions are independent exemptions. Independent exemptions, either this point or this point, not necessarily that both should be satisfied. Okay. Then any services other than this will be taxable. Wherever it is taxable, if it is renting of immobile property, if it will come under RCM if the recipient is registered. If the recipient is unregistered, it will come under FCM. Sir, if recipient is unregistered, you said renting of immobile property is exempted. That is normal renting of immobile property. This is renting of immobile property by government to business entity. Okay. Then any other services will always be covered under RCM. So this part you need to remember here, that is services other than specific exemptions and general exemptions will be taxable. In that renting of immobile property, if the recipient is registered, RCM, otherwise FCM, and all other services will be always RCM. That is about government services to business entities. Okay. So we completed S, I, R, R, C, G and G also, government services. Then O for overseeing committee services to RBI. Overseeing committee will be restructuring the non-performing assets of banks. What are non-performing assets? Outstanding loans of the banks. For doing this restructuring job, so this overseeing committee will get a commission from RBI. On that commission, liability to pay GST is on RBI. Apart from that, all other cases, it will be either FCM. Previously, we had an exemption. Any service provided by RBI was exempted, but now it became taxable. That is an amendment. Okay. Any service provided by RBI is now taxable because the exemption is omitted. And any service received by RBI. So for import of services by RBI in relation to management of foreign exchange reserves, like that one point was their exemption, but that exemption is also omitted. So any import of service by RBI will be taxable. Then service provider in India, if it is overseeing committee to RBI, it is taxable under RCM, and any other service it will be taxable under FCM. So therefore what is that you need to remember? RBI, all services are taxable. For RBI, all services are taxable, provided by them or received by them. But only in two places it will come under RCM. What are they? Import of services by RBI and overseeing committee services to RBI. Then next T, that is transfer of right to use land, that is TDR, FSI and long term lease. So TDR refers to transferable development rights, FSI floor space index and long term lease of land. When is it called as a long term lease of land? Lease for a period more than 30 years is known as a long term lease of land. FSI is like, I have a land. On that land, how much I can construct is known as floor space index. Suppose if there is any unutilized FSI, I will be transferring that unutilized FSI to the builder, and the builder will do the construction and he will sell that and he will give me some consideration for that. These are known as builder floors, builder floor which is being sold. On that, liability to pay GST is on the builder, not on me. So what is that I am doing? I am sharing my unutilized FSI with the builder, for which builder will be giving me some consideration. Understood or not? So on that consideration, liability to pay GST is on the builder under RCM. Done. Then next, TDR refers to transferable development rights. So whenever, say for example, I have a house and metro line is coming, so they demolish my house. When they demolish my house, instead of giving me compensation, they will be giving me transferable development right. So now there is a builder who is increasing the construction 4 floors, 5 floors, 10 floors. Now for increasing the construction, FSI is a restriction for him. Beyond a limit he cannot increase the number of floors. So by purchasing TDR from me, he can increase the floors. So TDR is like a virtual land. So therefore when he buy the TDR from me, he can increase the number of floors. So therefore I have a transferable development right which I am giving it to the builder, for which he will pay some consideration. Again builder will pay GST under RCM. Okay. Then long term lease. I have a land which I am giving on lease for more than 30 years and for which I will get some lease rentals. On that lease rentals also builder will pay GST under RCM. So if you have not understood what this is, TDR FSI, don't worry. You remember TDR FSI long term lease is covered under RCM. Who will pay GST? Promoter or builder will pay GST under RCM. Now there is one exemption with respect to this. See this example, landowner has given TDR FSI and long term lease to promoter or builder, and for which promoter or builder will pay a consideration of 80 lakhs. And on this 80 lakhs, who will pay GST? Landowner or promoter or builder? Promoter or builder, RCM. Now using this TDR FSI long term lease, promoter or builder is making a project. In that project, so there are residential units as well as commercial units. How many are residential units booked before completion certificate? 20. Proportionate to that 20, exemption will be available. So therefore, what is the total GST payable on inward supply? If 18% is the rate of GST, take your calculator. 80 lakhs into 18%, correct? 80 lakhs into 18% is the GST liability. Now, in this 14,40,000, how much will be exempted? 14,40,000 into, what is the proportion of residential units in the total project? 20 out of total, 30 plus 15, 45. How many are residential units? 20. Out of the total number of units, 30 plus 15, 45. So 20 divided by 45, what is the proportion? 14,40,000 into 20 by 45, 6,40,000. So remaining 8 lakhs will be taxable. Understood? And when we need to pay GST, this 8 lakhs, not now. We need to pay at the time of completion certificate. The time of supply is at the time of completion certificate. So what is the exemption? Can you tell me? GST on TDR, FSI, long term lease into area of the residential units booked before completion certificate divided by total area in the project. Okay. So what is the exemption with respect to TDR, FSI and long term lease? Come on. GST on TDR, FSI, long term lease into floor area of residential units booked before completion certificate divided by total carpet area of the project. To that proportion we will get the exemption. That is what I have given. Exemption with respect to inward supply of FSI, TDR and long term lease is GST payable on inward supply into floor area of residential units booked before completion certificate or first occupation, whichever is earlier, divided by total floor area of the project. Okay. Then, so we completed Sir CG got. Okay. Sir CG got we have completed. So can you tell me what is yes? Security lending. I, import of service. R, renting of motor vehicles. Another R, renting of immobile property, that is residential property. C, copyright services. G, goods transport agency service. Another G, government to business entity. O, overseeing committee to RBI. T, TDR, transferable development rights, TDR, FSI and long term lease. Then we are discussing this salads. S for sponsorship services. Sponsorship services, in case of sponsorship service, supplier is organizer of the event and recipient is the sponsorer. The brand name owner who will make the payment is the recipient. Now, sponsorship service, we have one exemption. If it is sponsorship of a recognized sporting event, then the sponsorship service is exempted. So what is a recognized sporting event? Any sporting event conducted by a recognized sports body is a recognized sporting event. So what are recognized sports bodies? Body under National Sports Federation, Government of India, example BCCI, Indian Hockey Federation, etc. Then Inter-University Sports Board, which will conduct the games between two universities. Then Indian Olympic Association, which will conduct national games in India. Then Paralympic Committee, which will conduct games for physically challenged people. Then Central Civil Services Cultural and Sports Board and Panchayat Sports Board. So these are the 6 sports bodies which are called as recognized sports bodies. If they conduct any tournament or any match, that will be called as recognized sporting event. Now for that event, if we pay sponsorship money, that is exempted. Got it? What about IPL sponsorship? It is taxable because it is not given in this list. So therefore it is taxable. Wherever sponsorship service is taxable, we need to see whether the recipient, who is recipient in sponsorship service, the one who pay the sponsorship money, is the recipient body, corporate or firm? Yes, then it will come under RCM, otherwise it will be FCM. Understood? Sponsorship services, what you need to remember for sponsorship service? First, in sponsorship, who is the supplier? Organizer of event. Who is the recipient? The one who pay the sponsorship money. Okay. Now one exemption we have for sponsorship, that is recognize the sporting event. All other sponsorships will be taxable. When it will come under RCM? If 3 conditions are satisfied. What are the 3 conditions? Recipient should be body, corporate or firm. Correct? Only one condition. Recipient should be body, corporate or firm. Then it will come under RCM. Otherwise it will be FCM. Then agent services. So total 5 agents are covered under RCM. There is an insurance agent who is providing services to an insurance company, on which the insurance company is liable to pay GST under RCM. But here we have one exemption. If the insurance agent is working in rural area, then it is exempted. Only when the insurance agent is working in urban area, it will be taxable. So see this, there is an insurance agent to an insurance company, and if the insurance company rural area, commission is exempted. And if the agent is working in urban area, then it will be taxable under RCM. Second, recovery agent to bank, financial institution or NBFC. So generally banks will give loans, and that loans will become due, and they will appoint recovery agents to collect the dues, for which the recovery agents will get a commission. On that commission, GST is payable by bank under RCM. Then there is a direct selling agent. Direct selling agent will do marketing. So they will call and they will ask for whether you need any loans, personal loan, credit cards, etc. So these direct selling agents providing service to bank, they get a commission. That commission will be taxable under RCM. However, we have one special point here. If the direct selling agent is body, corporate or firm, it will not come under RCM, it will come under FCM. The direct selling agent should be other than body, corporate or firm, then only it will come under RCM. Then 4, that is business facilitator to a banking company. So along with exemptions we are discussing. So we have business facilitator and business correspondent under GST. Okay. So this point you just make note. So who are these business facilitators and business correspondents? Business facilitators and business correspondents are agents of the bank. Okay. So now there is a bank which will appoint a business facilitator. So what this business facilitator will do the remittance activity in the place where the bank is not having a branch or a ATM center. You go to a village, there is no ATM, but there will be some business facilitators who will give you cash and will collect the OTP from your mobile so that the money gets debited. So they will get some small commission for doing this remittance activity. They are called as business facilitators. They are called as business facilitators. Business facilitators. They can be working in rural area or urban area. Okay. Suppose if there is a business facilitator who is appointed for a rural area branch. Rural area branch. Say Mr. X is appointed as business facilitator of rural area branch. X will be providing services to rural area branch, for which the branch will give commission. So this commission will be exempted. This commission is exempted. Suppose if Mr. Y is appointed as business facilitator for urban area branch, for urban area branch, Mr. Y is appointed as business facilitator and Y provides services to urban area branch, for which urban area branch will give commission, and this commission earned by Mr. Y is also exempted. This will be taxable under RCM. Taxable under RCM means who will pay GST? Bank will pay GST. So on this commission, GST will be payable by bank. Then same way, there could be some agent of business facilitators. Business facilitator themselves is agent. They can have some sub-agents. Agent of business facilitator. Agent of business facilitators. Now, these agents of business facilitator, Mr. A is appointed as agent of business facilitator to X and Mr. B is appointed as agent of business facilitator to Mr. Y. Now, A will provide services to X, for which X will give commission. So, this commission received by A is exempted. As the main agent commission is exempted, sub-agent's commission is also exempted. Whereas Mr. B will be providing services to Mr. Y, for which Y will pay commission, and that commission is not exempted. That commission will be taxable, and it will be taxable under FCM. Means who will pay GST? Agent will pay. Okay, agent will pay. Means what is the conclusion we can draw from this? Business facilitator or agent of business facilitator earning commission from rural area is exempted, and business facilitator shall never pay GST on their outward supplies and inward supplies. On their outward supplies, who will pay? Bank will pay. On their inward supplies, who will pay? So agent will pay, which means they will not have any liability at all. Got it? This is in case of business facilitator. Same way, we have business correspondents also. So make note, there is a bank which is having, as usual, rural area branch, and urban area branch. And there is a business correspondent, appointed for rural area branch and urban area branch. So Mr. X and Mr. Y. Mr. X provides services to rural area branch, and that services provided by X is exempted. This commission is there na? That commission is exempted, just like business facilitator. What is the difference between business facilitator and correspondent? Business facilitator will do remittance activities. Business correspondent will undertake other operations of the bank, like a branch manager. So account opening, loan processing, all those works will be done by business correspondent. And business facilitator only remittance activities. Now Mr. Y provides services to urban area branch and receives commission. That commission received by Mr. Y will be taxable under FCM. Taxable under FCM means who will pay GST? Business correspondent will pay GST. Business correspondent will pay GST. Same way, there is a agent of business correspondent. Agent of business correspondent. There is a agent of business correspondent. Mr. A is appointed as agent of Mr. X and Mr. B is appointed as agent of Mr. Y. Now A provides services to Mr. X for which X will give commission, and that commission is exempted. Why? As main agent's commission is exempted, sub-agent's commission is also exempted. Then Y will provide services to X. B will provide services to Y, for which Y will pay commission. This commission is taxable under RCM. Means who will pay GST? Business correspondent only will pay GST. Which means, what is the conclusion we can draw from this? Business facilitator will never pay GST on inward supplies and outward supplies. Business correspondent only will pay GST on inward supplies and outward supplies. That is the complete difference between business facilitator and correspondent. This can be tested in exam. That's why I made you write. Okay. Now, who are the 5 agents who are covered under RCM? Agents. 5 agents. Insurance agent, recovery agent, direct selling agent other than body corporate or firm. Good. Business facilitator to banking company, then agent of business correspondent to business correspondent. Okay. Then we have advocate services, director service and security agency service. You take a break for 10 minutes because I cannot see your face and all. You are like literally, if I allow you, you will sleep. Like that you are. So take a break for 10 minutes and thereafter we will continue. So we will continue up to 5:30. Today's session is up to 5:30, and tomorrow actually I have announced the class from 10 to 6 like that. So can I take it from morning 7 to 1 or 7 to 2 like that? At least then you will not be sleeping, you will be fresh, or you will be sleeping morning also. Huh? Okay, you decide and let me know. Anything is okay for me. Okay, fine. So we'll meet at 3:30 pa, 10 minutes from now. Okay, you can go have some tea and come. Okay, we'll do one MCQ test. Okay, so from morning whatever we have studied, on that one MCQ test we will do. So just open your mobiles, vivox.com. Sorry, vivox.app, 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 and enter this ID 165839087. Yes, Abdul Samad, yes, that is sufficient. 165839087. You entered? Now, is it opening? Okay, answer this question. Are you able to see the answer? A question? Huh. Which of the following are subsumed into GST? Just open your browser, type vivox.app and enter this ID 165839087. vivox.app. vivox, vevox.app, and once you enter that, it will ask for one ID. Enter this ID 165839087. vevox, vevox 165839087. Okay, 165839087. Okay, so I will stop the poll. Which of the following are subsumed into GST? Income tax levied by central government, entertainment tax levied by local authority, luxury tax levied by state government on hotel accommodation, anti-dumping duty levied under customs on import. So multiple answers you have selected, but actually income tax levied by central government not subsumed into GST. How income tax will be subsumed into GST here? Entertainment tax levied by local authority also not subsumed. Entertainment tax levied by state government only got subsumed into GST. Luxury tax levied by state government, yes, it got subsumed into GST. Anti-dumping duty under customs also, that is customs, not subsumed into GST. Out of these four, only one got subsumed into GST, that is option C, luxury tax levied by state government on hotel accommodation. Then next one, the two components of dual GST model are The two components of dual GST model are done pa? So don't take too much time, only 30 seconds for each MCQ, okay. So the answer is CGST and SGST is only correct, because dual GST model means where central government and state government both levy GST on the common tax base. So therefore it is CGST and SGST. Then next, which of the following tax is not levied on tobacco products? GST, central excise duty, value added tax and GST compensation cess. Which of the following tax is not levied on tobacco products? Okay, I'll stop. So it is not levied on tobacco products. Actually on tobacco products we have GST. Only on two products there is no GST, that is alcoholic liquor for human consumption and petroleum products. On tobacco products we have old indirect taxes, that is central excise duty, as well as new indirect tax GST. But CST and VAT is also not there. CST and VAT alone not there, but old indirect taxes, excise duty is there. Compensation cess is also there and GST is also there. So the option C is the correct answer. Not levied on tobacco products is value added tax and central sales tax. Then next one, GST network is a dash entity. Yes. Okay, I'll stop. GST network is a 100% government owned entity, in that 50% is owned by central government and 50% is owned by all state governments together. So, but it's a 100% government entity, not 100% central government, not 100% private. Partly government, partly private also wrong. So, option D is the correct answer. 50% by CG and 50% by state governments. Then next one, in the new return mechanism, the inward supplies are availed in dash. In which return the inward supplies like details are availed? Okay, I'll stop. It is not 2A, 2B and all, it is 3B. 3B is the correct option, because ITC where we will avail in 3B and it is reflected in GSTR 2B, but we will avail it, take it in 3B. Okay, so it is GSTR 3B is the correct answer. Option C. Which of the following commodities are not kept outside the ambit of GST regime? Not kept outside the ambit of GST regime. Yes. So the answer for this is kerosene oil, because aviation turbine fuel kept outside the ambit of GST, whiskey also kept outside the ambit of GST, beer also, alcoholic liquor kept outside, kerosene oil only not kept outside the ambit of GST. Kerosene oil is covered under GST, because what are the 5 petroleum products? Crude oil, petrol, diesel, aviation turbine fuel and natural gas. On LPG will there be GST or not? Yes, there is GST on LPG, because LPG is not natural gas. So two students got 5 out of 6, Girish and Loganathan. Yarpa Girish? Very good, Girish. Loganathan? Good, sir. Very good. Now, one more, that is on supply. Okay. So just come out and enter this ID. Again, vivox.app 155738321. 155738321. Give your name and join. One double 5738321. First question will be visible. See there. Which of the following activities outside the scope of supply and not taxable under GST? Services by an employee to employer in the course of employment, service of funeral, actionable claims other than lottery, betting, gambling, all the above. Okay. Done. I'll stop. So the answer for this is all the above, because employee to employer in the course of employment excluded from supply. Funeral also excluded from supply. Spalled slopa. Actionable claims other than lottery, betting, gambling also excluded from supply. So all the above are excluded from supply. Next. Which of the following is not a supply as per section 7 of CGST Act? Read the question properly. Which of the following is not a supply? Okay, 10 seconds more. Okay, I'll stop. Import of health consultancy from A for consideration, not in the course or furtherance of business, is supply, because 7(1)(b) whether or not in the course or furtherance of business, so first one is wrong. Gift of business stock by A to his son who is not dependent on him is also supply. Why? Related party. Son whether or not dependent is always related, so B is also wrong. Management consultancy service by X Limited to its client without consideration, but in the course or furtherance of business, not a supply. Client is not related. Without consideration means DRIP, disposal of business asset will not come. Import of service from related person, no. Related party transaction, no. Principal agent transaction, no. So therefore C will be not a supply. D is supply. Sale of scrap arising out of manufacture. Sale, the moment you see sale, 7(1)(a). So therefore C only not covered under supply, that is the correct answer. Which of the following transactions is not covered under supply? Lottery, betting and gambling transactions, salary to partners by firm, sale of cryptocurrency, service by stockbroker in relation to transaction in securities. இதெல்லாம் பார்த்து ஆன்சர் பண்ணக்கூடாது. It's a test, okay? Done? Okay. Whenever you are confused, no, use odd one out as the test. Odd one out. Odd one out means not related to this. Lottery, betting, gambling, you know that it is excluded from supply. Sorry, covered under supply. And cryptocurrency also, you know that it is covered under supply. Stockbroker is also covered under supply. Salary to partners by partnership firm is odd one out. So that is not the supply. And yes, because salary to partner is withdrawal of profit for his investment. So that is not treated as supply. So B is the correct answer. A Limited undertakes to sell land to Mr. X and has collected a part consideration before executing transfer deed and collected balance amount after executing the transfer deed. Whether the said transaction constitutes supply. Okay, we'll stop. So answer is option D, sale of land. Sale of land always excluded from supply. Why are you reading part consideration before, part consideration after all these things? That is only for sale of building. Sale of land always excluded from supply. Okay, so answer D, option is D. Then ABS Company Private Limited provides certain service to Mr. Jacob, who holds 35% of voting right in the company. The service are provided without any consideration. Thus the same qualify as supply. Okay, I'll stop. %35% of voting right in the company will not become related, because in order to have control, how much should be the control? Investment greater than 50%. That's what we discussed. So in this case, 35% of the voting right in the company will not come under control. So due to that reason, it is not a supply. So it will not come under related party transaction. So option D is the answer. Next, which of the following is not covered under Schedule 3 of CGST Act? Service provided by an employer to his employee on the occasion of his marriage. Functions performed by members of municipality and local authorities. Duties performed by a director in a body established by central government. Actionable claims other than lottery, betting and gambling. Okay. Service provided by employer to employee on the occasion of his marriage. So, is it covered or not covered? Employer to employee. Definitely employer to employee should be in the course or furtherance of business. So, first one is not covered, and they are asking not under supply. Schedule 3. In schedule 3, what is covered? Employee to employer. So, first one is not covered in schedule 3. Functions performed by member of municipality, local authority. Where it will come? Government post. Government post is covered under schedule 3. Then duties performed by director in a body establishment, central government. So that is what? No, government post, nominated post. Do you remember constitutional post? In that nominated post, that is also covered under schedule 3. Actionable claims other than lottery, betting, gambling covered under schedule 3. So what is not covered under schedule 3? Only 1. So 2, 3 and 4 is covered under schedule 3. So option B is the correct answer. Mr. Sundar trades in certain items which are exempted and supplies the same to SEZ. This will be classified as. So this I have not discussed, but let's see how many of you answer correctly. Okay. See, there are two transactions which are treated as zero rated supplies under GST. What are they? Export of goods or services and supply of goods or services to SEZ are treated as zero rated supplies. So therefore the answer is zero rated supplies. Option C is the answer. Which of the following transactions does not qualify as supply under GST law? When the head office makes supply of service to its own branch outside the state, when a person imports service without consideration for the purpose of his business from his elder brother dependent on him living outside India, which of the following does not qualify as supply? Okay. Disposal of car, then principal makes supply to agent. Yes. So first one, when head office makes supply of service to its own branch outside the state, it is supply 71C, distinct persons. person importing services without consideration for his business purpose, elder brother dependent on him, that is also supply 7.1c. Disposal of car without consideration where ITC not availed, not a supply. So third one is not a supply. Principal makes supply to his agent who is also registered and situated within the same state. So that is supply, principal agent transaction. So only 3 is the correct answer. Good, majority answered correctly. Next one, tenancy rights to a new tenant for residential property against consideration in the form of tenancy premium is. Okay, we discussed, you were actually sleeping at that time. Okay, see this, tenancy premium, I told you, received by the tenant will always be taxable. Okay, so it will always be taxable, and in the hands of property owner, taxable in the hands of old tenant, and so it is what type of property? Residential property, correct? So therefore it will be exempted in the hands of the property owner. Understood? Sir, but residential property, it is not given as registered person or unregistered person. So usually we need to take it as unregistered person. Only when it is given as registered person it will be taxable, but generally it is unregistered person exempted. So option C is the correct answer. Last one, which of the following is not a supply of service? Okay. Renting of commercial office complex is service. Payment of non-compete fee, consideration for not doing an act, service. Repairing of mobile phone also service. Permanent transfer of business asset, I told business asset only, not a service. So 2, Monique Vikas. Who is Monique Vikas? Good, dear. Sriram, yes, good. So coming back to this RCM, so what we have completed so far is Sir, CG, got, salads. In that yes and A, sponsorship service and agent service we completed. We need to learn about legal services and arbitrator services. So first let's see the background. A person who is holding a law degree can either practice as an advocate or can practice as arbitrator. If they practice as advocate, they will be practicing by way of settling the dispute through the court of law. If they practice as an arbitrator, they will settle out of the court. And advocate can either practice as individual, firm or body corporate. But when they practice as a body corporate, they cannot provide representation service, they can do only consulting. And if they practice as individual or firm, they can appear on behalf of the client. And individual again divided into 2, senior advocate and normal advocate. Senior advocate is a designation which is given by High Court or Supreme Court. Now the exemptions with respect to these advocates and arbitrators are divided into 2. Individual advocate other than senior advocate, that is a normal advocate and firm of advocate, we have one set of exemptions. For senior advocate and arbitrator, we have other set of exemptions. First, we will see normal advocate and firm of advocate. If they provide services to a person other than business entity, exempted, means individuals, exempted. And if they provide service to another individual advocate or firm of advocate, then also exempted. If they provide services to government, then also it is exempted. Or if they provide service to a business entity whose turnover during previous year does not exceed threshold limit, it is exempted. 4 cases exempted. Remaining cases it is taxable. Wherever it is taxable, it will come under RCM. If they provide service to an individual, exempted. For example, criminal cases, civil cases, etc. for individuals, exempted. If they provide service to another individual advocate or firm of advocate, exempted. If they provide service to government, exempted. If they provide service to a normal business entity whose turnover during previous year does not exceed threshold limit, exempted. Then when it will be taxable? If they are providing service to a business entity whose turnover during previous year exceeds threshold limit, then it will be taxable, and wherever it is taxable, the business entity will pay GST under RCM. Whereas for senior advocate and arbitrator, if you see, so we have only 3 exemptions. First point, third point and fourth point. That is, if they provide services to a person other than business entity, exempted. If they provide service to government, exempted. If they provide service to business entity whose turnover during previous year does not exceed threshold limit, exempted. So which point is missing? If they provide service to another individual advocate or firm of advocate, it is missing. Now what will be taken? If a senior advocate is providing service to individual advocate or firm of advocates, then we will not see individual advocate or firm of advocate as the recipient, but the ultimate litigant, applicant or petitioner will be taken as the recipient, and accordingly we will interpret. So if this litigant, applicant or petitioner is individual, exempted. If they are government, exempted. If they are business entity whose turnover during previous year does not exceed threshold limit, exempted. Otherwise it will be taxable. So whenever senior advocate provides service to individual advocate or firm of advocate, don't see them as recipient. You see in turn they are providing service to whom? So they will only be treated as the recipient, and invoice will be raised by senior advocate to them only. Got it? Next, D. So we have completed. Sir, CG got salads. In that salads, yes, A, L, A, we have completed. So can you tell me what is yes? Security lending. I, import of services. R, renting of motor vehicles. Another R, renting of residential property. C, copyright. G, GTA. Another G, government to business entity. O, overseeing committee to RBI. T, TDR, FSN, long-term lease. Yes, sponsorship. A, agents. L, legal service by individual advocate or firm of advocate. A, arbitrator services. D refers to director services by director services to company or body corporate. So there is a director who is providing service to company or body corporate, and the director will receive some remuneration. So that will be covered under RCM. But the director should not be an employee of the company. If director becomes employee of the company, then it is excluded from supply employee to employer in the course of employment. So the remuneration or any other amount paid to director, will it be chargeable to TDS under 192 of Income Tax Act? Yes, means definitely it will be covered under salaries for the purpose of director's income. So therefore it is excluded from supply. Including income from salaries in the hands of director, so it is excluded from supply, and it will come under contract of service. Suppose if it is chargeable to TDS under 194J of Income Tax Act, then the money received by the director will come under income from PGBP or IFOS. So which means it is not salaries. That's why it will be covered under supply. Example, sitting fee, referral fee, commission, professional fee, etc. That is contract for service. Then security agency services. Security agency services, we don't have any exemption. It will always be taxable. Security agency refers to this manpower supply agency who will supply the security personnel for hospitals, banks, then even education institutions, etc. And this security agency, if the supplier is other than body corporate, who is a body corporate? Private limited company, public limited company, or any body established under any law for the time being in force, like RBI, ICI, ICMA, ICSI, these are all called as body corporates, okay. And supplier should be other than body corporate, and recipient should be registered but not opting for composition scheme and not registered only to deduct TDS, then it will be RCM. Otherwise, it will be FCM. So, what are the two conditions for RCM? Supplier should be other than body corporate, recipient should be registered but not opting for composition scheme or not registered only to deduct TDS. Otherwise, it will be FCM. Then, we are moving on to 9 subsection 4. We have completed the list of services covered under RCM. Now, what you need to do is that in the question, once you see, just you need to run through whether it is covered under Sir CG got salads, and if it is exempted, you will write it as exempted. No, it is covered under RCM, so you will not tax it in the hands of supplier, but you will be taxing it in the hands of the recipient. Then 9 subsection 4 is the last area in charge under GST, CGST, that is, there is a promoter or builder. That promoter or builder is making purchases from an unregistered person. So, that promoter or builder is required to pay GST under RCM. So, 9 subsection 4 is applicable only to a promoter or builder who is making purchases from an unregistered person. First of all, we will try to understand little background related to this. So, that is, what is the GST rates of a promoter or builder? So, the GST rate of a promoter or builder is, if it is a residential and that too affordable housing, then 1.5% without ITC. Non-affordable housing, then 7.5% without ITC, and it will be computed on value of flat or unit excluding the value of UDS. So, whenever you are buying a flat, you pay not only for the flat but also for the land beneath that flat. That is called as UDS, undivided share of land, and therefore 1/3 should be reduced towards the undivided share of land. So, 2/3 will only be taxable under GST. For example, the flat is 75 lakhs, then how much will be chargeable to GST? Only 50 lakhs. 2/3 only, 1/3 we will get exemption with respect to UDS. So, therefore, maximum 1/3 of the gross amount charged is exempted. So, remaining only will be chargeable to GST. At what rate? We need to check, is it residential or is it commercial? If it is residential, affordable housing 1.5%, non-affordable housing 7.5%. What is the difference between affordable and non-affordable? Affordable means if you are located in metro cities. What are metro cities? Chennai, Hyderabad, Mumbai, Delhi, Bangalore and Calcutta. Bangalore and Calcutta also taken as metro for this purpose. So, these are all the metro cities. For these metro cities, so it should be 60 square meters. 60 square meters means approximately 600 square feet. Okay, 646, it is approximately 600 square feet. Means what? 1 bedroom house, 1 BHK. Okay, and value does not exceed 45 lakhs. Sir, 45 lakhs means somewhere little outskirts. Within city and all we will not get at this rate. So, then it is affordable housing. Rate of GST will be 1.5%. If it is non-affordable, above this, all flats we see is 60 lakhs minimum here. Minimum 60, okay, and it goes to 60, 70, 80, 1.5 crores, 2.5 crores and all, that will be non-affordable. And what will be the rate of GST? 7.5%. If you are not in metro cities, if you are in other cities, then 90 square meters with a value not exceeding 45 lakhs, because in other places the cost will be less na. So, there 30 square meters increase, that is approximately 300 square feet increase, means 900 square feet. So, it does not exceed 45 lakhs, affordable 1.5, otherwise it will be 7.5%. This rate you need to remember. Okay. So, for CA exams and all not required, but CMA exams it is required. You have to remember this. Okay. And in case of commercial, what is the rate of GST? 18% with ITC. That is the rate of GST in case of commercial. Okay. And with ITC. Now listen, a builder cannot take ITC on their inward supply if they are making residential flats, because rate of GST is what? 1.5% without ITC or 7.5% without ITC. So, naturally they will make purchases from a unregistered person to save the tax, and if they make purchases from unregistered person, they need to pay GST under RCM. See, if you are not able to take ITC, naturally you will buy from an unregistered person. If you are able to take ITC, you are indifferent. You can buy from registered or unregistered, it's okay, because input tax credit you will get. For example, 10,000 rupees, 1,200. If you buy from registered person, 11,200 is your cost. If you buy from unregistered person, only 10,000 is your cost. If ITC not available, you will definitely go for purchase from unregistered person. If ITC available, even if you buy from registered person 11,200, 1,200 you can take as input tax credit. So therefore the cost will be same. So that's why you are indifferent. But here why promoter or builder is making purchase from unregistered person? Because they will not get ITC. That's where government is coming and telling you have to pay GST under RCM. Now on all we have to pay GST under RCM? No, they gave a relaxation. In case of inputs and input services, so 20% you can buy from an unregistered person, but 80% you should purchase from a registered person. But for capital goods, 100% of the capital goods should be purchased from a registered person. So see there, first capital goods. Capital goods purchased from RP, purchased from URP, purchased from RP, registered person. So whether any GST payable under RCM? No. Why? Because already you paid GST to the supplier. Whereas whenever you are making purchase from an unregistered person, whether you need to pay GST under RCM? Yes. And at what rate you need to pay GST under RCM? At the rate applicable to the capital goods. Understood capital goods? This is step number 1. What is step number 1 that you need to remember? Check capital goods. Purchased from RP, leave it, ignore. Purchased from URP. See what is the value of capital goods, multiply with the GST rate, that much you need to pay GST under RCM 9 subsection 4. Okay. Then you take inputs and input services. In these inputs and input services, few things you need to eliminate. Few things you need to eliminate because either it will not have GST or it is already covered under 9.3. So we have to exclude TDR FSI long term lease. Why? Because it's already covered under 9.3. Anyhow on that we need to pay GST under RCM. Then next, promoter or builder is required to pay GST under RCM. Next, electricity. Why electricity we need to exclude? Because electricity is exempted. And petrol, diesel and ATF. Why it should be excluded? Non-taxable. So three things you need to exclude. What are they? TDR FSI long term lease, electricity, petrol, diesel, ATF, etc. Now balance inputs and input services. Okay. How much you should buy from a registered person? 80%. Suppose if you have purchased from registered person more than 80%, say 90% you purchase from registered person, 10% from unregistered person, but in the 10% cement is there. Cement always you need to buy from a registered person because the rate of GST on cement is 28% and government is not ready to lose that 28%. So therefore on cement we need to pay GST under RCM at what rate? 28%. Suppose if it is other inputs and input service, no need to pay because already you achieved 80% condition. What if there is a shortfall of 80%? Suppose if you have purchased from registered person less than 80%, say 70% you purchase from registered person. What is the shortfall? 10. On the 10 you need to pay GST under RCM. If it is cement, 28%. If it is other goods or services, 18%. And suppose you achieved 80 now, 70, now 10 you paid GST under RCM, so you achieved 80, remaining 20. On the 20, again you need to see, cement is there, yes, you need to pay GST under RCM 28%, other inputs and input service, GST not payable under RCM 9 subsection 4. And special points, cement and capital goods should always be purchased from registered person, otherwise GST payable under RCM 9 subsection 4. And the computation should be made annually or up to completion certificate, whichever is earlier as the case may be. For example, if the construction takes 2 years, 8 months, then first year fully, second year fully, third year for 8 months we need to make the computation. Computation should be made separately with respect to each project. Okay. So this is with respect to this. And what are the steps you need to remember? So you just write down. So write down the steps that is involved for 9 subsection 4. So whenever you get a question on 9 subsection 4, what you need to do is that first step, you need to check, is it capital goods? Is it capital goods? Capital goods divided into 2. From RP, from registered person, ignore, correct? Ignore, no need to pay any GST under RCM. Now from URP, from unregistered person, now what you need to do? Pay GST under RCM at applicable rates. At applicable rates. Now step 1 over. Step 2, take cement. Why? Because cement also, like capital goods, we have a special case. So take cement. Cement purchased from registered person or from unregistered person. Cement purchased from registered person and from unregistered person. If you are buying cement from registered person, ignore. Anyhow, you purchased it from a registered person. If you already paid to him, he will pay to government. If you buy from unregistered person, pay GST under RCM. At what rate? Pay GST under RCM at 28%. Now, as and when you pay GST under RCM on cement, it is as good as purchased from a registered person. Now, third step, final step. Balance from unregistered person. Balance from unregistered person. Correct? Huh? What are all the balance from unregistered person? Divided by total inputs and input services. Total inputs and input services. Including cement, correct? Including cement, but other than TDR, FSI, electricity, that should not be taken at all. Into 100, you see what is the percentage. Is it greater than 80% or equal to 80%? Ignore. Why? What is the condition? You should achieve 80%. You achieved. So, sorry, not 80, 20. Purchase from unregistered person is 20. Greater than or equals to 20. So, greater than or equals to 20 or, one second, less than or equals to 20%. Ignore. Why? Because 80% you purchased from registered. Because we started with balance from unregistered. Balance from unregistered is less than or equals to 20, means we achieved 80% from registered. So ignore. Cement already considered, that's why. Cement already considered in step 2, ignore. Suppose if it is greater than 20%, then means whatever is excess, on that excess you need to pay GST. Excess beyond 20%, excess beyond 20%, GST payable under RCM, GST payable under RCM at what rate? At 18%. For example, if it is 23%, what is excess? 3%. The 3% value, how much you take, multiply with 18%, you need to pay GST under RCM. Simple, can you remember these 3 steps? Yes. So with this we completed. So 9 subsection 4, 9 subsection 5 already we have completed. The next area is exemptions under GST. So we will do one small test on this liability to pay tax, so that you will get the confidence as to that we have completed this also fully. Okay, enter this number, same vivox.app 108 929 001. Come out. Again come out and log in. Vivox.app. You are not able to see this? Which of the following service provided by e-commerce operator is notified by government on which tax is payable by e-commerce operator? Okay. So transportation of goods is not covered under 9.5. Not covered. Only transportation of passengers. HATE. Transportation of goods not covered. So accommodation in hotels, hotel is registered. That is also not covered. Housekeeping and person is not registered. That is covered under 9.5. Transportation of passengers by air is not covered. Only transportation of passengers by any motor vehicle. So airlines, aircraft and all will not come under motor vehicle. Aircraft, railways, ship will not come under motor vehicle. Motor vehicle means what? Which is used in the roads. That will only come under motor vehicle. So the answer is C. Good. When can a supplier making supply of service through e-commerce operator as well as directly opt not to register? Okay. So when supplier does not cross the threshold limit, they are not required to register. We discussed now supply of services through e-commerce operator not compulsorily required to get registered. When they are required to get registered, only when their aggregate turnover exceeds threshold limit. So option B is the answer. Why B and C cumulatively fulfilled? No way it is connected. Option C. B is not at all required. E-commerce operator is not required to collect tax under section 52. That is irrelevant. So for supplier of service through e-commerce operator, when they need to register, only when their aggregate turnover exceeds threshold limit. If their aggregate turnover does not exceed threshold limit, they are not required to register. As simple as that. Don't complicate. Okay. Then see, first you have to believe in yourself. You should not think whatever you have learnt itself is the provision. Whatever you have learnt itself is the concept. No, something they will twist, but you should not deviate from that. Okay. What if an e-commerce operator having no physical presence in the taxable territory does not have a representative in the taxable territory? Okay. So what is the answer? Neither physical presence nor representative. So they have to appoint a person. This is the only question. Perfectly you answered. Which of the following statement is correct with respect to supply of restaurant services through an e-commerce operator? Only if restaurant is unregistered, e-commerce operator shall pay GST. 100% ITC is available to e-commerce operator even though the rate of GST applicable on restaurant is 5% without ITC. When restaurant services are supplied through e-commerce operator, invoice shall be raised by restaurant to the customer. Restaurant service through e-commerce operator should be included in the aggregate turnover of restaurant but not of e-commerce operator. Which of the statement is correct? Okay. See, if restaurant is registered or unregistered, e-commerce operator only will pay GST. Option A is wrong. Because we discussed HATE. T and E, whether supplier is registered or not, e-commerce operator only will pay. So first one is incorrect. Okay, next. Second one, ITC is available to e-commerce operator even though the rate of GST applicable on restaurant is 5%. Correct. Because is e-commerce operator doing food or restaurant is doing food? Who is making food? Then the restriction is only for the restaurant. The rate of restaurant, why is it applicable on e-commerce operator? For e-commerce operator, so they can take ITs, there is no restriction. For restaurant only there is a restriction because they are only making food and selling food, but e-commerce operator is not making food, is just doing the delivery of that food. So therefore e-commerce operator can take full ITC, there is no restriction. So option B is correct. When services are supplied through e-commerce operator, invoice shall be raised by restaurant. Why here? Who is liable to pay GST? That person will raise invoice. Who is liable to pay GST? E-commerce operator. So e-commerce operator will raise invoice. When you buy from Swiggy or Zomato, who will give invoice to you? Swiggy or Zomato only will give invoice. That's the reason why if you make a complaint, they will give refund also. No? Yes or no? Or will they say, I don't know all those things, go and talk to restaurant. Will they say that way? No. They will look into it because they are only the supplier, they are only raising invoice like that. Then, restaurant service through e-commerce operator should be included in the restaurant but not of e-commerce operator. No, it should be included in the aggregate turnover of both restaurant as well as e-commerce operator. E-commerce operator, why? Because they are raising invoice. Restaurant, why? Because they are making the food and supplying the food. So it should be included in both aggregate turnover. All these are based on one circular, one clarification which is given, and that is given in new study material. Old study material not given, but in one supplementary study material like that they gave in CMA. So in that supplementary study material this circular is available. Okay, fine, no issue. B1 is correct answer. Next one, X Limited, a real estate promoter, procured following for the financial year 22-23. Compute GST payable under RCM. Inputs other than cement from a registered person 800, from unregistered person 400, cement from registered person 20 lakhs and unregistered person 100 lakhs, input service from registered person 30 lakhs, unregistered person 10 lakhs. Come on, try. Yes, finished. Okay. So just apply in that steps, you will definitely get the answer. Okay, I'll stop the poll. Okay, say this. Only some students answered. So we have capital goods. So what is the capital goods here? Anything? No, no capital goods. Cement? Yes. Cement from unregistered person, how much? 100 lakhs. On that we need to pay GST under RCM, that is 28%, 28 lakhs plus. What is the remaining from unregistered person? 10. 10 divided by total. What is the total? So inputs from registered person 800 and 40. No, input services only. So then 40 na. So can you please tell me this first? So RP, URP. So cement. Cement, how much is from registered person, unregistered person? Cement is 20 lakhs from registered and 40 lakhs from unregistered. So 20 lakhs, 40 lakhs, 100 lakhs. Okay. Then inputs, 800 lakhs from registered and 40 from unregistered. Then input services 30 and 10. Input services 30 lakhs and 10 lakhs. Now see the total of this. What is the total of this? 20 plus 100 plus 800 plus 40 plus 30 plus 10, 1000 lakhs. 1000 lakhs. Now first step, capital goods we don't have. Second step, cement. So on cement purchased from unregistered person, we need to pay GST at 28%, so 28 lakhs. Now remaining from unregistered person, 40 plus 10, 50. 50 divided by 1000 into 100, how much? Remaining from unregistered person, 40 plus 10, 50 divided by 1000, how much? 5%. It does not exceed 20%, so ignore. So therefore the answer is 28 lakhs. Okay. So 28 lakhs, majority of the students answered. Very good, correct. Next one you try, this one. X Limited, a real estate promoter, procured the following for the financial year 22-23. Compute GST payable under RCM 94. Inputs other than cement from registered person 700 lakhs, from unregistered person 180 lakhs, cement from registered 70, and we don't have anything from unregistered. Input service from registered 30, unregistered 20. Yes. Okay, I'll stop. So here 700 unregistered 180, correct? So cement is fully from registered. Cement is fully from registered, we don't have anything from unregistered. Inputs, so 700 and 180, 700 and 180. Input services, cement from registered, services 30 and 20, 30 and 20. So what is the total? 1000 lakhs. Cement, we don't have anything to pay GST, and remaining, what is remaining? 200. 200 divided by 1000 into 100, 20%, exactly 20%, ignore. So therefore there is no need to pay any GST under RCM, nil is the correct answer. Then last question, one more question on this. X Limited real estate promoter procured following for the financial year, compute GST payable under RCM. Inputs other than cement from registered 600, unregistered 210, cement from registered 120, unregistered 60, input service from unregistered 10. Okay. Okay, I am stopping. So here first inputs other than cement 600 and 210, correct? 600 and 210, and cement from registered person 120, unregistered 60, input services from unregistered 10. So the total is 1000. Yes. So cement purchased from unregistered person 60, on the 28% we need to pay. So 60 into 28%, 16.8. Then balance from unregistered person is, so 210 plus 10, 220. 220 divided by 1000 into 100, 22%. So what is excess? 20 lakhs. On the 20 lakhs we need to pay GST at 18%, that is 3.6 lakhs. So 16.8 plus 3.6, the total is 20.4 lakhs is the answer. So the answer for this is 20.4 lakhs. Okay. So next, one more, last one. Which category of supply is specified under 9(5) of CGST Act? A simple question only. Okay. So it is only services. We don't have under 9.5 goods. This also you answered wrongly. So both goods and service. Where both goods and service is there in 9.5? 9.5 we have only services. Okay. So again 2 students, Srinivasan and Sriram. Srinivasan. Okay. Sriram, you only. Okay. Good. And now we will move on to the next area, that is exemptions under GST. Already few exemptions we have completed along with RCM. Now the remaining exemptions we are discussing in this. First, agriculture related services. In agriculture related service, sector wise we are discussing the exemptions. Agriculture related, so any service in relation to agriculture or agricultural produce is exempted. That is, someone is doing agriculture and I am providing some services in relation to agriculture. What services? Harvesting services or soil testing, seed testing or supply of farm labor. So any service in relation to agriculture is exempted. Same way there is some agricultural produce. In relation to that agricultural produce, I provide some services like packing of agricultural produce or storage of agricultural produce or transportation of that agricultural produce, like that. So any service in relation to agriculture or agricultural produce is exempted. Now what is the meaning of agriculture? Agriculture means cultivation of plants and rearing of all life forms of animals except rearing of horses. So cultivation of plants will come under agriculture and rearing of all life forms of animals except horses. For what purpose? Food, that is poultries. Poultries will come into this. Then fisheries also. Then fiber, that is sericulture, silkworm. Then fuel, so cattle rearing for the purpose of using it as, for pulling the carts, for pulling the, ploughing purposes and all, they use the cattle, na? So for fuel. Raw material, honeybee farming, so for raw material or any other similar products. But horses is no way connected to agriculture. That's the reason why except horses. This is the meaning of agriculture which we need to remember. Then agricultural produce. Agricultural produce means what? The primary produce out of agriculture. So whatever this the output that we get out of the agriculture on which no processing is done, means directly fruits, vegetables will come under agricultural produce, or such processing is done as is usually done by a cultivator which does not alter its essential characteristics but makes it marketable for primary market. So tender coconut is agricultural produce. We remove a layer and we get a coconut. So that coconut is also agricultural produce because it does not change the essential characteristics and it is usually done by the cultivator or producer. Whereas from that coconut, if you sun dry it and take copra, dry coconut, that is also agricultural produce. But when you extract oil, coconut oil, that is not agricultural produce because that is processed. Paddy is agricultural produce. Rice is not agricultural produce because even though rice to paddy, essential characteristics are not changed, but this paddy to rice is not done usually by a cultivator or producer. What is the word given there? Usually done by a cultivator or producer only is given. So not usually done, it will be done by rice mills. That's the reason why rice is not an agricultural produce. But in case of rice, they have given few exemptions, that is loading, unloading, packing and warehousing of rice. Only 4 activities. What about other goods? If it is agricultural produce, anyhow any activity will be exempted. But as rice is not an agricultural produce, so 4 activities in relation to rice is exempted, that is loading, unloading, packing and storage. Then artificial insemination of livestock. So through artificial process, so we create the embryos into the animals for reproduction. So this is known as artificial insemination. So that will be also exempted. And 6th one, storage or warehousing of cereals and pulses. So first we need to understand, if it is an agricultural produce like sugar cane, then tea leaves or even fruits and vegetables, it is anyhow exempted. But if it is not agricultural produce, then only one product here is exempted, that is cereals and pulses. Also minor forest produce. These cereals and pulses, dals and minor forest produce like herbs which are available in the forest, bamboo, then the Ayurvedic herbs, shikakai, these are all something minor forest produce. This is not agricultural produce. Even though the cereals and pulses and minor forest produce is not agricultural produce, but its storage is exempted. What if it is storage of agricultural produce? Anyhow, it is covered under the first point. Any service in relation to agriculture or agricultural produce is exempted. Then previously we had these 2 points, that is fumigation in a warehouse of agricultural produce, and now it is omitted. So in warehouse we put the fumigation like pesticides, insecticides, etc. Previously it was exempted, now it is omitted, so taxable. And slaughtering of animals previously exempted, now it is omitted, so therefore it is taxable. That is the amendment in this. Then insurance services. So we completed agriculture related service. The next area is insurance service. In insurance service, remember, if there is NPS trust, National Pension System Trust, that NPS trust providing insurance services, collecting the premium, that premium collected by them is exempted. Then group life insurance funds. So group life insurance funds means, so people will form a group and contribute some amount towards that life insurance fund, and on the expiry of any member of that group from that fund, they will be receiving, that is their family members will receive the money. So this is group insurance fund. But only 5 group insurance funds are exempted: Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces. Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces. So their group insurance fund, the premium collected will be exempted. That is second one. Then there is an insurance company which is providing general insurance business, and the targeted audience are, so agriculture and farmers, below poverty line, women and infants, unemployed. So then that insurance scheme will be exempted. It's a insurance scheme provided by a insurance company, but the insurance scheme is notified by the government, so the premium collected is exempted. And Nirmaya health insurance is also exempted. Then there is an insurance company which is providing life insurance services. So but that life insurance service is under government notified scheme. How do we know that it's a government notified scheme? The scheme will end with the words Yojana. Pradhana Mantri Suraksha Bima Yojana, Aam Aadmi Bima Yojana, these are all examples. So the premium collected is exempted. Even micro life insurance having a sum assured not exceeding 2 lakh rupees is exempted, but maximum 2 lakhs. If it exceeds 2 lakhs, then that will be taxable. Micro life insurance means usually the premium will be smaller amounts, so that will be exempted, provided the sum assured does not exceed 2 lakhs. Then insurance services provided to government. So the government also will take insurance, and an insurance company is providing insurance to government for which they collect a premium. That premium collected will be exempted. Now reinsurance of any exempted insurance is also exempted. What is that? So government is taking insurance for an airport, and one insurance company is providing the insurance service to the airport for government. Now in order to mitigate the risk, they will take reinsurance with another insurance company. One insurance company will take insurance with another insurance company, that is reinsurance. As main insurance is exempted, reinsurance is also exempted. Then this already we discussed, business facilitator or business correspondent to insurance company in rural area. So insurance agent working in rural area, commission earned by them is exempted. Then next one, banking and other financial services. In this, so we need to understand that transaction in money without consideration is neither goods nor services, already we have seen. But transaction in money for a separate consideration will be treated as supply of service. If that consideration is represented by way of interest or discount on loans, advances, deposits, that is exempted. So on loans, advances or deposits, the interest income earned or the discount income earned will be exempted. But all other consideration for a bank will be taxable. NEFT charges, RTGS charges, debit card charges, credit card charges, everything will be taxable under FCM, including interest in case of credit cards. So interest, generally interest is exempted, but interest on credit cards will be taxable. Then services provided by banking company to basic savings deposit account holders under Pradhana Mantri Jan Dhan Yojana. Under PMJDY scheme, so banks will be allowing people below poverty line to open bank accounts mainly for the purpose of transfer of LPG subsidy and any incentives given by the government. So these people are called as saving account holders under Pradhana Mantri Jan Dhan Yojana. To them, if any service is provided by the bank, if the bank collects some charges, that will be exempted, any service. Then number 3, foreign exchange transactions. That foreign exchange transactions including money changing that takes place between banks is exempted. between forex dealers is exempted, between bank and forex dealer is exempted, and then when it will be taxable, only when the transaction takes place between bank or forex dealer and the customer, then only it will be taxable. Then services by an acquiring bank, that is usually whenever we make the payments, card payments, full amount will not be going to the supplier. So some processing fee will be collected by the intermediary called as acquiring bank. On this processing fee, GST will be applicable. If the transaction amount does not exceed 2000, means swipe amount does not exceed 2000, then also processing fee will be there. But on that processing fee, GST is exempted. That is this point. So read that. Service by an acquiring bank to any person in relation to settlement of an amount up to 2000 in a single transaction transacted through credit card, debit card, charge card or any other payment card service. So what is it you need to remember? GST on processing charges for a transaction up to 2000 rupees is exempted. Then services by an intermediary of financial services located in a multi-service SEZ. That is, there is an intermediary who is located in multi-service SEZ in India. Only one multi-service SEZ in India is GIFT City, Gujarat International Fintech City, and in that there is one person who is intermediary providing services to their customers outside India, and they are getting in relation to currency other than foreign exchange. Now that service is exempted. It will not qualify for export of service, because in case of banking and other financial service, location of supplier will be taken as the place of supply. So in order to become export of service, 5 conditions should be satisfied. What are those 5 conditions? Kindly make note. So export of services, in order to qualify as export of services, so total 5 conditions should be satisfied. Condition number 1, where the supplier should be. Come on, think. Where the supplier should be in India. And where the recipient should be outside India. And place of supply should also be outside India. Why place of supply is relevant? In order to classify a transaction into interstate or intrastate, place of supply is relevant. Place of supply should also be outside India. And then number 3, supplier consideration. How the consideration should be? So consideration in case of Nepal or Bhutan. In case of Nepal or Bhutan, the consideration can be in Indian rupees or foreign currency, but if it is other countries, the consideration should be in convertible foreign exchange, foreign currency. And number 4 is this. Number 5, supplier and recipient are not two establishments of the same person. Supplier and recipient are not two establishments of same person, If these 5 conditions are satisfied, then the service will be treated as export of service. But here what happens is that, where is the intermediary located? India. And where their customers are located? Outside India. But the place of supply is what? India, because location of supplier will be taken as place of supply in case of banking and other financial service as per section 13 of IGST Act. So it will not qualify as export of service, but because of this there is a foreign exchange inflow. That's why they have given exemption here, that is, it is exempted. So these are the 5 points in relation to banking and other financial services. Then the next sector is healthcare services. In healthcare services, previously we had 2 exemptions that were omitted now. That's an amendment. That is cord blood banks by way of preservation of stem cells. Previously that was exempted. Now they made it taxable. Also this common biomedical waste treatment operators. So biomedical waste treatment operators will be providing, so taking medical waste and processing it, for which they collect some money. Previously it was exempted and now it is omitted. Okay, these 2 are now taxable. Only 2 exemptions are there with respect to healthcare services. That is healthcare services by a clinical establishment or authorized medical practitioner or paramedics, including ambulance services. Now, what is the meaning of a healthcare service? Healthcare services means diagnosis. Diagnosis means what? Before treatment, taking test, X-ray, scanning, etc. You can see the meaning here. Diagnosis, then treatment. So, surgery, carrying out any surgery or operation, that is treatment. Then post-treatment, that is care, keeping the patient in the observation, ICU or other care, so that for any disease, illness, injury, pregnancy, including transportation in an ambulance. So, transportation in an ambulance we have in two places. Transportation in ambulance is part of healthcare, even otherwise also it will be exempted. So, for example, a person is taken in an ambulance to a hospital, but that hospital they are not providing healthcare services. So, then even though they are not providing healthcare services, but that ambulance service will be exempted. So, but from that hospital to another hospital, so they are arranging an ambulance service and the new hospital is providing healthcare services. So, that will be also exempted. Whether ambulance service is part of healthcare or not part of healthcare, it is exempted, but ambulance service is for transportation of the patient. Okay. Then, but does not include, healthcare service does not include cosmetic surgery, plastic surgery and hair transplantation. These three are not part of healthcare services. But if these three, because these three are too much healthcare, no, so not necessary for living. Actually, is these three necessary? Otherwise, people will die? Definitely no, yaar. Otherwise, I should have died long back itself. Okay. So, cosmetic surgery, plastic surgery and hair transplantation is not connected to health of a person. Okay. So, that's why it's not a healthcare services. But if these three are carried out to restore the anatomy of body parts affected due to congenital defects. Congenital defects means what? By birth itself, some defects will be there. So, like a baby born with cleft lip, to connect that lip, broken lip, to connect that lip, they do a cosmetic surgery, that will come under healthcare services. Developmental abnormalities, there will be imbalance. So, like legs or hands imbalance or shoulder imbalance will be there. So, they will carry out the surgery. So, that is also healthcare service. Injury or trauma, a person met with a fire accident. So, plastic surgery is done on his face. Again, it is a healthcare services. Okay. That healthcare service provided in a clinical establishment, that is a hospital or a clinic where healthcare service is provided, or authorized medical practitioner. Who is authorized medical practitioner? A doctor with a requisite qualification, MBBS or above, and registered with the medical council. Then paramedics. Paramedics means nurse, lab technician, physiotherapist, they are paramedics. So, these people's services will be exempted fully. Okay. However, room charges. For room charges, there is one amendment now. That is, previously room charges, whatever may be the amount, it was exempted. But now they brought in one amendment which says that if it is ICU charges, so intensive care unit or critical intensive care unit, neonatal intensive care unit, like that ICU charges will be exempted for any amount. But other room charges, after surgery, the patient will be kept in observation for some days, normal room. So, in that normal room, it is exempted provided it does not exceed 5,000 rupees in a day. If it exceeds 5,000 rupees in a day, entirely it will be taxable. So, other room charges, if it does not exceed 5,000 per day, exempted. If it exceeds 5,000, entirely it will be taxable. Then, renting of rooms to inpatients other than above, that is, does not exceed 5,000 is exempted. Even food supplied to inpatients is also exempted. Who are inpatients? Those who are admitted into the hospital are called as inpatients, and food supplied to them is exempted. What about food supplied to outpatients, visitors, etc.? That will be taxable. Then there is a consulting doctor who will be working in a hospital as a freelancer. So, hospital collecting money from the patient, say 500 they are collecting, that is exempted. Now, that the hospital will share 300 rupees with the doctor and they retain 200 rupees. That 300 rupees given to the doctor is also exempted. So, consulting doctors to hospitals is exempted. Then, whether IVF treatment, so people who are not blessed with kids, for them IVF treatment will be done, in vitro fertilization. So, is this treatment covered under healthcare service? Yes. So, there is a disability. What is the disability? Not able to give birth to children. So, kids. So, which means that to rectify the disability only they are doing a treatment. So, it will come under healthcare service. Therefore, it is exempted. That is one amendment. Then, services provided by rehab professionals. there are some rehabilitation professionals. So these rehab professionals are not doctors but psychology experts who are working in education institutions, medical establishments and rehab centers, exempted. But if they are working in rehab centers, that rehab center should be established by government or by a trust. If it is a private rehab center, then the money earned by the rehab professionals will be taxable. So these are the services, healthcare services related. Then entry tickets, you can see in these entry tickets. So there are some entry tickets which are exempted irrespective of the ticket price. So entry to museum. So total this we need to remember related to animals 3. So what are they related to animals? Zoo, tiger reserve, wildlife sanctuary, related to animals 3. Then related to a place, museum, then national park and protected monuments. Okay, and these 2 events already completed. FIFA Women's World Cup 2022 and even AFC Women's Asia Cup, this already completed. So for that it may not be tested in exam. So just 6 points you need to remember. What are they? 3 animals related: zoo, wildlife sanctuary, tiger reserve, and 3 places, that is museum, national park, protected monuments. Then this is irrespective of the ticket price. But there are some entry tickets which are exempted if the ticket price does not exceed 500. What is that? So 4 performance related, that is dance, theatrical performance, musical performance and concert. So 4 performance related. Theatrical includes stand-up comedy, etc. So dance, music, concert, theatrical performance. Okay, and 4 events. What are they? So circus, then award function, pageant, beauty show and sporting event. 4 events and 1 place, that is planetarium. Okay, so these are the 9 entry tickets which are exempted if the ticket price does not exceed 500. So 4 performance related. What are they? Dance, music, concert, theatrical performance. 4 places or 4 events: circus, then pageant, then award function and sports event, whether it is recognized or unrecognized, and planetarium. So these are the 9 cases exempted if the ticket price does not exceed 500. Then pension services. There are a lot of banks, financial institutions and other persons who will provide pension services, but pension service provided by Atal Pension Yojana, central government pension scheme, or any state government operated pension scheme is exempted. Only 2 pension schemes are exempted. One is Atal Pension Yojana, central government. Like that, any central state government owned pension scheme also exempted. Then there are some specified organizations. So these specified organization collecting money will be exempted. They are not at all required to pay GST. So NPS trust already we discussed in life insurance itself. Okay, then SEBI previously was there, now it is omitted. So money received by SEBI, will it be chargeable to GST? Yes. Same way IRDA was there previously, now it is omitted. So money received by IRDA will be taxable. Who are the other organization? ESIC, Employee State Insurance Corporation. From whom they will receive money? So from the factories for the life insurance or medical insurance of the employees, workers who are working there. EPFO, Provident Fund Contribution, Employee Provident Fund Contribution. Then NCCCD, National Center for Cold Chain Development, for the purpose of establishing the cold chains. So they will collect some money. Then Foreign Diplomatic Mission in India, that is embassies, consulates, UN agencies like UNESCO, UNICEF, so etc. Then CMPFO, like how EPFO is Employee Provident Fund Organization, normal EPFO. CMPFO is for workers who are working in the coal mines, Coal Mine Provident Fund Organization. So these are the notified organizations you need to remember. So NPS Trust, then ESIC, then EPFO and CMPFO, Coal Mine Provident Fund Organization, then NCCCD, 6th one, Foreign Diplomatic Mission in India. These 6 organizations earning money, they are not required to pay any GST. Then charitable and religious services you can see. So there is a charitable trust under section 12AA or 12AB of Income Tax Act. So that charitable trust providing only 4 charitable activities will be exempted. What are those 4 charitable activities? Public health, Then advancement of religion, spirituality, yoga. All these Babas and Swamijis are covered here. Then educational programs to physically or mentally traumatized persons, prisoners and persons over 65 years residing in rural area. So total 4. So what is that? Public health, advancement of religion, spirituality, yoga, then educational programs to prisoners, orphans or persons over 65 years residing in rural area, and last, environmental preservation. So these are the 4 charitable activities. For that, if the trust is collecting any amount, that will be exempted. Then number 2, services by a old age home. There is a old age home. That old age home is run by central government, state government or charitable trust, and money received will be exempted if per month the amount charged does not exceed 25,000 rupees, and that too they should be admitting whom only old people aged 60 years or more. So then only that old age home money collected will be exempted. Then services by any person by way of conduct of religious ceremony. Religious ceremony means this priest, purohit, etc. who conducts the religious ceremonies and they get some money, that will be exempted. No need to pay any GST on that. Then services by special organizations for religious pilgrimage. There are only 2 pilgrimages considered as religious pilgrimage, that is Kailash, Manasarovar and Hajj, and for that if there is a special organization which is providing religious pilgrimage, the money collected by them is exempted. So these are charitable and religious services. Then next we have education services which are exempted. So look into this point number 5 first. Any service provided by an educational institution to its students, faculty and staff is exempted. So what is an educational institution? Educational institution is divided into 3. Category 1 educational institution is up to 12th standard, and category 2 education for obtaining a qualification recognized by law, means college and all will come under that. Approved vocational education, that is the skill based centers, polytechnic colleges, ITI, industrial training institutes, industrial training centers will come under approved vocational education. So these 3 education institutions, any service provided by them to students, faculty and staff is exempted. That need not be related to education. Even if they provide food, if they provide hostel facility, everything will be exempted. Now next one, number 6 is services provided to education institution. In this case, so 3 activities. So you can see this: transportation, catering, security and housekeeping to category 1 institution is exempted. So this is service provided by education institution or to education institution? To education institution. Means here education institution is recipient. So what is the first point? Transportation, catering, security, housekeeping. To which category institution? Category 1 means education institution up to 12th standard. Then second point is conduct of examination or admission to that education institution. All 3 category institutions it is exempted. And third point is online periodicals and journals only for category 2 institution will be exempted. So 3 points you need to remember: transportation, catering, security, housekeeping. Cat 2 category 1 exempted. Admission to or conduct of examination, all 3 categories exempted. Online periodicals and journals only for category 2 will be exempted. Now what if they conduct an entrance examination? That educational institution conduct an entrance examination and collect some amount in the form of entrance exam fee. Is it taxable or exempted? Exempted separately. Even though they are not students yet, they will become students in future, but even then it will be exempted. And by whatever name fee collected, it can be eligibility certificate fee or transfer certificate fee or any de novo fee, etc. So for all names it is exempted. So application fee for entrance, fee charged for issuing eligibility certificate or fee collected for issuing migration certificate, all these are exempted. So by whatever name called, if they collect money from the students, faculty, staff, it is exempted. Then next one, second point, there is DDUGKY, Deen Dayal Upadhyaya Grameen Kausalya Yojana. Like that one scheme is there. Under that scheme, government scheme, if any person is providing training in rural area, okay, providing training in rural area, so with respect to skill based training like tailoring courses or purse making like wallet making or paper cup making, paper bags making, etc. So for that these training providers will receive some money, that is exempted. Then National Skill Development Corporation, which is set up by central government, sector skill council which is approved by NSDC, and assessment agent or training partner. If these people provide any skill development course, so the course offered by them will be exempted. Then next, training in recreational activities relating to arts or culture, that should be by an individual, that should be by an individual. So that is, what are these coming? So dance classes, music classes, or any culture related, that is language or Vedas, Upanishads, etc. All these will be exempted. Training in this will be exempted, but the training provider should be individual. What if there is a dance school? That dance school is operated by a firm and they are collecting money, fees from the students. Taxable or exempted? Taxable. Only if the dance school is run by an individual, then it will be exempted. Then training in recreational activities relating to sports. So sports, it should be registered as a trust. So there is a cricket academy. That cricket academy is a private one, not owned by a trust. Now fee collected by them for teaching kids the cricket. Now whatever money collected by them will be taxable. What if this cricket academy is registered as a trust? Then the money collected by them will be exempted. Then services by assessment bodies under skill development initiative scheme. Skill development initiative scheme means wherein government will invite some people to review the curriculum from the industry. They will invite people to review the curriculum. For reviewing the curriculum, they will be paying some charges. So that charges collected by them is exempted. So these are the 9 points that we have with respect to education related services. And CBIC circular is there related to this one point. There is Anganwadi schools. Anganwadi schools means these are basically providing daycare. So, but that is coming under category 1 education institution. Now, they provide food to the kids. Okay, afternoon food and all they will be providing to the kids. Now they receive catering service. Whether catering service provided to Anganwadi schools is taxable or exempted? Exempted, because we have seen catering services provided to category 1 education institution is exempted. So therefore supply of food to Anganwadi schools is also exempted. Then there are some examination boards. Their job is only to conduct the examination and give the result. Based on that result, the students can join in the colleges based on counseling. So this examination board will not give any seat, like NEET exam, they will not give any seats, they will just give the ranks. Now whether these examination boards are treated as educational institutions, because entrance exam fee collected by educational institution is exempted. Is this examination board considered as educational institution? Yes, and the money collected by them will be exempted. These are the two circulars related to education services. Then we have services provided by government, already we completed. Specific exemptions, general exemptions, etc. Now this is services provided to government. In this there is an amendment. So government is required to do certain activities as per constitution. For example, they need to do this solid waste management, that is garbage. They need to clear the garbage. That is a work of government. But will they do? No. They will outsource it to one organization. For example, in Chennai they have outsourced it to Urbaser, like that one company. So they have outsourced it to that company. That company will be providing the solid waste management service to the government, for which government will pay some money. That is exempted. First, it should be a function which government should do as per constitution, and that work they outsourced it to one other person and they are receiving money for that, that will be exempted. What if it is a composite supply of goods and services? For example, laying down road. In laying down road there is goods element as well as service element. Now in that case also it is exempted, provided the value of goods does not exceed 25% of the total. You can see. So services provided by any person to government. Previously government authority and government entity was there, that is omitted. Only to government this exemption will be available. With respect to functions entrusted under 243G or H of the Constitution, pure services are exempted. Even composite supply of goods or services also exempted, where the value of goods does not exceed 25% of the total. Then see this, generally in ration shops they will be distributing wheat flour, not in south, in north they will be giving wheat flour, wheat, atta they will be giving in the ration shops. So now government is procuring wheat flour from one person. So that person is purchasing the wheat, grinding it into wheat flour and supplying it to government and collecting some money. What is the goods element? Definitely more than 25%. So grinding is service element here. Wheat is goods element. Definitely the goods element is more than 25%. Therefore, this exemption is not applicable. Then that is the circular. Composite supply of service by way of milling of wheat into wheat flour along with fortification by any person to state government for distribution of that wheat flour under public distribution system is not eligible for exemption. Why not eligible for exemption? As value of goods involved is greater than 25%. Then any training program for which now we are providing training program to government, means government is sponsoring the training program. We are providing the training program to the students. For that, fees is paid by the government. It will be exempted. The training program will be exempted, provided how much expenditure should be borne by the government? At least 75% of the expenditure. For example, there is one coaching center which is providing NEET coaching to below poverty line students, for which state government has given 80% of the fees and 20% is given by the students. So there is a scheme like fees reimbursement schemes and all, and fees will be borne by government and also a lot of concepts are there. Okay. Now in that case 80% paid by state government, 20% paid by the student. So now whether it will be taxable or exempted? Exempted. What is exempted? 80% collected from government is exempted or entirely it is exempted? Entirely. The training program itself is exempted. What if government has given 70% and students have given 30%? Then entire training program will be taxable, because how much government should pay? More than or equals to 75%, then only the training program will be exempted. That is this point. So this is about services provided to government. Okay. So with this we will stop for today, and remaining we have renting, sports related and transportation and other aspects that we will complete today, tomorrow, and even IGST Act composition scheme. I will just give you the agenda for tomorrow. So tomorrow we will be completing this module 1, hardly it will take 1 hour, 1.5 hours, and then we will be starting with this value of supply, a very important area, because we completed majorly here RCM exemptions and all. Then value of supply and input tax credit we will complete, and thereafter I will be discussing about some other concepts, offences and penalties, refunds, etc. And tomorrow it will be fully reserved for GST, and day after tomorrow I will discuss customs, valuation under customs, duty drawback, baggage. These are all some areas which repeatedly they will be asking, including FTP, export promotion schemes. If time permits, I will discuss other areas. Otherwise, you can carry on with the notes that I have provided. But majorly, I will try to complete. Okay. Fine. Thank you. And tomorrow you tell me what is the timing which is convenient for you, so that I will announce now itself. So live who are watching in YouTube, they can come tomorrow also at the same time. 7 to 1:30 or normal as usual, 10 as usual. 9 o'clock can we have? 9 is okay, na? Fine. So we will have at 9 o'clock itself, and evening till the time maximum we can do. So 5:30 or 6 o'clock we will go up to that. Okay. Thank you. We will meet tomorrow. Take care. Thank you. And hope you find this today's session useful. Yes. Okay. Thank you.